throat hole is hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Wednesday to you both.
Hello.
Hola.
Hola.
How's everybody this morning?
Good.
Good. Oh. Today's D-Day.
Why is today D-Day?
Earnings D-Day, you mean?
Earnings D-Day. You got sevens, FOMC. It's the moment we've been waiting for. It's Super Bowl.
You're a
It's the
Super
Bowl
Bowl
of earnings.
The
yes.
Trader Super Bowl.
Right.
Oh, I thought you said you were a Super Bowl.
No.
No. I mean, I'm always leaning long.
I just misheard you. That's all.
Like normal, we got 50% of everything right. At least I did yesterday. Market going nowhere yesterday.
Yeah.
I think we both were kind of saying that was going to happen. But I thought oil would be weaker, and oil went higher. Oil 103, trade up to 108, and the market doesn't care.
The volatility crush was the weirdest part to me.
With oil going higher.
Vol futures are at 1975. They ticked below 20.
Oh, /VX. Oh, yes.
Well, I mean, oil volatility.
It was weak all day long, too.
Nowhere.
Yeah.
You guys are gonna blow your load early. Like it's only 7:01. Good Lord!
Well,
like
you
have 3 hours.
It's
to
a problem
fill.
as you get older. I'm not gonna lie.
You have 3 hours. Like, pace yourself. Like if you want to come out of the gate hot, I'm not gonna stop you.
Hey.
But I'm just gonna be here unsatisfied. But that's fine.
I got stamina.
I don't.
Okay, it's okay.
Just like wow. Just
Welcome to my world.
Wow, oil volatility. Okay, wow. Just
early,
7:02.
leave them unhappy. Perfect.
All right, go ahead. I'm not gonna hold you. I'm not gonna hold you. Go ahead.
Oh, too funny. That's very good.
See, and now you're tired.
Now I'm tired. Now I need a nap.
Now you're tired. You're all
Speaking of
tired out.
nap, again, these games, they're hockey games. On too late. Nobody wants to win or close anybody out. All the games are now 3-2. Best of 7. They need.
Or you think they don't want to close the game out?
No, each team last night had an opportunity to
Yeah.
close out the other team and couldn't. I think Buffalo
Yeah.
actually went into overtime, and they couldn't close them out. I'm just saying, if you got somebody on the ropes there, you're up 3-1. You need one more game to win, best of 7. You got to close them out.
Right.
And I'm sorry, how long have you played professional hockey for?
Just like here, I play a doctor on TV, but I'm not a real doctor. I claim to know everything, but I'm not a hockey guy. But anyway,
I'm sure they would win if they could. I'm sure they're trying.
Of course they are. Yeah, supposed to be professionals, though. Get this done. Anyway,
That's why you pop the magnesium and just.
Oh, you doing that really? Magnesium is a work.
I do it too. Yeah,
helps.
glycinate.
Really?
Yeah.
Yeah.
I could still fall asleep on a picket fence. That's not my.
Me too.
Oh,
But it
okay.
just it helps. I mean, it puts you to sleep. Gives you
Interesting.
Get that good HRV.
Yeah.
Whatever, all your fitness trackers.
I don't do that. I don't do that anymore.
You had an Aura ring.
I know. I didn't like.
So you just threw $500 in the trash?
I did it for 6 months, maybe.
You still paying for this?
What'd you find
Oh
out?
no, I canceled it.
Okay.
I don't do that.
Okay.
I'm not in that boat.
Okay.
What did you find out from the Aura ring, by the way? What did you find out?
I don't.
Sleep score is what? 80?
I don't get that great of sleep. I probably need.
Have you
more
taken care of
activity.
your whole snoring thing and everything else like
Yeah,
that?
we're working on it. It's fine.
You gotta get a CPAP. That's really dangerous. It's disruptive if you have sleep apnea.
Do you have sleep
I don't know
apnea?
if I can. It's mild.
Wow.
It's dangerous.
You gotta get that from your mother. I don't have that. I'm telling you right now.
No, you know what it is? It's a big tongue.
Well, no. What is this show
Just
today?
saying, that's what they say.
Gross.
They say it's not.
Gross.
Because I got a surgery on my nose.
La lingua. Yeah.
It's the big tongue.
Okay.
Too big for my mouth.
You're in the right business.
I didn't want to go. I'm sorry.
You should go to a doctor, and I'm just gonna leave it at that. Hey, did you have pickleball last night, Nikki?
No, not until tomorrow.
Oh, okay.
Oh yeah.
But today's
2 days a
Wednesday.
week.
Oh, okay.
I've been to 2, 3. I'm getting back.
I thought it was Tuesday, Thursday.
Yeah. Sometimes.
Okay.
Depends on
Keep them on their toes, Vanetta. That's
Yeah.
Yeah.
All right.
Yeah.
You can't dominate too much.
Correct.
Right,
Correct. I gotta
right.
give everybody a breather
That's fair.
every once in a while.
That's fair.
Yeah. So. But
Must be fun to be you.
oh, thanks. Thanks.
Shenanigans. How would you? So you just watch hockey last night? That was the extent of your evening, your activities.
Do you really care? Do you really want to know? Because if you really want to know, I had a cancerous thing moved from my nose. So
oh no!
Yeah. See, I don't want to bring everybody.
He's getting old.
I don't want to bring everybody down there.
It was cancerous.
They think they're gonna check it out 5 to 7
I'm so
days.
sorry.
It's squamous or something like that.
Oh, squamous, yeah.
Yeah. Pretty common, I guess, in old fakaktas like myself. But
Gotta wear sunscreen.
I do, for the most part. I try. But,
Either you do or you don't.
Well.
You put it on your face and you put like enough. Make sure you're putting enough on your face, and you got to reapply it.
I know. I know.
God, you're gonna.
Or you just wear like a sun hat, like a hoodie, or like one of those, like a buff.
Yeah. But,
I mean, once upon a time, fit, strong, hair in the pool. Now you're gonna be like the white zinc shirt guy in the pool.
There's no shade. There's no shame in the shade game, man.
Things have changed.
Boy, how the mighty have fallen. I mean, at one time I had the album on my chest with tinfoil, trying to get a tan. Now,
okay, well that was a choice, honey.
with oil.
Did you ever go Speedo?
No, I never. I didn't have the.
I don't want to be here.
I didn't have the equipment for Speedo. I didn't want to embarrass myself. Sorry. Sorry, no.
I thought that
I wish I had
hate everything about this.
But I didn't.
Hey, man, Speedo is...
We have big tongues.
Yeah, that's right. We make up for it in other places.
All right.
I'm sorry.
Let's turn the ship around.
I'm sorry, Laura. You guys don't... You shouldn't be subject to this.
Jenny yesterday got to ring the closing bell at the SIBO for the love of God. Oh, they just eye bleach.
Closing bell,
there they are. The lovely ladies got to ring the bell. It was cool. I think they are streaming it now every day on CNBC.
Nice. What did you say? Big bell?
I was like, it's a big bell. I mean, I didn't realize that it was like, the big
Yeah,
bell.
it's substantial, and they give you like a run through on how to do it. So I guess you have to directionally really get in there like a full motion, or else the clapper won't hit the edge of the bell. So some people want to go in like a circular motion. Can't do that. You got to do.
It's funny that you mentioned that, because I've watched other videos. Mike and I get great joy out of the other videos like this from the SIBO, where they're really making it.
Yeah.
And we're like, why are they doing it?
Yeah.
Like that?
Because they could wear Speedos, probably.
That's true.
I don't know.
So that makes sense now. That clears it up.
So yeah, we got a lot of the Tasty Live crew. We got from left to right there. We got Paul, we have Sahil, we have me, we have Beth, we have Liz, Jenny, God, there's Garrett, and Errol. We all made it down there.
Cool.
I thought I was just down there to video.
Up and comers, we call those people there. Very nice.
Well, I will also say this, Liz and Jenny, the very nice gentlemen in the pit, were taking bets on how many times the bell would be rung.
Sure.
Oh, nice.
So, because they split it between each. Well, right, and then
how many was it?
I think Liz and Jenny were they're trying to do 4 each, or this 4? Is this 4 or 8?
This is 4.
Right. Okay. Whatever.
3.
So so
you
they
go
were
sideways. Then you're all the way up at 8 already.
right. They were saying 8.
Right.
So 4 each.
Right.
So
Well, this would be 9, 8.
Right.
Right.
Right. So Liz was leaning over the railing. She was going like this to the guy.
Trying to give him.
Right. Because
tip.
what the over under for, I don't know what the official number of rings was, but the ladies did
that's
a
great.
wonderful job.
Got it.
Very cool.
Yeah, it's cool. They have a cool setup down there. It's always nice. Wonderful people, super personable.
You wouldn't think it, right? Because they're supposed to be mean and angry market makers.
And I left out the best part.
What?
Guess who we met? We met Frankie's nephew.
Oh, yeah.
On the floor. Oh yeah. Yeah.
Yes.
Frankie sent me a picture with I think Liz and Jenny. And
Yeah, Beth took a photo with him. So
Yeah.
Because he introduced himself. He's like, "Hey, I'm Frankie's nephew," and I'm like, "I'm sorry."
Yeah.
No, he's super nice. Everyone's super nice. So there you go. Some more photos there. So
Of course. Yeah. Good
all
stuff.
right, did I turn the ship around?
You did.
Yay!
Much better.
Yay! Much.
Is everybody
much better.
standing on a box in this picture except you?
Okay, I feel taller in my mind. I don't know. I don't know what happened there.
Good stuff.
Yeah, it's cool.
Very cool. Yeah, got the logo, Listen Jenny logo up there. But hey, we got a great show for you today. A lot of really good stuff as the bats couldn't even help themselves. The market is moving. It is, as Nikki said, is the Super Bowl of the week. Traders are on tenterhooks waiting for a whole array of data and meetings and earnings and a bunch of other things. But in the meantime, in a between time, we have a great show for you before all of that happens. At the top of the 8 o'clock hour, we have an options jive. How to handle a whipsaw.
It's a good one. I think we've all experienced such a thing in the last couple months here. So we're going to talk about.
They seem like month-long whipsaws, though, right? I mean, we used to get them daily,
Yeah.
whipsaws, or every couple of days.
Now it's a
with these
continuation.
V-bottoms, yes.
Yes. So we're going to talk about like probability of touch. We're going to talk about rolling, just managing through these kind of situations, the whole gambit.
Okay.
Good.
That will be good. Then at 8:40, it's Assume the Position Wednesday. So we got What's Your Assumption? This is a viewer participation segment that we do on the reg. Viewers write in with an underlying, but they have a directional bias. The bats are going to put on viewer submitted trades. That's going to be at 8:40. Then at 9 o'clock, the man, the myth, the legend himself, Thomas Preston, in the house with a little tasty extra and cherry picks. Do you know what he is spotlighting,
I'm
highlighting?
not sure, but I'm still holding the Macy's puts from last time. Short puts. They're slow.
From TP?
Yes.
Oh.
But he always brings a couple trade ideas.
Yeah.
Relevant.
Yeah.
Yeah. He's always good for a ripping good yarn, I guess.
Oh, wow.
What, like
He's
a
a wealth
story.
of
Like a story,
information.
yeah.
Yeah,
Like
read
a ripping good
between
yarn. Yes.
That's a good one.
Yeah, that's a good one. Okay. You want to be really impressed. He's quite the raconteur. No? Okay.
It's a
Live from the trade desk, we got Quentin in the house. Q, counting down the top trending tickers over at Tasty Trade, and Mr. Ryan Grace on the crypto side of things, apropos with a couple of earnings from last night. So we'll talk to Ryan about some crypto stuff. And then Liz and Jenny from their CNBC debut will be live from the SIBO today, again from the floor at around 10 a.m. So tune in for that because it's always electric when the ladies are live.
Always.
Thought I wasn't
Now
going
it's,
to do it.
now
Always
it's
a good
everyday
time.
electricity.
Yeah, everyday electricity.
It'd be beautiful.
Beautiful. And Liz and Jenny will also be doing last call today. So
Beautiful.
Oh,
stay tuned for that.
double duty.
2:30. Hey, you guys, in the meantime, in a between time, you want your daily dose? All right, hit me with my theme music. Let's go.
Our leading story,
today's
breaking
headlines.
news,
Breaking news.
across the wire. Our leading story, top story, just in.
In today's headlines,
This just in.
Breaking news.
All right, everybody. Today's a wonderful Wednesday. It's April the 29th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. I got to get my city sticker renewed. Crap.
Ooh, do you
It
have to
expires in
pay up
April.
and go to like a?
I'll do 2 years. I do like 2 years. Yeah. Crap.
Yeah.
Hey, you want to spot me some cash?
He's flush.
I pay for my city sticker. Anyway, this is the part of the show we like to call the Daily Dose. We talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
Earnings on deck for tonight.
This is the Super Bowl we were talking about a little bit this morning. I mean, in no particular order, but you got Qualcomm, you got Meta, Microsoft, Amazon, Google, CMG, Carvana, Lilly, a plethora of others, but
Why did they all pick the same day?
to hide
Yeah.
or numbers
How
probably.
you get it all over with?
I know. I guess
Yeah,
so.
Rip
Yeah.
the Band-Aid off.
Yeah.
Jinx.
Hey. You owe him a Coke. Well, hey, getting to the first headline of the day. Here's everything to expect when the Fed issues its latest interest rate decision today. It could be Jerome Powell's final meeting as Fed chair,
R.I.P.
as he and his fellow policymakers are likely to continue their cautious approach as policy to policy as questions linger over inflation and the labor market. The interest rate setting FOMC is a virtual lock to keep its benchmark short-term rates steady, Eddie. What are you anticipating, and what is the market anticipating for a move today?
Bonds 113.12 at the lower end of the range. Remember, if bonds go lower, rates typically go higher. I mean, in this area, they're probably going to be unchanged. I mean, that's what the Fed Watch tool says, right?
Yeah, we have nothing in terms of rate changes priced in for the foreseeable future, at least through the end of this year.
Right.
Into next year, like at the end of next year, there's a chance. I mean, these are so far off that things can change. But through this year, there's really no rate cuts projected. You have bonds at 113.13. They've been between 113 and 114 for the last month or so. So it seems like everything's kind of baked in here. In terms of volatility, and I talked about it with Chris a little bit on the last call yesterday, it seems like the bigger event is the big mega cap earnings. And you'll see if you look at like the ES or even SPX volatility day to day through the end of the week, you have heightened volatility today for 0 day, but you have a little bit more pumped into tomorrow because you have kind of that event after the close.
Sure.
So
that makes sense.
It seems like the bigger thing today is the earnings.
One thing just of note, because it is still an unknown, because again, last week we didn't know that Kevin Warsh's confirmation would move ahead. Like, we just didn't know that last week. But then the other question is Jerome Powell's term ends in the middle of next month, in the middle of May. But he does have the option to stay on the board, and he has expressed that he could exercise that option if he feels that the independence of the Fed will continue to be threatened. And so that's still just an unknown that could be out there. So
I don't know if it's, I mean, from what everybody's told me and what I've read, they usually don't.
Right.
It's in the past.
Right. He has the option. So it's not like illegal. But
I don't know. I mean, it's almost like, I think, now I'm going to talk about something I really don't know anything about.
But it's interesting because Trump appointed Powell.
Yeah.
So Powell can do what he wants. So Warsh can do what after he gets confirmed, he can
There's
do what he
other
wants.
countries that leverage past presidents and they advise them, the new president, and stay on kind of council and stuff like that.
Sure.
I think it's a great idea. I mean, I don't understand why somebody who's done something for so many years, you wouldn't at least want their input.
Yeah.
For sure. So, I don't know.
See what happens.
Mm-hmm.
Jamie Dimon is warning of some kind of bond crisis ahead as global debt risks build. Jamie Dimon, the big boss of the biggest bank, warned a bond crisis is likely, saying rising global government debt, including the U.S.'s, could lead to some kind of bond crisis. Risks are building across multiple fronts. Ruh-roh.
Yeah, I think this is another headline. Like, he doesn't like crypto, and so he get crypto a little bit lower than buys it. I don't know.
Well, Ray Dalio owes me, a couple handles on my gold long.
Yeah.
Did you call him? Did you tweet at him?
I might today. Hey, Ray, you owe me a couple dollars.
Back near its lows from yesterday, right? Yesterday's low is around 45.70 or 45.80.
Yeah.
Right now. So you're right there.
Also, what is this photo? Jamie, are you running for office? Like, it's like, what are you doing?
Really
girl,
an American Eagle coming on the other side.
What are you doing?
Tree, something.
Just casually, just looking off into the distance that. What are you? Okay, it's a vibe. Hey, the UAE is like, hey, this has been fun. We're gonna head out. They are leaving OPEC. In a blow to the global oil cartel. But hey, now's the time to do it. Like, if you're going to be messy, be messy.
Yeah.
But the UAE, this is true. So I didn't know this. They spent like $150 billion, building up their oil infrastructure and resources and stuff. And they were very unhappy with the output levels that OPEC was setting. And so they've been unhappy for a long time. And they're also unhappy with the fact that Iran, who's also a part of OPEC, has sole control over the Strait of Hormuz. So they're like, look, we spent all this money. We're going to go to the free market. We're going to take our talents to Cleveland. I don't know. And we're going to see what we can get for our oil. So Abu Dhabi.
I think that's why the market yesterday didn't really care. From the price action, really didn't care. I mean, I know oil's higher this morning. Maybe it's because of some of the actions that took place last night in the Middle East, or maybe it's because of this. I don't know. But just trying to go high level, thinking about it, I mean, I mean, I think OPEC was started in the 60s sometime. So, I mean, it's been around for a significant amount of time. But every time...
But Saudi Arabia runs it. Like, she is that girl. Like, she runs it. And so the UAE was tired of it. And
but every time they would come out with their numbers, some other country would say, I'm going to do more. You know, like nobody listens to anybody. So
long term, this is good for oil prices because it does mean more supply.
Consumer, I would think.
But this is long because everything's broken right now. So you're not going to see any benefit.
But you're right. If you're going to make a move or break up, this is probably
right. Yeah, be messy before summer, girl.
Yeah. Right.
Nikki, what are you doing in USO?
USO, I've got a million positions on. I'm selling upside volatility. I'm long volatility in the back. Like 50 days out ish.
And it's been going lower, right? I mean,
USO has been going higher.
No, volatility.
Volatility has been going lower, yes.
On the upside, which is unusual in commodities.
Yes.
So usually goes the opposite direction, higher when it goes higher. Go ahead.
Yes. And then my butterflies in CL are right in the sweet spot. We're a little early, but anywhere between like 100 and 106 is like a perfect spot for me. So this is right where I'd like it.
Nice.
Yeah.
For my positions,
Perfect.
not for my wallet, because I do need to fill up my tank of gas soon.
How was your XOM?
XOM, I'm out of.
Okay.
We rode them a little bit higher. It's been a good trade. I mean,
Up $2.
That's been a cheaper way to participate in oil, in the moves in oil. So you could do like diagonal spreads in there for $4 or $5, pretty cheap.
And XOM has earnings coming May 1.
Okay. Mayday. Hey, bunch of earnings from last night, so let's get right to it. Robinhood reported earnings for the first quarter right after the bell, and total net revenue increased 15% year over year to $1.07 billion. But the big matzo ball out there was crypto. Crypto transaction revenue was down 47% year over year and stood at $134 million. So Robinhood also failed to meet Wall Street estimates as analysts expected it to generate 39 cents in EPS on 1.1 in revenue.
Cut in half in a short period of time from October to now. I think in October it was $150. This morning it's going to be down $10, $72. That's a big move.
Big move.
For a $80, what was an $80 stock, 10% plus 10% move, now 12% move.
Yeah. It is not all good in the hood.
Not all good in the hood right now.
And
I might look for a post-earnings trade in there today.
Yeah.
See how volatility is.
I've got a pretty decent position because I'm long the stock, but I'm short calls and I have the put diagonal spreads too. So it should be a nice little open here, right around here. But I will say it's more of a testament to the crypto space right now because it kind of tells exactly what we've been watching over the last 4 or 5 months. Like crypto just is not in vogue right now.
Right.
I mean, you're not seeing the big price moves.
It's not a risk on. It's not a risk
off. It's just not
price.
It's just not in play right now, and that is certainly reflected in those numbers.
Yeah. Agree.
Seagate. Let me start over. They forecasted fourth quarter revenue and profit above Wall Street expectations, betting on strong demand for their data storage hardware. Shares of the company surged around 16% in extended trading. That also fueled a rise in rival like Western Digital that was up 11%. SanDisk was up 4%. Micron up 3.5%. But STX again gave a fourth quarter forecast of $3.45 billion, which was pretty good.
It's up $100.
Yeah.
From
Hope you enjoyed the one-day dip.
From 580 or so to 680, approximately. I think it's 670 right now. It was 690.
Street loves it.
Yeah. There was a fond memory of the Seagate 1 terabyte external hard drive. It was about this big. Mm-hmm. You can get them, they're about this big.
Sure.
But this one was a brick. It was the size of a brick. And I remember buying that back in like the Best Buy days, or like maybe
When they were brick and mortar stores.
Best Buy's still around.
Well, when I worked there.
I'm so sorry. I didn't know this was to your personal lore.
Yeah, so I got a big discount on it because we used to pay 5% above the invoice price, which they don't do anymore. So like I was hawking TVs to family members.
Sure.
It was just great.
That is your heritage, to be
Yes,
fair.
that was when
so.
LCD TVs, like when they first came out, and a 20-inch TV was like $3,000.
Right.
And I was getting them at like $800.
What?
I was slinging them all over Glencoe. But the Seagate 1 terabyte, that held so much downloaded pirated music from LimeWire and Aries that was just destroying my parents' computer. So
What a time to be alive.
I remember
You never apologize.
I remember going to that computer, plugging it in, downloading, a couple of
LimeWire.
albums there, just destroying the computer, and then just plugging it, taking it out and being on my way. It was great.
Did you trade Seagate?
I did not.
Okay.
I did do a somewhat sympathy play in Micron. I put on a butterfly in the 2-day on the upside here, the 525, 550, 575, which
And how is that this morning?
MU
Should be
up
nice.
$20 or so.
they're all up. They're all up.
Yeah, MU
These
and
guys are
up in
printing money.
sympathy.
Okay.
Yeah.
It too is making new highs.
Unbelievable.
Weird market, man. We're just a weird market.
Well, I'm not done because shares of Bloom Energy rallied more
God.
than 12% in after-hours trading as the alternative energy company touted an expanded AI-related partnership with Oracle, and they also stated that their quarterly sales more than doubled year over year. What did you do in BE?
Doubled year over year.
position.
The stock's doubled since April 1st.
Okay.
Yeah.
I mean, it's doubled this month. It was $125 on April Fool's
Yeah.
day. And now it's going to be, if it opens here, $260.
Unbelievable.
America.
America, that's right.
Yeah, I'm gonna have a problem child.
And Bloom Energy?
Bloom Energy, I might have to hold this for the rest of my life.
Okay.
You got some.
I might have to name my child Bloom to reverse.
Oh, I love that. I love that. Little
Something
baby
you'd like
girl
to tell the
Bloom. Baby girl Bloom. Bloom Batista. Love
not
that.
bad, not
I
bad.
love that.
Yeah.
For a girl.
Yeah, you called her Bloomy.
Yeah.
Oh, so
Not to be
cute.
mistaken with Bloomers.
I'm gonna buy her
Those
headbands.
Blommers.
Bloomers chocolate.
I'm gonna buy her headbands. Anyway,
It's gone now.
Yeah, it's condos now, isn't it? Right? Isn't it?
I think they're gonna do something like
I did miss how the city would just smell like chocolate.
that.
It
I
was
used to live
great.
right across from there.
Yeah.
Yeah.
It's just stunk like chocolate all day.
Oh my
Yeah.
god.
It was wild.
Yeah.
I'm not done with earnings. There's so many.
Sorry.
Starbucks reported their second straight quarter of traffic growth on Tuesday. The coffee chain said they were raising its full year outlook for comparable sales. So that's pretty good. Starbucks brought in revenue $9.53 billion versus $9.16 expected. Hey. What are you doing in the books?
I don't have a position. Stock's at 100 here.
It's up $4, I think,
yeah.
right? Starbucks.
Yeah, near the higher end of where it's been trading. I mean, it's
101.
been
Yeah, it's always like $95, $100. Like,
yeah. So to go that route, it's not one of the premier trading vehicles
Sure.
of the stock market, but good. I mean, good move.
Yeah. I mean, good for coffee, I guess.
And the celebratory anniversary of Dr. Jim
Aw.
every month. His
Oh,
month
that's
anniversary
nice. That's
with his wife April. How do I know this? Okay. Still not done with earnings. Visa beat estimates on Wall Street profit on Tuesday as the world's largest payment processor benefited from a steady rise in payment volumes. Despite ongoing macroeconomic uncertainty, shares of Visa are up 6% in extended trading. What say you in Visa?
Yeah, Visa catching itself a little bit of a bid. I mean, it had been sliding all year long until early in April, where it's caught a little bit of a bid. It made a low under 300. It's 320. I'll say 29. Actually, it's 327. But up $20 here would be about as high as it's been since the beginning of the year. So it's catching a little bit of a bid.
Data processing revenue came in at $5.54 billion, up 18% from a year ago. So
Yeah, I mean, the stock's been on its butt in the last 6 months or so.
Yeah,
Nice little bounce.
It doesn't have the greatest markets.
No.
in there. It's
Volatility relatively low.
yeah. Ivy Rank was good for earnings, but I mean that's about it.
Yeah.
okay. In other news, getting to some other general tech news, the European Union plans to turn the focus of its landmark rules curbing the power of big tech to cloud and AI services, aiming to promote fairer competition after seeing positive results in other digital areas. The EU's Digital Markets Act currently targets Google, Amazon, Apple, Booking, ByteDance, and Meta, and Microsoft. All those companies have earnings today, imposing obligations on so-called gatekeepers to prevent them from abusing their market dominance.
Ooh.
What is your overall strategy going into this mess of earnings tonight?
I have long delta in Microsoft and Meta. Google, I don't think we've traded Google. I don't think I have anything in Google. I don't have anything in Google. Amazon, I think I have a little bit of long delta, but it's like neutral to long. I feel like a lot of them have very high volatility, and thus, if they go inside in either direction, that would kind of be painful for speculator types that are like looking for tail events. I think that's kind of what is going to happen, but I don't know. Some of these earnings, like your Blooms, your Hoods, your Seagates, I mean, these have been just crazy moves. Huge moves.
Yeah. Microsoft has the highest IV rank of all of them, over 100, so it's about as high as it's been.
Yeah.
But remember, it had been as low. It was one of the lowest ones, so it's coming off of lows.
Yeah.
Now
that's the one that I think has the most upside tail risk.
Microsoft?
It's probably the one
that's why volatility is so high there.
Yeah.
I think people are starting to be like
Yeah.
speculating on that upside there.
Yeah.
Pat, are you going to trade any of the big tech names for earnings? Or I know you're not
If I show intestinal fortitude, I will not. If I show weakness, I probably will. For option trades today, I mean, my son got me into SMH. I'm not even sure how I feel about that yesterday, but we'll see how it goes.
Okay.
If it works out, it's my idea. If it doesn't work out, it's his idea.
Apple, a new report from Bloomberg gives us an idea of what to expect from Apple's iOS 27's photo editing features. Apple is said to be planning a major overhaul of this photo app experience, leaning heavily on AI for 3 big new features. Please behave yourself when I tell you that the features are called extend, enhance, and reframe. Stop it. The tools together with AI the cleanup tool can now unleash new levels of Apple intelligence. You can zoom out from a photo and add details beyond the frame. You can enhance to improve color, lighting, or reframe. You can reframe the spatial way that the photo is shot. So
I feel like there's a new Apple news-driven move every single day for the last 2 weeks. You had Tim Cook stepping down. You had some of the AI stuff. You have the foldable phone, the supply constraints from China, this and that. It's like a new thing every single day, and the stock's gone kind of nowhere. Like one day it's up $4, the next day it's up or down $7.
Going the opposite of the overall market too.
Yes.
It seems like the correlation in Apple's 27 now. I mean, if you didn't know that, and I said Apple, it's everywhere in every ETF. Everything involves around Apple and these ETFs that track the market. You would think it would have a better positive correlation to the market. It basically has no correlation for the market. Yesterday it was up, the market was down. Day before it was down, the market. I mean, it's Apple is its own animal.
When are Apple's earnings?
Earnings coming after the close tomorrow. So
tomorrow,
okay. One more day.
Yeah. So it's not caught up in today's shenanigans.
No, it's going to be its own big shot.
It's going to be its own big shot. What are you going to do in Apple, do you think, Nikki?
I had an upside trade yesterday that I took off into the little bit of a down move. I had a diagonal spread that ended up working out. So I'm fresh and clean for tomorrow.
Oh, okay.
Yeah, so we'll see where we're at. I mean, you got the markets moving a little bit right now. Oil up another $1 here, 104 and change.
Yeah, trading near its highs.
Yeah. So we'll see. We'll see what happens today.
Oh, that's no good.
Yeah.
Snapchat announced yesterday that it's rolling out AI-sponsored snaps, which will allow users to interact directly with brands' AI agents. I hate everything about this. Sponsored snaps are the ads that are placed directly into the app's main chat tab. Until now, users couldn't interact with the ads, but now with the launch of AI-sponsored ads, you can do things like ask questions and get recommendations.
It's just another way to get in my wallet through my kid, through my wife, through everybody else. It's not my fault.
I will say I closed my snap position. I just sold out of the shares. I think I sold the 6 strike puts for 50 cents.
Yesterday?
No, like
No,
6
for like
months
6.
ago.
Oh, okay. So
And I've sold calls against it, and I've done call ratio spreads. I closed it at like $6. I think I made probably like $100 on that trade over 6 months.
Great learning experience for you.
What's the experience? What's the,
You
what's
made
the
$100.
lesson?
Perseverance.
Yes.
Perseverance.
I'm just happy that it's gone. Like the line item is gone from my
$6 stock, still a $6 stock, hasn't
Yeah.
moved actually a couple pennies below.
$10 billion company though.
Yeah, $10 billion company.
Not a small small stock
Stock
price,
price.
not necessarily small company.
Yeah, yeah.
pretty good.
Mm-hmm.
Yes.
When are Snap's earnings? Because sometimes Snap moves when Meta moves.
May 6th.
Sometimes. Okay, so
Yeah.
not like a week or so.
Yeah.
Subway fans will
Subway?
have a new way to save money the next time they pop into a restaurant to grab a footlong. The sandwich chain announced that the debut of their first ever value menu. It features 15 entrees for under $5. It includes all new deli faves, 4 classic and fully customizable 6-inch sandwiches for $3.99. Subway.
I haven't been to a Subway since the yoga mat incident with the bread. I don't.
Oh, when the bread was like made out of like yoga mat material,
Yeah.
like the chemicals.
What is
Or,
that?
Oh yeah.
they had the chemicals in the bread or something. I don't know.
Yeah, I don't know. Haven't been there though.
Then they also got sued because the lady was like, "This foot long isn't a foot long."
Yeah.
I was like,
Yeah, this back in the day, Subway was a spot to be
"Yeah,
in the day.
a $5 foot long."
$5 foot long. It would they piled the
You
meat
hit
on
it
there.
perfect because you were in high school probably
Yeah,
when all that was
yeah.
going.
You were a
down.
growing boy.
This was like
Yeah.
the OG Chipotle to the kids
Right.
now.
Yeah,
Yeah.
And then they just messed it up. Private equity.
Private
got in
equity,
there.
they got
The
in
greedy
there.
suits got in there and
Sons
just
of-
messed everything up. And now you get 4-inch sandwiches.
You
Yeah.
get 4-inch footlongs.
Yeah, you get 4-inch foot longs.
the worst.
Yeah.
The NCAA has initiated the final steps to expand the men and women's NCAA basketball tournament to 76 teams. The expansion is on track to be formalized in the upcoming weeks with mid-May as the target, meaning a 76-team tournament could begin next year. That means Indiana would have been in, by the way.
Hey.
Done it.
Does this
Hey,
affect?
hey.
Does this affect our winning of the pools? Because I don't know if I'm.
That'll be interesting to see. Well,
I don't know if I'm.
There's more permutations now.
yeah, it
so.
spreads out the
Yeah.
money a little bit.
Oh man, I got.
So do you love this or hate this?
Hey,
Why?
I think even the way it is now, the 64 teams, I think is more than enough.
Yeah, but they redid the playoffs for college football. I think that got better.
Yeah, for sure. I mean, that gave a handful of other teams an opportunity. I think
Sure.
you're getting too has a 16 we had one 16 seed upset.
I don't remember. Yeah.
It's been one or two. I mean,
But it's
Virginia
different. It
was
is
one.
different in the NIL era. You are right.
Yeah, but I'm saying if the 16 seeds are not competitive, which they shouldn't be because they're far on the tail of the distribution here of the group, adding more, like what is that? You're just putting a handful of losing teams, more losing teams.
Yeah, but I wanted to see my losing team. It was just right on the bubble. So
Yeah. I don't know. I guess if it's gonna feed into the play-in spots, like the 16, 15 seeds, like fine, but I don't see why there's more.
what do you think, Bat? Do you love it? Hate it?
Listen, I mean, I grew up when there were just a limited amount of teams. I think you got plenty. I mean, 60 some odd teams is.
Well, when you grew up, they were still using a peach basket as a hoop. So
This is true. And as a kid, I never played much basketball.
thank you. I love the laugh track there. Thank
That's
you.
pretty good. That's pretty.
Hey, finally today for my viral video, this came across my For You page, and I thought this was funny. I like Terry Bradshaw. I don't know. I think he's a funny character, but I forget that he played for a pretty dominant, Steelers team because I just know Terry Bradshaw like is starring in rom-coms and like being on Fox. Like that's
He
how.
was a stud too, man. I mean,
Yeah, I just think
was
he's
a
funny. Yeah, but I
badass.
obviously was not around.
I know,
for
that's what I'm telling you.
The steel curtain.
Yeah.
But I saw this video.
Well, he was the prima donna quarterback, but he was never prima donna to the steel curtain. The steel curtain was the defense
right.
of Pittsburgh.
Sure. But anyway, he could not believe the price of his most expensive card. I got surprised. Watch this.
Bradshaw,
Yes.
can you guess what your most expensive trading card sold for?
Mine?
Yours.
$80.
Higher.
$800.
Higher.
$8,000. Get out of here. Are you serious?
I'm gonna give you the price right
Yeah.
now. $430,500
Who would pay what for what card?
for your 1971 Topps card.
Get out. Did you hear that, Tammy? Yeah, I got a box of them.
You got a message for the person that bought it?
Yeah, hey man, don't get rid of it because I had been feeling good. That sucker's gonna bring excuse me. Whew, it's gonna bring a lot of money one of these days.
Harry Bradshaw.
Yeah.
He's so
pretty
funny. That's crazy.
Yeah, I don't. The card thing, it's still not a.
Yeah, I agree with you. I don't know, but they hold their value. They seem to.
I guess. I still think it's crazy. I don't know.
I do too. I do too. But
I wish I still had those OG Pokemon cards.
Oh, those are worth
of
something. Yeah.
Good boxes of them.
Man.
Yeah.
Could have had generational wealth.
Not
Nikki.
boxes, like bins, like totes.
Yeah.
Full of them.
Like that go in your she shed.
Yeah.
Yeah.
I thought you didn't get anything when you were a kid.
What do you mean?
Okay, good.
He got Pokemon cards. He didn't get a boat. Vinny has a boat.
Yeah, I think it's different when you buy the pack of cards and play with it and,
He gets cards.
I forgot you were still in the room.
I'm still in the room. Yeah, he gets cards. I'm on his side. He gets cards. He gets cards with a pack of gum. Vinny gets a boat.
Yeah.
I can beat
Oh, but
him.
he'll say, it's just a small one. Well, 15,
It's small, 13.
Just a small one. Just a small one.
Mm-hmm.
No, it's only like 10, 15 grand. Just a small one.
No, it's more than
I got
that.
a deck of cards, pack of cards, and a Beanie Baby. Okay?
Vanetta, what do we do after this?
Emotional damage.
I forgot you in the room. I could stun him for a moment. He doesn't come back with something witty to say until the break comes, and then he makes fun of me. But you're in the room.
That's
I forgot.
because I don't want to.
You show pity and mercy.
I show
got it.
pity.
I know. Vanetta does not.
Vanetta is big sis. She's gonna be like, no,
Lethality.
yeah, gotcha.
What's coming up next?
We're going to take a quick 90-second break and come back. We got more Tasty Live after this with look back at yesterday, confirm and send, and we'll get Vanetta out of the room. We'll be back later. Live.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards, become a trading mastermind. Get the guide at tastylive.com/guide.
What is theta? Options lose part of their value over time as they get closer to expiration. That's why they're called wasting assets. Theta is how fast the option's value changes in a day, not taking any other factors into account. Way far out, an option's price doesn't change as much as time passes. But at about 60 days till expiration, the time part of the option's price starts falling, and at around 45 days to expirations, it starts dropping much faster. If you bought an option, you'll feel time decay pushing down on that option's price. If you sold the option, though, time is on your side, and keeping the credit from the opening trade becomes more likely. Even though options lose their value over time, Tasty mechanics say to exit the trade near 21 days till expiration. Remember, gamma risk gets stronger in the last several days, and stock movements will have more of an effect on options prices. Again, theta is just the rate at which options lose part of their value. Pretty simple.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live with a little bit of a Tasty Extra where we go back and look at yesterday's performance. I mean, you consider, before we get to yesterday's performance, when you glance at what's happening today, I know you have oil trading 104, it's up 4%, but do you look at it as the market being unchanged, talking about the equity market?
I mean, it's down a point.
Yeah, okay. So
I don't know what else.
It's the obvious,
to
but we
call it.
just talked about BE being up $50. We just talked about MU and Sympathy being up $25. You know, earnings are coming out with all these stocks that are at or around their highs. What do you think here at all times?
Realized volatility underneath the surface in individual equities has been astronomical.
In individuals.
In individual names.
In the equity
market. Talking
markets.
about your Bs, your Seagates, your AMDs, your Intel. I mean, the market volatility has been relatively low, which is what you're seeing with vol futures at the lows.
Right.
I mean, we just did that segment where 25 VIX, we did the segment yesterday, 25 VIX has been the average over the last 5 years.
And we're 19 and change.
No, well, the VIX is at 18. The VIX is going to be 17 at some point today, probably. So market-wide, ETF-wide volatility, very, very low. Single names.
So what do you think about that going into today being the Super Bowl of earnings, Meta, Google, Amazon? Do you worry about
it seems like there needs to be a little bit of a breather.
Okay. That was my question.
And that's kind of how I'm positioned, but you have stuff just moving. I mean, 100 points, 25% move in Seagate overnight. That's volatility. And there's no market volatility, Oil's going 103 right now, 104.
104, yeah.
I know. It's a weird market. It's a weird one to trade through right now.
All right, let's go.
Great. It's been a great market.
Yes.
It's an incredible market.
Yep.
Trade.
Let's take a look at a little bit of.
How do you feel? You didn't give me.
I mean, I feel the same. I was wrong on oil yesterday. That's my biggest what if kind of thing. I didn't do anything in oil yesterday, anything more than what I originally have. Volatility's come in, which is nice, but prices gone too far, too fast here in oil for me. Yeah. The equity market itself, I'm leaning cautiously bullish. I mean,
but it's hard to get bullish.
It's hard. That's why I think it's the hardest pull is probably the one to make.
Yeah.
Let's look back at yesterday, then we'll get to a little bit of confirm and send. Index performance, April 28th, as you can see here, the market was a little bit weaker yesterday, off of all-time highs.
We talked about in the morning, there was no bit in volatility.
Right.
It looked like there were, and for the most part, we ended the day, I think we ended the day down 35, or something like that.
So I sold puts when the market was down around 40 handles on the E-mini S&Ps, but volatility was up 40 cents. Market didn't move. Matter of fact, I think SPY closed exactly where I sold those puts, and they were in by almost 45 cents.
Yeah. That's just on nothing.
Right.
No movement, just on
no
vol.
movement. Should be 5 or 6 cents. It was like 10 times, almost 10 times the amount of premium contraction.
I think for most of this week, it's been kind of a wait and see for today.
Mm-hmm.
You can even see it today with a whole bunch of things moving, mostly to the upside. You have the market basically unchanged here. But yesterday, do you call it a pullback? What do you call it? What do you even call it?
I don't call it anything. I mean,
without the
7150 or 7170 or 7167 right now. 7150 is like the mid price from the high to low last 10 days or so.
For sure. I think I would have had a different feeling if volatility was higher.
Agree.
It would have felt like it was, a little bit of a pullback.
Agree.
This was just kind of it just happened to be 30
We're going to go play pickleball this afternoon.
Yeah. Nothing day.
Right.
Just craziness. Well, we'll see what happens today.
Yes, we will.
In terms of the Mag 7s, they've been kind of all over the place. Yesterday, a little bit weaker. Apple has been the one that's kind of been bucking the trend, as you talked about this morning, the correlation at 0.27?
2.5, I believe.
2.5?
Yeah. Mm-hmm.
Very low correlation when you think of the market over the last.
0.27, your memory's better than mine.
Microsoft has kept a little bit of a bid here at 425-ish. What's it doing this morning?
Microsoft, it looked unchanged.
It's down like $2. It got up to 429 yesterday. It's at 427 right now. Google is a haircut from all-time highs here. Amazon has been super, super strong. Tesla's had some two-sided action, Meta and Nvidia to the downside yesterday, but it was very contained, very orderly.
Very early. I mean, Nvidia, I think
Nvidia opened at like 209, and I think closed
213 or so.
Like
I mean, I think
middle.
it's a $5 trillion. I think it's the first $5 trillion company.
Yeah, well, I think it got back to $5 trillion when it got to like 210.
Yeah,
that was the number.
Crazy.
Yeah, crazy. I mean, the moves have been unbelievable, high to low in some of these names.
Yep.
When you look at the sectors themselves, so you had energy stronger. Obviously, you had a 4 or 5% move in oil that is continuing today. So you had the energy sector a little bit stronger than the rest. You had everything else kind of muted there. You did see a pullback in semiconductors, but that was quickly bought back. I mean, SMH was down, I think, like $25 at one point yesterday. When it got to 480, we were trading 510. The day prior, so $20-$30 move to the downside, it's back to 500. I mean,
it's up $4, $4.95.
The semiconductor stocks are moving.
Yeah, this is going to be flip-flop to all green, even though the market's unchanged. I think on the opening, at least.
Yeah, it definitely seems that way. But it's been the most volatile of the group for sure. When we look at the biggest up moves on the day. Not an inspiring list here. You had Nucor, I guess, is one of the bigger names here in the metals space there. The rest of it, not really. It kind of tells the story. It was down market, so all the junk is kind of moving. Centene, one of the healthcare names, along with UNH, has had a nice rally back too. But those aren't like core trading vehicles for us. Not really the most interesting here.
No, and I'm looking at some of these real estate plays because everybody always talks about.
Those go nowhere.
Yeah, they've gone nowhere. CPT has earnings. That's the one there that was up 4% or so. It has earnings tomorrow after the close. Yeah, but there's no option markets in any of these.
Yeah.
And they all were on their butt. They've rallied since then.
On the downside, a couple of the bigger names here. So you had like your GLW, which is Corning. It's had an incredible run to the upside. It had earnings before the market opens down, or yesterday down 9%. You had Light in there. Sienna Corp, SanDisk was down 6 or 7%. It's going to reverse that entire move today. So a little bit of a breather on some of those chip names. A buy the dip, I guess, in hindsight, now that you're looking at all these significantly higher. And they're all the chips are higher today. Everything.
Yeah, I mean, it's a one-day move in these things back and forth, but
unbelievable.
Typically higher in the end, yes. It is unbelievable.
When we look at the heat map here, a little mixed. I mean, NVIDIA was kind of the biggest mover, but it had a $10 rally to a $8 down move, basically up $2 on the 2-day move. Microsoft was relatively strong. Apple's been bucking the trend there. The rest of the names, your Microns, AMDs, LRCX, AMAT, they all had big moves to the downside that look to be reversed today. Financials have been wishy-washy. Healthcare has been kind of wishy-washy. Energy has been on the other side of the move, so that's kind of been your deviation here. But very mixed bag for the last week and a half.
Yeah, the hell of volatility is an indicator of where the market's going. Apple's down 2.5, reverse indicator, which means the market's probably going to be stronger today. That's my takeaway from this whole thing.
Perfect.
We're going to take a quick 90-second break and come back. We got more Tasty Live after this with a little bit of Confirm and Send. We'll be back in 90 seconds. Tasty Live.
We built Tasty Trade's web platform for today's traders. See it, click it, Trade It. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade. First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform. Being able to see graphically where your profit and loss zones are. Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Nikki, we are back, son. You know what that means? A little bit of time for a confirm and send Wednesday, April 29th. What?
No, you're right.
Okay,
You're right.
but let's take a look at what's going on in the market before
giving you
we
your props. I was like, yeah, it's
get there.
Even
the S&P is down 3. You'll see here they got down to 71.61, up to 88. They're at the lower end of their middle range, down
5-ish, 27-point range. Blech.
Yeah, pretty. Yeah, which is kind of low when you've got about a $34 expected move. It's elevated today compared to yesterday with all the earnings that are going to come out and the earnings that did come out last night. I'll get to those in just one quick second. NASDAQ, your leader in the clubhouse to the upside, up 58, although small. Russell up 2 and the Dow down 16. Basically an unchanged equity market with volatility anemic. 1970 making new lows. Bonds down 7, 113.10 at the low end of their range. Bitcoin up $840, 77.5. Kind of oscillating around here at the lows of around 76, the highs of almost 80, sitting at 77.5. Ethereum up about $15 or so. Oil up big. You could see here over the last couple of days, really catching a bid, surprising me at least, maybe surprising nobody else from the emails that I get. Got up to 104.37, 103.78 right now. Gold, I think that's a surprising move. I know you were going to write your congressman.
Ray Dalio.
And Ray Dalio.
That's who I got a bone to pick with here with my gold position.
Right, he liked it around 47 and change. It's 45.50 right now. Just made a new low, down 50 cents. I have a couple of 1x2 put ratio spreads on in GLD. I was looking at the how the futures are priced, and GLD should have a little bit of drag to it. The futures in the front month are lower, 45.60 or so, to about 45.90 and change. So a small little drag in GLD. Yeah. wow is right. Let's see. Let's see what else is moving here in the market. Silver down $1.20 and change, following the move in gold on an equal, if not greater, move lower. Net gas down 5.5. It's making new lows, 2.6 and change. I remember when it was trading around 2.7 and change. I was saying, you know what? I should get long a little bit of net gas just for giggles. Rallied up to 2.8. Couldn't believe I missed it. Now it's 2.6, and I don't have any interest in doing anything in net gas. But let's see what's been moving in the market. On the downside, you've got Hood down around $10 for earnings. I know SoFi is not the big mover, but I think you have a position in there. It's down about $1.50 or so. Those are your two to the downside. Visa is up around $20. It still is. STX up around $100, $90 now. BE was up around $50. It's still up around $50. That's Starbucks was up around $3-4.
I closed out the rest of the NASDAQ that we traded yesterday. We bought it like around, average was probably around 27,100-ish. I closed one in the middle of the day yesterday. I just closed the other now. We get a little bit of a dip. I think I got to buy some too into the Super Bowl at the end of the close.
Good scalp.
Yeah.
Yeah, good scalp. Took 100 handles. What do you want?
Yeah.
All right, good job. Let's go.
Confirm and send. Let's
Wednesday,
do it.
April 29th.
Yes.
There are a lot of events today and tomorrow. If I want to just hedge my entire account, which is currently long, around 500 beta-weighted deltas, what's the better way of doing it between selling /MES or selling call spreads in one of the S&P 500 products?
If you wanted to get flat, you could just sell one ES future. That would get you
MES
zero.
is the smaller product to ES, one ES.
One ES
MES.
is 500 deltas. So you could just sell it. Sell one contract.
Sure.
That would flatten you out. I don't think that's the route to go. I don't think you want to get to zero because you're long delta. You want to be long delta. So, 1, 2, 3 MES would
give you 300 long, give you 300 short beta-weighted deltas, and then you'd have 200 or so beta-weighted deltas. Now,
MES is 50. 50.
Oh, 50. Sorry. Yes, I always do that too.
Yeah. So 3 or 4 of them would get you, 150 to 200 short deltas.
Right.
It would, you want to reduce your overall delta by somewhere between 25 and 50%. You never
That's the way we would do it. You can go all the way to 500 if you want to.
Yeah.
By selling one ES.
If you don't want to be as long, maybe you take some positions off that have worked. I mean, that's the way I would go. But if you're looking to reduce your overall delta, 25 to 50% is probably what you do. You could also look at
that would be the most cost-effective way, buying power-wise too, using any of the future products as you just
for sure.
outlined. Yeah.
You still have relatively high volatility. Maybe you look at put diagonal spreads or something like that in an ES, or you could do it in SPY as well if you want to get a little bit smaller to give yourself a little bit more dynamic delta exposure. Sure. But those are that I would probably say if you wanted to do the easiest way would just be to sell a couple MES contracts.
That's correct. I would also challenge you to go through your position a little bit and, where are your 500 deltas? Just for argument's sakes, if you're short 50, 10 delta puts in SPY, I'm going to tell you selling one ES or 234 /MES or anything else like that is probably not the right thing to do.
Yeah.
Now, if you got 500 shares of SPY stock, then I would say, sure.
Yes.
Go right ahead and do that. They're going to match each other.
You're talking more in the sense.
I was making a very.
No, I think it's a good point.
Okay, go ahead.
Yeah, it's dynamic versus static delta. If you're static delta, you need the static futures to have them more of a hedge versus if you have options that are giving you delta. That delta is not as fat right now.
Yes.
More dynamic delta. I like it.
Next one, please.
When you have a smaller account and so many companies reporting earnings, how do you decide which ones to trade and which ones to sit out?
I mean, just because you said smaller account here, I have a larger account and I typically don't do earnings trades. You don't have to do earnings trades. It's what makes you happy with your overall portfolio. So in a smaller account, I would say unless you have a strong directional bias where you could maybe hit yourself a home run, and by a home run, I would mean a couple $100 on a trade, maybe some sort of diagonal spread, or maybe some sort of 1x2 where you're actually long units if you wanted to, like, you in a small account where you're probably fully invested all the time with all your buying power. Sure, go ahead. But if not,
of all the other times, I mean, this is the most liquid, biggest companies in the world. So these would be the ones I would trade earnings for if this was a random day and you're, like yesterday, Seagate and Visa and Enphase Energy. Like, I don't think those are earnings trades that a smaller account is really focused on. Today is, a batch that you can certainly look to put positions on.
Yeah. Next one, please. I know when selling options for core positions, we look at opening trades around 45 days, if there's an equivalent for trading 0-day trades in the terms of what time to open and what time to close. So they're really talking about 0 days here. They understand when they're looking for more of our core positions, 45 days is optimal for placing, something like that, usually in the monthly options because they're most liquid. But what about the 0 days? Is there any time to do this?
Yeah, we've looked at it. I mean, the first 30 minutes is the time. Sometimes it's, 9 a.m. is better than 8:30. Sometimes it's flipped around.
Sure.
So somewhere around that time frame, and I think unless you're doing this like very mechanically, like via the API where you're like setting and forgetting the entry mechanics, unless you're doing it that way, you probably just somewhere in that time frame is right around the sweet spot. Like that's everything that we've looked at has been the spot. And then, within the first hour or two, you should be looking for that 25% exit. That's generally when it happens. If it doesn't happen in that time frame, it's usually one that you kind of got to hold till expiration. It's that first 2 hour window is really where most of the juice is coming from.
Yeah, I think to add to that, I think it's equally important. Like, when do I close it too, right? Like, we've been managing those winners at a relatively tight 25 to 50%.
Yeah.
In most cases, I know you've held a few recently, which are butterflies, to the end of the day.
Those have been lotto tickets.
Right. I'm just talking about in most cases, an iron condor kind of thing in 0 day, we're closing them fairly quickly. And also after 12 o'clock, you kind of in dicey land. You don't add any more kind of positions typically, unless you're really, adding units and really trying to trade 0 day all day long. Yeah. Usually if you're doing one and done and you're going with hour mechanics, you're looking to close sometime around noon. So if you had a losing trade, it got back to unched or small loser, maybe take it off before noon. Next one, please.
Is there an optimal ratio to use for ratio spreads? For example, is a 1x2 more or less optimal than a 3x5? Or is that not the correct way of thinking about it?
No, I think you're thinking about it correctly. Just remember, unit size kills. 1x2 has significantly
is one naked.
3x5 is two naked.
Yeah.
So there's more risk in a 3x5 than a 1x2. That's why it uses more buying power. I like to keep them typically 1x2. That's the way I do it. But you can certainly go 3x5 if you have an account size that,
or 1x3.
Or 1x3 that warrants two naked options. Like if you have two naked options other places and using the same amount of buying power, then you're fine.
All comes down to size.
All comes down to size.
If you're comfortable with if you're comfortable with 10 naked options, you're okay doing the 1x3 or the 3x5 or a 3x8. I mean, like, you're still within your parameters. But if you're a one lot trader and you're looking at a 1x3, 1x4, you're getting bigger with that position.
Very good. Let's take a quick 90-second break as we come back. Even the S&Ps just turned green. They're up $1.50. Really an unchanged market everywhere except oil. That's up about 3% or so, 103 and change. We'll take a quick 90-second break and come back. We got more Tasty Live after this with
how to handle a whipsaw.
Oh, we'll be back in 90 seconds. Tasty Live.
This might help me with my bloom position.
It should. Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago, and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
Really
you,
do
Rob.
appreciate it.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
It's options. Jive. Nicky, we are back, my son. It's time for a little bit of an option jive. How to handle a whipsaw.
Let's do it. Classic. A whipsaw has become a classic part of trading. It seems like. Get some big moves in both directions here. So let's do it. So a whipsaw we describe as a scenario where an asset's price swiftly moves in one direction and then rapidly reverses. We've seen a lot of it this year, this last 5 years. It's been a lot of V-bottoms. The V-bottoms have been whipsaws for the most part. It's common in volatile markets and can result in losses for those who misjudge the initial trend. And so, we've talked about this a lot, like getting short delta into a move like this, it's almost unavoidable. That's because you're getting whipsawed on these moves. Even if you're rolling up puts, it's never enough delta there. And you're seeing in volatile markets specifically, and we've been in a very high volatility environment for the last 5 years or so. The realized volatility has been in both directions. It's not just to the downside. That's certainly something that's been happening this last couple of years. So the term whipsaw is inspired by the back and forth motion of a saw. Thank you for that. So we're going to provide a clear understanding of the whipsaw and what has happened previously. I think this is an interesting look back here. This is a revealing look back of what we've experienced this last 5 years. So on the next slide here, historically, we've identified whipsaw as a whipsaw move marked by a rapid down move and then a swift reversal. Statistically speaking, historical market moves that were at least 30% to the downside took much longer to make a 2/3 recovery than the 1.5 months that we have experienced recently. So here's a couple of quote unquote crashes. I know 2020, not exactly a crash in some books. tariff tantrum, this past Iran war. It used to take years. Now it's taking months, as you can see. So in 1929, the crash took 17 years to get back. Two-thirds of that.
Yes.
It's a lot.
Yeah.
A long time.
Yep.
A whole lifetime of trading. You think that could happen again?
Oof.
Can you have a 17-year, like the Japanese markets is another one where in like the early mid-90s, it hit its high?
Yeah, and it was the model of all economies, and it has never recovered.
I think it just got back there.
Yeah.
I think last year it got back.
30 years or 40 years for it to get back.
You think that's possible for the U.S. market? I mean, of course it's possible.
I mean, of course anything is possible. Probably not in my lifetime.
Tend to think so. I tend to be on that same.
Yeah.
I mean, I think just news and things change so quickly now.
Yes.
That it's very hard to see that being the case.
Yes.
I don't know what would have to go on for us to have a 10-year chop.
Yeah.
And go nowhere. Maybe the moves become lesser to the upside. I don't think that would be so bad of a thing. But yeah. So here's just a look back at recent V bottoms versus what has happened in the past. Just to give everybody a little FYI there. If we use SPY as an example of a whipsaw trade, one that moves sharply in both directions here. April of 2025 is certainly one of them. That was a tariff tantrum. We're on the next slide here, guys. And then 2026 this year. I mean, these are huge moves. You're talking about these are as big as they get. V bottoms always and forever. And so if we get to the next slide here, so Tesla's another one. You see these a lot more, I think, in single name equities. It's even if you're doing strangles and SPY, and if you caught the bottom of that move, you're still kind of okay. In something like an AMD where the stock moves $100, there's just not much you can do against that position. In SPY, there's ways to hedge it. You can add to the position. You can use the futures. When you're talking about single name equities, the whipsaw risk is a lot greater than what you see in the ETFs here.
Agreed.
Next one,
it's funny we're talking about a whipsaw when we haven't had any kind of back and forth movement of any magnitude for the last 2 weeks or so. Although you had that big V bottom. I don't know. We should be talking about V bottoms as being the new whipsaw.
It is a whipsaw.
Yeah. I mean, Frankie just wrote me. I remember whipsaws daily in the OEX, and it did feel like that on a 10-handle move on the E-mini S&P.
It's all relative.
It's all relative.
That was the same.
That's right. Yeah.
At that point, it was probably a 1% move, 0.5% move.
Yeah.
So, being whipsawed relative to strangles and their deltas, we're going to talk about kind of just what that means here. Strangles with lower deltas have less of a chance of experiencing whipsaws, of course, but the magnitude is going to be greater on those. I think the point of this slide here is that that 20 to 30 delta range is a comfortable, manageable risk probability of touch wise. The probability of touch on both sides when you're selling a 20 delta strangle is about a 50-50 shot. And you should expect to be tested on each of those options here. So those less aggressive strangles have also seen far fewer occurrences of whipsaws in practice. So SPY, you have much more risk of this, huge, even the V bottom, you get to at the money and you're like, well, this stinks. But in some of these other names like an AMD or Tesla or STX, these moves are just way bigger. So the expected probabilities of being tested on each side, if you're selling a 20 or 30 delta strangle, is about twice the delta. So you're looking at about 40%. The expected probability would be about 16 on either side of being in the money. The actual occurrences where you're tested is about 2% if you're looking at like a 20 delta strangle. So it tells you that although you have this risk, it's still a little bit overinflated. So while choosing lower delta strangles is one way to defend against whipsaw and trade entry, some outlier moves like that of earnings announcements can't be avoided. I think when you're talking about tail risk, I worry less about it in an ETF than I do in a stock for earning. Like I would be much less aggressive with short premium into an earnings than I would with a SPY strangle. I think that's a little bit more easy to handle for most people.
You're right.
So you've got rolling up, rolling down. Those are things you can do to mitigate some of this. I mean, just the mechanics of rolling at 21 days is going to push you further out in time. It's going to push you further out on the curve. Even if you are a tester in the middle of these sort of V bottoms, it's one way to kind of reduce your overall exposure here.
Yeah, really what you're talking about here is just staying mechanical, right? I mean, the only thing you could do about a whipsaw is being mechanical. Remember, when we are mechanical, we're reducing, you talked about it in the confirmance sense, we're reducing our delta by that 50%. Like you even said, I wouldn't reduce it completely by selling one E-mini S&P. I would probably do something else against it. I went so far as saying, hey, dig into your position and see where your deltas are. Don't just take it as face value. See where your deltas are. If you have short units of far out of the money options, you can't look at those as real solid deltas for futures. So that's not the place for you to go. You probably should use some sort of option strategy.
But those options that you have in individual equities, and it's a reason why we manage positions and close trades, and we're not trying to get every penny out of those trades, is because you hit some sort of tail event, and it'll offset hundreds, if not thousands, of those nickel options that you're trying to hold to get every dollar out of.
Yeah.
You have a strangle in BE into earnings and the call's way out of the money and you think, oh yeah, I can't possibly get there. And then you wake up and the stock's up $50. You're going to give up a lot of those occurrences.
Good.
Couple takeaways though. Whipsaws cause the testing of both the put and the call side of a trade. Typically, recovering 2/3 of a crash of crash losses has taken about a year. That's kind of the more current market. You know, if you have these kind of crash scenarios, it usually takes about a year to get back 2/3 of that move. We've seen it happen much, much quicker. The last one, 1.5 months. And that's, could you imagine if everything just like stops after a week? You get down move, you get a 10% down move and all of a sudden you're back in a week. Maybe that's how it goes. It's the 3-body problem. You watch that show?
What is it?
3-body problem. It's a good one. I think it's based on a book.
Most movies are.
The 3-body problem.
The 3-body problem. What's that about?
It's a good show. It's about like technology change and how everything like exponentially gets quicker. You know, like doubling every single year.
Sure. Things move here. Like you're saying, things.
But at a certain point, like it's moving so fast. Kind of like how we went from like, you know, Nokia phones to now we have computers in our pocket, and now we have AI that's telling us everything we need to know.
Yeah, I mean, I think the Apple phone is only about 20 years old. I mean, I think Nokia was.
You had a brick in the car. You had those. A huge thing with a wire.
Yeah.
In a briefcase.
Yeah.
That's what.
And we would argue about it being like, you know, $5-6 a minute to make a phone call, but now you charge $1,000 for a phone. We're going to take a quick
3 minutes though.
What's that?
Free calls and texts now.
Yes. We'll take a quick 90-second break and come back. We got more Tasty Live after this. Even the S&Ps just reached their lowest point that I've seen them so far this morning. Down 7. NASDAQ still green, up 30. Russell down $1 and change. Dow down 50. Volatility up 4 cents.
Oil at the highs.
Oil at its highs just made a new
Something
high.
happening? I need my time.
All around the world. And we'll take a quick 90-second break and come back. We got more Tasty Live after this.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Earn up to $3,000 in commission rebates.
Nikki, we are back, son, and you know what that means. We've got about 2.5 minutes here, well, 3 minutes before the market opens. E-mini S&Ps down $7, as I just said, about the lowest they've been since we've been on the show. NASDAQ was up around 30 when I quoted a moment ago. It's up around 45. It's the only green of the four indices right now, with the Russell down $1. Dow down 44, volatility up 8 cents. VIX, which we talked about the mean being around 20 something, is now 18 and change, probably on its way to break the 18 handle. Bonds are down 15 ticks. It's about as low as I've seen them for the last 10, 12, 14 trading days or so. Matter of fact, I guess it got down to these same lows on 413. And then again at around 4.7. So here we are in bonds. Maybe something to do there. We could take a look at TLT after this, trading 85, just under 86 is what I should say. Back on that same time frame, it looks like it got as low as 86.20 or so. A little bit below that with a little bit of backwardation coming into play there. Bitcoin up 500 and change, right in the middle of its range. Ethereum right in the middle of its range. Oil, that's the one that's been moving higher. I think actually putting a little bit of a damper on the market. I don't know. If I told you that oil was going to be up $4.50 to 104 and change, numbers it has never seen in this future contract, I don't think you'd be saying.
When we were at 6,300, everybody was freaking out about this price in oil.
Yeah, that's what I'm saying. I don't think you would say that we were going to be at 71.60 on the E-mini S&Ps.
It's weird.
Yeah,
it's a little weird.
Yeah, it's a weird market.
A little weird.
Definitely a weird market. Gold, 45.50. Gold volatility has been going sideways-ish, unlike oil volatility, which has been going completely lower. Matter of fact, OVX, we have a quick look at it. OVX/CGI was 70, I think, when I looked.
Yeah.
70 and a half. Last time oil was making these kind of runs, it was, in the 90s, hundreds, 110 in volatility. So volatility's really come in, and that means that upside calls still have the skew to them, but nowhere near as great price in the options as you once had. Doesn't mean the play is over. Just means it's completely different now. Silver down almost 2%, 1.5 to 72 and change. Been moving step for step with gold as of late. and nat gas 2.65. Some of the stocks that had earnings that helped us go higher, BE still up around $50. That one's been the one that's been the most solid of all the stocks that are rallied for earnings. STX, I guess it's still up $90. I guess it's pretty solid too. It was up around 110 earlier. Visa was up 20. There's your opening bell. I know on the break you mentioned CAR, which also had earnings. It's down $20 to $160. I mean, too bad it was a horrible play. You made some money in there on a nice diagonal spread, but just too bad the markets were so horrible in there.
There was no way you could really play that.
No, nothing you could do there at all. Today for earnings, it's the big day. You got Amazon, which is down $1 right now for earnings. You've got Google coming out.
Get a little weakness today into all the stuff that's happening end of the day. I mean, you got FOMC of all those earnings. I mean, volatility's at lows. You got to think they got to bid volatility a little bit, and maybe have a little bit of weakness into that, right?
You know what? If you want to set the hook in all of these earnings that are going to come out,
hook to the upside,
yeah. which I think is like, here we are at all-time highs, oscillating around.
Yeah.
I always talk about the longer we stay up here or down here, it works the same for me. The less chance we have of going in the opposite direction than where we've been going. So we've been going higher as of late. A little bit of weakness in the market, get everybody going like I missed the top and I need to.
And you got to FOMO in, but I feel like we've been doing it. That's why I was talking about. I wanted to see a little bit of weakness into these earnings, because then you get the hook in where you got volatility. Right. Everybody's like, oh no, is this the end? We're topping out, blah, blah, blah. And then you can face them.
Yes.
But this isn't the setup. This is, we're at all-time highs. Everything's moving, 10% a day. This is when I feel icky. A little bit.
I tend to, cautious. Less positions. I have less position, less buying power. My last couple of trades on option trades today, besides the one Tesla trade that I did, which by the way, I should look at that because that's the one that I have the most risk in, I believe. Mm-hmm. Tesla unchanged down 40 cents. So that works for me, down 90 cents. I just needed to go sideways for a little bit.
Yeah.
I agree with you. Get a little bit of weakness, a little bit of softness in the market going into these earnings. I would be surprised if they all blow out their earnings and we have that huge move higher. I would think about it as a little bit of a blow off top from these levels. So I mean, we're teetering on some whipsaw action, which we just talked about a little bit. Let's take a look at what's moving in the market right now. Coin down 14 and change. Hood down almost $10. That's a 12% move, big move in Hood. CAR, I just mentioned, down $9. Microsoft, which has earnings coming out, down $5. Carvana, which has earnings coming out, down $5. Bookings had earnings last night. It's down $4 and change. Meta, which has earnings tonight, down $4. So some of these earnings stocks are lower, down 3.5 in Google. What's Qualcomm doing? Might as well put that one up there, see what Qualcomm is doing. Oh, one of the Buckers up $2.60. Mm-hmm. SanDisk up $72 after trading about $10 higher. BE up $56 after trading about. What's that?
That one's a disaster. I've hit some big moves in some of these stocks, and by hit them, I mean the wrong side of those trades.
Eating like a bird, pooping like an elephant.
Yeah, not good ones.
Mm-hmm. Mm-hmm. It happens.
Yeah.
Visa, which had earnings up $30, now is up $20 earlier.
That's huge. That's got to be 2 or 3 times the expected move.
Oh yeah, 10% move in Visa for sure.
Visa's usually one where you look at it, it's like a $10 expected move.
Yeah, I'm surprised that, XOM up fucking change. I'm surprised that there's not more oil. I know USO is going to be up $6 or $7, but
you want to know the crazy thing about USO? We sold. So I've been scalping the calls, the 170 strike calls. Mm-hmm. 16 days to go. We sold them 2 days ago. I think oil was probably around 93, 94-ish, because we had a $4 or $5 rally yesterday, $4 or $5 rally today. Those calls I sold them at 195. They're at 246 right now. USO has gone up $15.
Right.
That's the volatility for you, because volatility when we sold those 2 days ago was at 80.
That's correct.
Which was low at that point.
Yeah, right. On its way to 70.
On its way to 70 in the next 2 sessions. So
it's a big move.
Yeah. And it's been helping because you're getting the delta move. So I've been doing these like crab trades, calendarized ratios where I'm buying one in June that's closer at the money, selling, 2 or 3 units in May. Those May calls aren't moving into a $15 up move, and I'm getting all that intrinsic value on those at the money calls in June. So you're getting kind of the both of them. Now you need it to kind of chill here, maybe slightly higher, up to 170 is kind of like my spot where I start to miss out. But that trade is certainly helping hedge some of the debacle.
Don't look. What do you think volatility? It's up in oil. Oil being up.
It's probably not up. It's probably up a point.
You're exactly right. 1.5.
Which is unbelievable, because this was Armageddon the last time we were here.
Right. Again, buy the rumor, sell the news on volatility. Volatility mean reverting a lot faster than price, for sure.
Do I nibble on an MNQ that I scalped out of, or you think we get a little bit more here? Volatility's creeping up too.
Yeah, up 16 cents to 1988. Kind of doing what it did yesterday, where it opened near its high-ish and then stayed there for about an hour and then slowly sold off. My friend Aaron was saying that, you should think about selling volatility here at around 2040 or so. And I was like, nah, I don't see it. But he was right. I was wrong.
Is the oil move finally going to matter today? Is that why? Is that what a 13-point dip gives us? 4% move in oil is a 20 basis point move in the equities now. Is that what it is, or does it finally matter?
I don't know, because I wouldn't have thought that that's what would have happened. I would have thought it would be a 130-point move in the S&Ps instead of a 30.
Yeah. I have nothing.
I don't have your answer.
I mean, I have to address this BE position soon. I was hoping you'd get a little bit of like profit taking. I mean, who does that nowadays?
Yeah, who does that? That's right.
Everything just goes up. It's unbelievable. What else do we have? Do you have any interest in the earnings after the close? I mean, I have some long delta in Microsoft. Meta, I have some long delta. Amazon, I'm neutral / slightly long. Kind of in all of them already. Google, do you play with Google here?
Yeah, but I would probably wait till after, till the end or near the end of the day. I mean,
I agree.
You got oil up $4.50 here, and you got the market doing absolutely nothing, which you just outlined doesn't seem to make sense. You got some of these stocks a little bit weaker off of all-time highs. I would probably, if I'm looking to do an earnings trade, I know you're looking for something to do on the show. What you could do is something / SPX or / ES. Expected move in there is $32. Remember, yesterday it was around $24-ish. So you got a little bit of volatility expansion there.
What do we do? Broken wing butterfly, maybe? Or do you do the iron condor?
I do the iron condor.
All right.
That's me.
20 delta?
Yeah. Yeah, standard stuff. Right? If you're looking at something like this, you're probably going to somewhere around the
$15 wide?
Sure. So, what are you doing? 70, 85 on the downside to 70? Or where are you going?
I was going to go 70, 90, 70, 75. And on the upside, 71.60, 71.75.
Perfect.
Or 75.
Sure. Oh, that was way too easy. You are so screwed.
470. I had to move it. But I'll put that in.
Giving away the nickels.
We'll try and take, what do you want to take? 80 cents?
Sure.
All right.
I mean.
So we'll say 390 we'll put this in at.
Sure. S&P down 15, NASDAQ down 5, up 5.
Damn, should have bought the NASDAQ.
Let's take a quick 90-second break and come back. We're going to come back with, at 8:40 we do What's Your Assumption?
I need that.
You do need that because you're light on trades. We've taken a lot of trades off.
Yes.
We can't come up with an original idea, so we're going to you, our viewers, to come up with an idea for us on what's your assumption. We'll do that right after this. We'll be back in 90 seconds. Tasty Live.
We wanted to call in because recently some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more because it certainly has meant a lot to us. It saved us a lot of money and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs. 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Nikki, we are back, son. You know what that means. Time for a little bit more Tasty Live. That's right, with What's Your Assumption? And when we are bored, we are spot on. Even the S&P is down 15, NASDAQ up 22, and my friend Bain did remind me, and he's right. They're right. I don't know if it's a boy, girl, or whatever, but it's just D. Bain. Newer traders might want to know on 0 day, which we just did at 470 here. Don't move as quickly when the Fed is talking, and they're 100% correct. So they usually avoid them. Our research would actually kind of avoid it too. So knowing that now, going in, you have a chance to scalp it, make a penny, 2 or whatever. Do you keep it on?
No, we'll let it.
There you go. Look at you, big stud. But you might not see any contraction until after.
I think you're also, when you look at volatility, futures are up a little bit today. You're seeing some choppiness in the market.
Mm-hmm.
You have all the things happening at the end of the day. You should expect volatility to kind of stay bid. I don't think we're going to get a vol crush type day where you're closing, your SPX trade in an hour, So
Got it.
Cool.
Good job. Good job out of you.
All right, should we do it?
I'm ready.
All right.
Oof. Mags. Short-term neutral. What'd you do?
I just closed off I sold a call in ASTS, Space Mobile. I sold the calls again. I have a put ratio that's right at the money.
Space Mobile down $3.40. Great job out of you.
Well, I have a put ratio that's getting tested, so not that great. Mags.
What say you?
Okay, so obviously you have all the big Mag 7 stocks reported, or a lot of them this week. Can you even trade this? I know I've looked. Yeah, you can't.
Palantir down $5. That's becoming a thorn in my side.
Oh yeah, 136. Do we do something in
Mags short term? What do you think about Mags?
These options, Travis, I think this is and I've looked at this with Chris. I've never really looked at the options, but I've looked at this as a way to view the Mag 7 stocks as a basket. I think that's about as good of a purpose it has. Options wise, these options do not look liquid. I mean, you're talking about dollar-wide bid-ask spreads. I'm looking out in June. It looks like some of the strikes do trade. If I was going to trade these, I would look at those, $5.
They've been around longer. That's why they have more volume to them. But yeah, I mean, and I just put up open interest there to do exactly what you're looking at doing here. I agree with you. I think these markets are probably too wide and doesn't warrant a trade.
I'm going to pass on this one, but I give myself kind of like a half mark on this because I have basically all the Mag 7s that are reported.
Next one, please. SPX 0 day. Well, there you go. We put it on, and look at this. That seems to be not being worth it. There they are. They're kind of San Mateo. You're 100% correct. The Fed is 99.9% likely to do nothing. Why not sell the extra premium into the inflated IV? We didn't go so deep and granular into this.
Yeah.
But I like the story that you're painting here, and I'm going to tell you that's why we made the trade.
I would like
not because we were bored.
Yeah, I would like yours to play out.
Yes.
Instead of
me too.
Your Taiwanese source over there telling you not to do it, which I respect as well. But we do have that SPX trade on. We did a $15 wide at 470. It's marked right now at like 440, so it's coming slightly. I have an order in to close it at 390. So
very good.
A half mark as well for this one, Abhishek.
Yep.
Thank you, though.
Next one, please.
Amazon bearish. Who is bearish on anything? Come on. All right. Mostly neutral on Amazon. Okay. Maybe a touch bearish. Has outperformed the other big names by a lot. I guess maybe a little bit recently, but it's still, it's at highs, but it's not like it's like blasting off here. Not sure if it's fully justified using weekly options for an earnings trade. Okay. So I am sort of neutral here. I have a 1x2 crab trade. So I'm long the May 265. That's in the May monthly. And then I sold 2 of the May 1st 285s against it. So it's basically delta neutral. From a delta perspective, I sold 2 of the 18 deltas right now with the stock basically unchanged in the 2-day options. And then I bought 1 of the 46 deltas in the May monthly. So I'm netting like 10 or 15 long deltas here. What would you do as an added trade to that? Maybe like a put ratio spread? Does that sound crazy to you?
Sure. No, that doesn't sound crazy to me.
It's not exactly bearish.
Exactly a bearish trade for earnings, though. I mean, if you were going to do a bearish trade,
it's omnidirectional.
Omnidirectional. That's fine. Are you going to go in shorter term, or are you going to go in?
I was thinking the 2-day because I'm already using because I'm naked an extra unit. I'm already using that buying power. So if I go into the 2-day, I was thinking maybe like the 250, 240. It's marked at like a 40-cent debit. But it's a trade where I'm hoping it doesn't come into play. Okay. Now, I'd rather lose the 48 cents on this because I'm probably net profitable on the rest of the trade. If I lose this one, it means we're here or slightly higher or maybe slightly lower. And so that would be the best case. It's adding, it makes me more neutral.
What does it do? What does it do? Yes. It takes away some of your
47 cents.
Beautiful.
Small put ratio spread. Break even is 230 on the downside on that one.
Beautiful.
And my 1x2 I did for a small debit, so inside move is the perfect spot here.
Which is
inside the expected in either direction.
Right, and Amazon's expected move is
the big one.
About $7.50 or so.
No. You got you're looking at the 0-day option.
Oh, I'm so sorry. $18.
So it's about an $18 move.
Yes.
Which is
0-day options will be done.
Yeah.
Today.
But I'm doing the 2-day. So
I got you. May 1st options. Yep. Good job.
Good job out of you.
No, good job out of you.
No, you. Oh, CMG. No. I think I've sworn off CMG here. Earnings play. Does it have earnings? It's got earnings.
CMG?
Who is looking at CMG for earnings after the close today?
It does, and I did mention it with Carvana and Lilly, but they're afterthoughts. But yes, you are right. Who's looking at CMG?
What does a new subscriber do here?
Good IV rank of 86, almost a $3 expected move, which would be just under a 10%. $3 doesn't sound like a lot when you're looking at some of these other stocks that are multi-hundreds of dollars. Stocks is at $32 stock that has not been able to find its way to the promised land.
Oh, this one's.
What do you think? What do you hear? What do you say?
I'm going to do something real Johnny.
I'm going to do something real Johnny here?
Really Johnny. I sold
the naked put isn't real Johnny.
16 days out, 31.5 strike put for $1.22. If we're lower, I'm taking stock. I'll wheel this like I did Snapchat, and I'll hold it for the next 6 months, and I'll make 50 cents on it.
Boom.
Amazing.
But you use a limited amount of buying power.
Yeah, $400
Well, there you go. I mean, you sometimes use $5,000 in buying power to make $2-3. I mean,
capital.
Do 20 of these.
It's a capital efficient.
Do 20 of these is what you got to do.
No.
10.
I don't want
10 of these.
I don't want to have.
Do it. You have the technology.
I don't want to have.
Do it when you're bored. There's nothing better than going big.
No, that's when you get yourself into trouble. Not going to do that. I'm going to stay.
Oh, do it. Do it.
I'm going to stay small.
I'm channeling my old co-host. McDonald's bullish in June.
Oh,
super bullish on McDonald's after this pullback. Super bullish.
Wow.
Down $1.80. Has earnings May 7th.
I mean, look at the McDonald's this is kind of the lows.
This is the lows.
I mean,
it made the same price a few days ago, pretty close to this right here, maybe 50 cents lower actually. But yeah, this is the lows that we haven't seen since June of last year. And then you've really got to go back to like January of last year to get any lower than here. So yeah, they're right. They're right. IV rank at 84 is good. Earnings coming May 7th. Go.
I did a call diagonal spread, June, May. I'm long the 295 in June. And then I'm
that
short.
gives you 50 deltas. I mean, you did it twice, 25 each.
Yeah.
But yeah, that's you're putting your money where your mouth is. I mean, usually you'll just give them, one or something like that.
The 305 call is about a 20 delta in the May monthly. So it has earnings in the middle of next week. And then I'm long the 45 delta call. So I'm net 22 or 23 deltas on this trade.
Very good. Push it through, and I will show the world. Next one, please. Qualcomm, neutral. Qualcomm has earnings today. Neutral on Qualcomm with 120 looking like a solid floor and 160 as resistance. Qualcomm. I don't want risk on both sides like an iron condor, so I'd rather keep it one-sided. They're going with an earnings play. They don't come up with something, but he gives you a little bit of guidance on what he's thinking. 120 to 160. Stock is 152, up $2 and change. Oof. Qualcomm has an expected move around $11 in the next 2 days.
Oof.
Oof.
The chip names they've been face rippers.
They have been. Let's see something here.
Spook me a little bit.
If I can come up with something here. So
I know it.
All right, you got, can I help you?
Sure. Are you thinking So they have earnings after the close today?
Yes.
Or yes.
Yes.
Okay.
Go ahead. You were saying, was I thinking? I was going to see if you can.
Are you thinking earnings trade or longer duration?
Well, that's what they're doing, an earnings play here. So Ryan in San Diego, I'm going to try to, if you gave me everything that you gave me here, I'm going to try to give you something that goes with that scenario. Are you ready?
Okay.
155, 60, 70. Broken wing butterfly, 300. What's that? In the 2-day. He says that resistance around 160. My break even is closer to 165. It's a small credit somewhere in here. Markets are okay, not great. I'm buying no tail risk to the upside kind of thing. No risk to the downside. 2-day play. Hit a home run. If you want to spend it, go ahead. What'd you do?
I'm going to make it a little bit wider and do it for a small debit. 155, 162 and a half, 177 and a half. So you're 7.5 by 15.
Okay.
It's still the same
it's the same spread. You got a little bit more room to the upside, no room to the downside, but 55 cents is your risk. It probably trades for a dime if it go lower.
Yeah.
You probably got 30, 40, 50 cents worth.
I wanted the added upside buffer.
Room to the upside.
Yeah, right.
But you increased your risk by about $200.
Yes. But I have a wider spread. I have a wider range.
But I thought you said I was all right, Spider.
Oh, I liked yours.
No, I know. Good job. We came up with the same scenario, which was what counts here.
Yeah.
Next one, please.
K-Web.
K-Web.
This. I think I just some naked long shares. We did a cover call maybe like 2 weeks ago. And then I bought back the 30 strike call at like 50 cents. My basis on this is like 30. I'm out like $2.
Stock trading 28, right?
Back near support. Covered call is in play. Sean in Hong Kong. I have this. Do I add to this?
Well, you just have long stock, right?
Yeah.
Yeah, you go out to...
This is the old school dollar cost averaging. Which is not something you want to be doing. It's usually not, it doesn't feel good in the moment.
Yeah. I probably abstain since you already have a bullish position in here and they're bullish. You're more bullish than them with just naked long stock.
Yeah. I'm just long the stock here. The options are just, there's no juice there. I'd rather have something happen here and you get bailed out on a $1 or $2 up move here and be done with it. So I'm going to pass on this one, Sean, but thank you.
All right. Next one, please. Bonds in the 112 handle. My peeps just told me, and they are correct. 112.30.
Doesn't seem to matter for markets.
Nothing seems to matter
for
the market right now. RTX. Not one of my favorite stocks to trade. June markets are about 30 to 50 cents wide.
Bullish in June.
Okay, stock's down 77 cents. I don't consider that much of a down move, but it has fallen over the last 2 weeks. Unlike the market, which is rallying, this has gone from 200 and change down to about 170. Its market correlation is typically a lot higher, 0.94. This is a stock that had been moving with the market, not helping the market. Now, Scott may have found something in Pittsburgh here, or at least for... I wish the markets were a little bit better, but what do you do?
Yeah,
do you want to do something?
I'm going to try and get in a diagonal spread here, June, May.
May only with 16 days and very little one vol differential.
I just figured August is just so far out.
No, you can't do August if you're going to do some sort of diagonal. No, I agree with you there.
So I was looking at... their play was in June. So ideally I would look at like a July, June diagonal spread to go into June. But the July expiration will open up once May rolls off the table. This is not the most liquid of products here. You'll see some ETFs and stocks will have July options already. This is not one of the more liquid ones, so it doesn't. And so going out to August, I'll be stuck with that for quite some time.
Yeah.
Here, maybe we get a short-term bounce. And I'm out of the trade for $50 or $100, and you add it to the list for next time.
I was actually going to look for something in here because I think he came up with a good stock here to trade. It has a high correlation to the market. It's got a good IV rank after earnings. It's on its butt. Market's higher. I like to buy things that are a little bit depressed, especially in this market. Think it's going to lift all ships. I tried to go into June with even going into an at the money Jade Lizard here. I can't even collect the $10 of the call spread because the spread here, the 175, 180, trading around $3.80 is around 1/3 the width of the strikes. You go to the puts, markets are wide there. You can't trade this stock.
Yeah.
In my opinion, on the option.
And the buying power too. Like, I don't want to tie up a couple grand in.
I understand.
In buying power to sell the puts. I'm trying to roll my BE position. I have no idea where I'm going to get filled here.
BE markets are
and I have
wide.
deep
Stocks
in the
up
money
20 some odd percent, up $50.
Unbelievable. All right. I rolled out to June and
you poor bastard.
I am in a world of pain here. So I'm selling an extra unit on the downside here. I'm short 2 of the 200 strike puts, which are, look at the skew here.
I don't want to.
The 200 strike
I don't want to
puts,
be lured into this. The markets are just not good.
They don't even have in June. So just to give you the idea of the skew, the highest strike is 360 in June in BE. 360 is we'll just call it 100 points out of the money. The 200 is 70 points out of the money. The 200 is a 16 delta option, 70 points out of the money. The 360 is a 30 delta option, 100 points out of the money, which means that the skew on this, if there were strikes, probably puts your one standard deviation on the upside at 500. Is about a double to the upside or 20% to the downside. That's the skew here.
Yeah. I'm not even going to talk about it because the market's stinking there. I'm not going to let you do that to me. Light up $55.
Yeah, I mean, look at SanDisk, dude. We're at 1,100.
Yeah, unbelievable.
Touch today. Yeah,
unbelievable.
1103. I mean, Western Digital's was the bigger mover of the group. It was up like 50 at one point. It's unbelievable, some of these moves. All right, we're in RTX. Scott, we're with you.
All right. Next one, Microsoft for earnings, June, May diagonal, 440, 450. Go. What do you think?
I am right
with you. I'm
already in diagonal spreads. I like this if you don't have a position on. This is probably trades at what? $6, $7? Let's see what it is. So June, if you did the 440, just to put this out there, I think this is an interesting way to trade this because front volatility is just so high here in Microsoft. You got an IV rank of 106. That does not come around all that often with a Mag 7 stock.
No.
This diagonal trades at $8. I love this if you don't have it. If I didn't already have it on and you want to be bullish, I think this sort of setup or even wider, like if you don't mind using a little bit extra capital, you could sell the 475s. You do this 440, 475 or 450, 475. You could do this at like $1,000, $1,300. Pretty interesting way to get some long delta here. Get you 25 long deltas with a wide diagonal.
Pretty interesting way. Agreed.
I have this with my shorts right at the money here into earnings. So I'm playing the upside, but the best case for my position currently is to be like slightly up because I have a lot of short premium that expires at the end of the week here. So I'm with you. I think Microsoft is interesting to the upside. If I didn't already have it, I would be doing this. I have a lot of it. And I have that leap call spread. Remember when we did the leaps in Meta and Microsoft?
Yes. You got your
if we're still here a
your
year
home
from
run
now.
set up.
Yeah, if we're it's January of next year. But yes, I'm with you, Jared. I already have it on though.
Next one, please. Last one. Netflix bullish. Everybody's bullish.
What do you do here? So I have some diagonal spreads here. They're cheapies. What am I up on those? Or a little down. I'm down like 90 cents on them. Do you add more?
I don't know. What's your directional opinion on Netflix? I guess is the last question.
Oh, there's SPX.
Oh, look at you.
GFY to whoever your Taiwanese source was.
Take that, Taiwanese source.
$80.
Take that.
Boom.
Like it was nothing.
Boom, roasted.
Actually was really nothing. I mean, you put it on, let's see, we put it on at 8:39. It's 9:04. So less than half an hour. Good job out of you.
I added some diagonal spreads in Netflix. At the money, more like poor man's cover calls.
Okay. All right. Beautiful.
Small.
Yeah. $4 for a 90.95 May, June.
Yeah.
Okay.
Playing for a bounce. You got to think, tide lifts all.
Gotta think.
Boats tomorrow, right? If you have the face ripper to the upside, don't they buy everything? It's one of those, or
yes, that was my thinking in RTX, but markets just don't support that. All right, let's see how you did here. As the E-mini S&Ps are down 11, Nasdaq's up 28. Yeah, pretty good.
I
mean,
yeah.
Your peoples would say meh.
Yeah, it was a meh. Meh.
Okay,
it's okay though.
Okay, yeah, better than prior administrations. E-mini S&Ps down 10. NASDAQ up 33. This is the way it's been for most of the morning. Russell down 10 and the Dow down 180. Volatility unchanged. Big movers around the market here. Carr down 16. Lilly for earnings down, coming out with earnings soon, 11. Coin down 15. Hood down 10 for earnings. A lot of the earnings plays. Palantir down 5. Boeing down 5. Carvana has earnings after close down 4. OKLO down around $4. Tesla down around $3 and change. And on the upside, SanDisk up 88. Light for up 60 and change. BE up 51.
Unreal.
MU up 16. Starbucks up $6 now. It opened, I think, close to up 3. Qualcomm up 4 and change. Spot up 4. Intel, we didn't talk about that. Up another $4. Go America. We're going to take a quick thing.
Intel's up $4. What's it at? 190?
88 and change.
Unbelievable.
Hasn't been any higher.
Yeah, that's the next position that I have to start addressing too. That one has grown some teeth.
And you played it to the long side too.
Yeah, not long enough.
Well, we're going to take a quick 90-second break and come back. We got more Tasty Live after this. Do you know what comes up next?
We have TP in the
We sure do.
Favorite.
We sure do. Mr. TP, fan favorite in the house. We'll be back in 90 seconds of Tasty Live.
Cool.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Nicky, we are back, son. And you know what that means? Time for a little bit more Tasty Live with this man, never looking better, Mr. TP. How are you, brother?
Guys, good to see you again. Let me switch over to another. There we go. Now I can see you guys.
TP, are you going to the islands or something like that? Are you on a luau?
Tony, it's no. What I do is I go stick my feet in the kiddie pool while I drink the who's that? Captain Morgan margarita.
Nice.
Whatever it is.
You got one of those like blow up pools in the back.
No, he's got.
No, those are a little too highbrow for me, Nicky. I go with the
you
plastic.
bathe. Don't lie. You bathe in the alpaca water that you have there, in like one of those metal, like
All right. All joking aside, the water situation, we've been in a drought. It's a little tight. It's a little tight. And no, we try to whatever. The dogs. Yeah, okay, dogs are going to be a little thirsty today. Me, I have like a
drinking from the dog bowl in
cocktail
Texas.
instead of a drink of water. So anyway, yeah, reusing the alpaca water. We don't have any alpacas though. They're too delicious. They're too delicious.
They're very tasty.
So what's because to preserve the bandwidth here at the ranch and make sure I can do the show, Nicky, what's Intel doing right now? We were talking about
up $4.40, a 5%.
Can't stop, won't stop. You need to have it at any price.
Just under 90. It was $65 a week ago,
and it was $40 a month ago.
That's what I wrote about in the Cherry Bomb last night, is basically the stock price doubled in the past month.
That's correct.
And after being an absolute dog, absolute dog, suddenly everybody thinks that Intel has the secret to semiconductors. And what's really, did you hear the news though about their bond offering?
Did not.
Yesterday, so for the longest time, everybody hated Intel. Intel couldn't get a credit card approved. Yesterday, they had
he couldn't get
they had worse credit.
American
They had
Express.
They had worse credit than him, and so they came out with they wanted to offer $6.5 billion of bonds, notes, whatever they are. They came in with $50 billion worth of bids. The thing was completely outbid for whatever reason, overbid.
Because America owns it. You own it, TP. It's America stock. It's in the portfolio.
By the U.S. military. I mean, you try to sell Intel, and you got F5s flying over your house.
That's right. You get black.
They call you a terrorist. That's treasonous.
That's why I put my bed frame up on bricks so I could have a little bit more room to hide under the bed.
You should. It's a good idea.
That's why I'm going on a little diet.
I thought you were going back to college or something like that. So, okay, now I know why. Okay.
Yeah, the old adjusting the old the bunk beds.
Yeah.
No, but it's true. It's become the Dallas Cowboys of the stock market, and America's team, America's stock. Everybody loves Intel. Intel is the new Apple. Okay, whatever. So yeah, I mean, I tried to sell a put in there this morning. I didn't get filled. I hate chasing stuff. I hate chasing stuff.
Yeah.
But the biggest, what perplexes me the most here, and I hate, and I was thinking maybe over the past couple of days, maybe crude oil has jumped the shark a little bit. Maybe crude oil has stopped being the market mover it's been for the past 2 months. Right now, we're supposed they were down, I think, about $25-$30 earlier today.
Oh, that only happens for 1 split second, TP. We're only down 6 now.
All right.
Gotta buy
this is because I can't see what's going on right now. And the point is, oil's back up over 100 at least.
104, almost 105.
It doesn't. The market doesn't care.
Yeah.
Nope.
The market doesn't care.
Yeah.
And I mean, Tony, how many times have we see crude oil bounce up above, $100 a barrel, whatever, and the market crashes? It's, oh my God, there's a shooting war in the Middle East, and you just start puking stocks.
Right.
Whatever. Okay, fine, whatever. And I just think maybe, Nick, you're saying now they're basically unchanged, and $6 on a $7,000 index is meaningless. $30 on a $7,000 index is meaningless. The crude oil has now jumped the shark.
Yeah.
I think they just jumped the shark.
Okay.
But so here's what I did in yesterday's cherry picks, and I want to do something a little bit different and take a look at, because some things really, really bother me. One of which, here in Austin, Texas, one of the larger, I don't want to say the larger companies, but one of the wealthier companies is Dimensional Funds. Right. Dimensional Funds is founded by it's a mutual fund family. It's founded by the guy who has his name on the quote unquote Booth School of Business up at the University of Chicago. When I went there,
congrats,
40 years ago.
Congrats, yeah, for sure.
When I went there, let's not talk about it, but when I went there, it was just a business school. That's all it was. There's no name on it. Then he goes in there. This is what pisses me off, Nick. You want to know what pisses off the old TP? It's this stuff. So he makes some donation to him, and they could now call it the Booth, the David Booth, the Booth School of Business. It's like, do you have any pride? Do you have any pride?
Hey, if you can put your name on the door, it's usually a good thing.
Yeah.
No, it's a good thing for him.
Yeah.
It's disappointing that the school did that, because it had a certain detachment. It used to anyway, a certain detachment, it was, super capitalists, the quote unquote brown water economics versus the schools on the East and West Coasts, that were a little bit more communist, whatever. Anyway.
Call it like you see it, TP. As one great communist, call it like you see it. I
don't hold. You know me. I gotta call them out, Tony.
Yeah.
So the point is, the fact that they slapped or Booth on there. Now they're with the Batista Business School. Okay, I get that.
Yeah,
I get the Bat Business School.
Yeah.
So anyway, they call it the Booth School of Business, and one of their highly paid consultants is none other than Gene Fama, who we tried to get on the show 10 years ago, and he's roundly rejected us.
Why?
No, I don't want to have anything to do with you. So stuff like that pisses me off a little bit. And Gene Fama, back when I was in school, actually, back in 1992, and if we go to the first slide, came out with this. So there's this been development of how to predict stock prices.
Oh,
okay.
And when I was in business school, whenever, the latest model had been created, 15, 20 years prior, the capital asset pricing model, CAPM. And it said basically a stock's return is the risk-free rate plus the beta times the market return. That's kind of what it is. Okay. And that stayed for a while. In 1992, Gene Fama and Ken French, two, economists, types, mathematician types of people, came up with what they call the three-factor model. based on what they saw for the data in, for the previous 10, 20 years or whatever they could get. And remember, in 1992, you couldn't just pull data off the internet. You actually had to work with a place like the University of Chicago that actually stored all the data, that collected it all. And if you went to school there, you could use it. If you worked there, you could use it. But it wasn't generally available. There was no Yahoo Finance where you could go and just grab stock returns, right? Or 100 other websites. So what they did is they created, so CAPM was good, and then they thought, okay, let's adjust it. So Nick, as you can see in this formula, the R, the return, is the risk-free rate. That's the RF. That the first third of that model, the beta 1, is CAPM. So if you go from R to the second parentheses of that RM minus RF, the first one, that's CAPM. Okay, capital asset pricing model. They still teach that to kids in business schools today. Finance programs, they still do CAPM. Okay. Mm-hmm. What they did, though, is they extended it out to include two more factors. The SMB, which is the small minus big, it is a factor for small cap versus big cap. Okay.
So they're making it a little bit more
value. Right? They wanted to capture, they thought, gee, maybe value stocks would outperform growth stocks.
Yeah.
The high cap growth stocks, like your
soon?
Yeah. Is this supposed to happen?
Is it going to happen soon?
Is it next year?
Do they have a time component in here?
Good point. Right. And the short answer is no. The third factor is book value. So high versus low value. So what they just use these as proxies. Remember, this was in 1992 when you didn't have you had computers, but they weren't that fast yet. Didn't have the data like we do now. So that's what they came up with. In 2014, they added a couple more factors to it. I didn't think that was that interesting. So what I did was took a look at this and I said, Tony, did small cap stocks actually outperform big cap stocks? And what I did was I looked at, for just as a proxy, because I was thinking about this yesterday, what can I do that's a quick analysis? I compared SPY versus IWM. And I know the research team, they've been talking about doing some stuff in IWM for good reason. It's a very liquid product, but this was just a fast way to do a compare and contrast. And if you go to the second slide, Tony, to your point, it didn't work. Okay. The blue line is SPY, the orange line, gold line is the IWM. And again, these are proxies. And somebody could say, well, TP, if you pick out these little smaller baskets of stocks for small cap stocks, they've worked better, the growth stocks have worked better. Okay, whatever. And why do I even bring this up? Because like I said, Dimensional Funds will hire or has hired Gene Fama as an advisor, and whole fund families are built around this concept that it's not just, hey, we don't just offer the S&P 500, we offer this theoretically advantaged fund that invests in growth stocks, lower cap stocks. And the idea is that they're lower cap for a reason. They're more volatile. Their cash flows are more volatile. The market punishes that volatility by driving their value down. In other words, they're cheaper stocks. And so they represent value. They have a higher chance of profitability. Okay, well, shouldn't that push the IWM up? The Russell 2000 is definitely a smaller cap index than the than the S&P 500. It didn't. And so for a while, this goes back to 2006. I just looked at 20 years of data. For 14 years of trading, they kind of held neck and neck. But then in 2020, the SPY just started to take off. And what happened then? Just like you guys were talking about, when is this going to turn around? This became the era of AI, of NVIDIA, of Meta, of Amazon, these huge cap stocks, okay, became growth stocks. So they weren't cheap little growth stocks. These were massive. These were the mega cap high growth stocks, and that's why the SPY has basically smoked the small cap stocks, the small cap IWM, over the past few years. It's up significantly higher. As you go to the next slide, then, what I did was I compared year to year, and the slide's a little messy, but you can see what's going on here, is this takes out dividends, so no dividends.
Okay.
That if you bought, let's just look at it, just the prices by themselves. And what you see is most of the time, Spider has outperformed IWM. This year, no. This year, IWM is outperforming, but for the past few years, either SPY has been up more or down less than IWM. Let's go to the dividends. Let's go to the next slide. Let's look at dividends. Dividends make it even worse. So the dividends add a little bit extra to the SPY because the SPY has, I forget what the actual numbers are, but the SPY has a higher dividend yield than IWM.
Yeah, what is it, like 3%?
Yeah, something like that.
Yes,
versus
it's
1%. It pays $1.80. IWM
for four times a year.
Yeah.
Yes, IWM pays like a little over 5/8%.
Yeah.
Right.
44 cents.
So so you get paid, and I'm not a dividend investor. I don't buy things for dividends. I don't like that strategy. I'd rather sell it out of the money put instead. Yeah. Right. If I'm a long-term investor trying to capture dividends, I'll sell puts. Yeah. But the point is, you can't ignore the fact that SPY pays a higher dividend, and that's been causing it to outperform IWM just on a total return basis. Go to the final slide. And this is where IWM return minus SPY return. So Nick, this is where you'd say, okay, we expect small caps to outperform big caps. That's the upshot. That's what that three-factor model and that whole Fama-French world wants you to look at, that small caps will, over time, outperform big caps. Hasn't really happened. Most of the time, a majority of the time, it is significantly underperformed. All those bars lower than zero, that's the SPY outperforming. Mm-hmm. The times when it has outperformed the SPY, it did pretty well. 2010 was a big year. 2016 was a big year. But like I said, once it started like in 2020, coronavirus, AI, cheap money, flooding the zone with cash and letting that go to these big companies and stuff like that. That just sent the SPY through the roof. And so the bottom line, is the model wrong? Well, it certainly missed the rally. Yeah. Missed the rally. And I don't think even if you added the two extra factors like they did in 2014, I don't think it would matter. Because it's still, go back to 2014. SPY still outperforms. Yeah. Okay. It's just the way it is. So here's the takeaway from this. Does the model bother me? No, it doesn't. You got to start with something. If that's the way you want to position yourself to trade, and you think the IWM is gonna rally more, okay, sell put spreads in IWM. You're still making money.
Right.
You're still making money, and IWM is a more volatile index. So on a dollar for a dollar of risk, you're collecting a little bit more premium. And if you're thinking about a pairs trade, okay, I'll buy IWM versus SPY for that reason, because SPY's been outperforming so dramatically. Maybe I'll just lean a little bit more towards IWM. Okay, no problem. I got no problem with that. But it also leads to why we trade the way we do. That it's not just, I have this model, and I don't care that it's 30 years old. It could be 2 years old. It doesn't really matter. I have this model that predicts stock behavior. It leads you to be very non-responsive. Okay? When we trade every single day, and we are not necessarily day traders, we don't, forget that whole, well, you guys are just flipping stuff. Nah, that's not what we do. That is you're thinking about it the wrong way if that's how you think about it. But if you base a long-term strategy on any formula, any theory, you're going to get stuck into things. And you're going to be waiting, Nick. You're going to say, when are the small caps going to catch up? When are the small caps going to catch up? As opposed to saying, the world has changed. I'm going to buy Intel. I'm going to buy NVIDIA. I'm going to buy, TSM. I'm going to buy the whole AI thing because that's where the money seems to be going. Okay. So that's why this is kind of a nice to know thing. I like to pick a fight with these genius economists. And that's kind of why I do it too. So are they wrong? Well, on a pure P&L basis, absolutely. On a theoretical basis, no. I mean, it's correct, but it certainly hasn't worked over the past 10 years, certainly over the past 6 years. So I would say if you have a bias, go ahead and sell put spreads and SPY. I have no problem with that. But if you want to position yourself for the underdog, sell some put spreads in IWM. Either way, you're probably going to make, well, I would say you're probably going to make money. But if the market keeps rallying, you're going to make money in both.
Good job.
I got some people in the chat asking, or at least a Taiwanese source saying that you do have a sign in the back of your fence that reads, if you can read this sign, you're in range. Can you? Yeah. You can confirm that.
Oh yeah.
Oh yes.
Yeah.
Okay.
And so it's.
I just wanted to put that out there. I have some people that are asking, is this true?
Nick, I got the tower. And it reaches out. I can reach out if I have to.
There we go.
And
all right.
And the other one of the front gate says, "We don't call 911."
Good.
On that note, I don't know what I could add, TP. I have no idea how I can save you. So I'm going to take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next, son?
We got the boys from the trade desk.
That's right. They're going to tell us what's going on in a market that's basically unchanged, hasn't moved, with some big individual stocks moving
realized volatility
exponentially.
Off the charts in some single name stocks.
Correct. We'll take a quick 90-second break and come back. We got more Tasty Live after this.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Switch to Tasty Trade and earn up to $3,000 in commission rebates.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live as even the S&Ps go green for the first time, I think, since about the opening at 8:30. Even the S&Ps up 75 cents. The NASDAQ have been up all day, up 115. Russell's been weak all day, down around 6, and the Dow has been weak, down around 200. Volatility has been sitting right here, basically unchanged. Bonds have been a little bit soft on the day. They're down 17 ticks. Bitcoin been hanging out right here, maybe a little bit higher than this, but hanging out right here. Oil hanging in there all day long, as it did yesterday too. But now it's made a high of 105 and change. You can see here over the last couple of days how it's been bid. Surprised by that move. Gold's equally surprised by its move lower by 57. Matter of fact, I got a little bit of long delta in gold, kind of hurt me a little bit. Silver is also down a little bit more than gold, but you know what? You know who's silver and gold in my eyes? This man! That's right. You.
Silver and gold, that's quite the compliment.
That is indeed. Thank you very much.
You know what that means, Q? You're precious.
Aw.
With the high bat. Did you see the high bat? I can't do it. I got glasses on, but he did it well. Batting the peeps. What's going on, my friend?
Yeah, so today's been a pretty busy day on the desk so far, actually.
I can imagine.
With some of these outlier moves, I mean, like Light up $90, SanDisk up $90, STX up $80, BE up $50. What? The MU up $18. Those kind of things, or is it the other things like this, like a coin down 15, or Lily down 15, or Hood
market volatility
down 11.
unched.
Palantir
all those
down
numbers
5.
you just named, market volatility unched
on its lows. Even the S&Ps unched on their highs. I mean, crazy.
Yeah, no, it's pretty weird. So a lot of questions about stuff like that. A lot of people are transitioning from the ETFs and indices, things like that, to some of these individual stock names that are, big movers and shakers. And then we've also got the Fed coming up later today, Fed announcement, even though the actual rate announcement is if you look at the CME Fed Watch tool, you can just search that in Google, CME Fed Watch, and it'll come up. 100% chance they're going to do nothing based on that tool. But it's never about the announcement, because the announcement is of the rate change is almost always priced in. Yeah. It's what is the forecasting going to be, things like that.
The question answer.
I think what I think it's JPow's last one. Am I correct on that? I'm not 100% sure, but yeah, I think it's his last one. And then we've also got people setting up for earnings as well. We got a lot of earnings coming up for a lot of the bigger, more actively traded names. So it's been a pretty busy day on the desk so far. It's an exciting day though, because recently, earlier this week, the market was a little bit more boring, not so much going on. But now we've got a lot of the individual symbols moving, and so lots of volatility there. Shifting positions from the indices like SPY and QQQ to things, like Bloom Energy. A lot of people were speculating car and things like that.
Bloom Energy. It's taken.
I know that's your
quite $1 for me. Quite $1. Size matters, and when something
it always
moves,
does, son.
Yes.
I'm trying to tell you this your entire life. It always does.
That one's a big one. That one's a tough one. I mean, but some of these that it's just, I don't even know. You can't even roll puts up. What do you?
I did it in the wrong account. Sorry.
Oh, what'd you do for me? We can leave it.
Okay.
It's a team game here. What'd you do? Sell a Strangle in bonds? What'd you do?
No, I just sold puts in bonds.
Wow.
Right. I'll try to get a tick better in my account.
Now you'll get a little bit better price. No.
Yeah, I'll do my best to get a better price just because yours is not as good as what I can probably do. At least I'll try here.
All right. I like it. We'll take it. Okay.
Sorry about that.
Sorry.
I traded in the wrong account. I do that from time to time because
the dementia.
No, I want to do price discovery, and it's just doing it in your account first.
You don't mind me taking
because in tight.
That's okay. All right.
Beautiful.
Sorry about that, Q.
Yes.
No,
Which
that's
earnings are you most excited about?
Yeah, well, I got to be honest. I'm really upset that I missed out on Tesla last week. So I'm chasing all the earnings.
What's
this
Tesla
week.
doing today?
So I know we've got Amazon today.
It was earlier.
We've got Amazon today after the close. We've got Google today after the close. We've got Microsoft, Meta. So all those things. Will I play all of them? Maybe not. Will I play some of them? For sure. Because I'm very upset I missed out on Tesla earnings. So, when it comes to earnings trades, a lot of the time we see our customers keep them small. Usually, it can a lot of the time be just sort of a shot that you have, whether it's selling volatility or taking direction. So, if this isn't part of a bigger thesis, you may want to keep those trades small if it is just speculation and engagement.
I think it's something like 50% of the market cap of the S&P 500 reports this week. So it's everything.
It is everything.
A lot of different trades out there that you're able to take.
Cool.
It's the moment we've been waiting for.
Yes.
All right, well, let's get into the list here. Top
let's do it.
symbols
Good job out of you.
System and their IVR. At number 1, a surprise here, Robinhood with 48, SoFi 23, Tesla 8, Intel 96, NVIDIA 46, Micron 82, Bloom Energy 46, GLD 37, SLV 32, USO 48, Microsoft 102, Amazon 56, Palantir 37, Visa 42, STX 85, Starbucks 19, SNDK 83, AMD 78, Meta 73, and Qualcomm 93.
Beautiful. Good job out of you.
Yeah.
Great job out of you. That's
Great.
what I'm going to say.
Amazing.
Thank you so much.
You're so welcome. You're so welcome. But now I'll let you go because if you're busy, it's time for you to go because I got a guy here who's not busy ever. Coming up next. Are you ready? I kid because you got to get used to this because you're going to be my co-host when Nick is out for a couple of days.
Oh.
Yeah.
That's
I'm bringing in
big
the lefty. That's right. Everybody was waiting to put their whole lineup for a righty to come throw in softballs. I'm coming with the lefty.
See, the last time I allowed this,
allowed this?
She became his favorite child. So this is
this
your
is true.
spot where you can now, take another step ahead of me. Because Katie's number 1,
Yeah.
Vinny number 2.
Yeah.
Vinny number 1 now, Katie number 2. The rest of the children, and then me at the bottom.
There's an opening.
There is an opening. There
Yeah.
is an opening.
There's a lot of truth
for our
to
Brady
this.
bunch.
There's a lot of truth to that.
Yes.
There's a lot of truth to that.
I'm looking
sorry.
forward to it. I'll finally have something to do.
Good.
Be
good.
fun.
Good. I want you to look forward to it. I'm gonna have fun. Anyway, talk to me. What's going on with this crypto?
Yeah, not much has changed, guys.
I mean,
since
Robinhood. I don't
Monday.
know. Robinhood came out with the earnings because their crypto volume was down like 50% or something. I'm just rounding. I don't know I don't remember the exact number.
I mean, it's what we've been talking
Should
about.
come as no surprise,
Yeah.
right? You generate revenue on trading activity. If the price does not change, there's unlikely to be a lot of trading activity.
Yeah.
I would imagine that you see some of this reflected in the price of coin and other exchanges that are publicly traded. I haven't even looked at coin today.
Down $14, $179 here.
Yeah. So maybe with both of these, any of these, I don't think crypto is the only thing that matters to Robinhood, but certainly it's a huge driver for coin. Coming out of that, though, maybe you get an opportunity to buy this lower if you think, again, that crypto prices are going to go higher or get more volatility at some point in time. They are very positively correlated coin and Bitcoin.
Yeah.
Okay.
Yeah, I mean, Bitcoin sitting here at 77, relatively strong in the session. I mean, we sold off a little bit over the last couple sessions. You were mentioning 80K as kind of a spot, and that was kind of the top. It's been very mechanical.
Yeah, it's just been, it's been really low vol. It's been boring. We're seeing implied volatility ranks for those that have options, Bitcoin, Ethereum. They're near the lows on the 1 year. They're pretty much at the lows for the last 3-6 months or so. At some point, that's going to change. But today, it is what it is. So those ranges have tightened up. We can talk about them in just a second. There is one coin that is outperforming here. So if we jump to our performance, the stuff that I track.
Coin? No.
Damn.
I don't track Fartcoin.
Oh, man.
Might have to start.
I just allocated, okay? I just bought the dip.
Well, fingers crossed.
All right.
Hang in there.
Yeah.
Hang in there. You'll be all right.
Here's what I am seeing, though. A couple things. The indicators that I track, what I pay attention to for what it's worth. If we could throw up our performance dashboard on the screen. A couple things to call out. Pulled back here over the last couple of days. So your 1 week is a little bit mixed, as we've talked about, bearish trend in there. So nothing changes until you're in positive territory. On a 3-month basis, in my opinion, the moving averages I track is just indicators. Solana, XRP have slipped back to neutral. They were bullish. So like we said, the theme is Bitcoin over everything, relative performance. That continues to show up until that changes. I don't think you're kind of looking at allocating at Fartcoin. No offense. That said, bright spot, Doge.
Well, but that is Doge and Fartcoin. That's like,
similar.
You're right there.
Yeah.
So maybe I am early. Maybe I bottom ticked it.
We got to keep an eye on it for sure. Up 12% in the week. If that holds, up 18% on the month. I mean, that's notable. Still need to get into positive territory with the trend, but it is outperforming Bitcoin. And we did see an up move in price. We saw an increase in vol, which is typically what you want to see or might expect in crypto, especially in some of these meme coins. But yeah, let's keep an eye on Doge, but it's a bright spot. We saw that on Monday it was up 1.5% versus Bitcoin, doing a little bit better here today.
Is that do you usually see the Doge basket move first before Bitcoin, or is it Bitcoin first and then they kind of all?
It's typically Bitcoin first. I think this is some noise.
Because that's what I'm
kind of random.
Yeah, like if you get,
there might have been a headline. I don't know.
The huge move in Bitcoin is usually the first part before alt season. You don't typically have the alt season before the Bitcoin season.
Not typically. What I would look for, right? We've talked about this quite a bit. Bitcoin market cap dominance. It's like 61%. I want to see that come down. Just some indication that people are allocating elsewhere.
Yeah.
If most of the money is just flowing into Bitcoin via ETFs, it's tough to have alt season.
Yeah.
So what else might you need to see before alt season? Well, I'd want to see the biggest and best alt, in my opinion, which is ETH. I'd want to see that take out an all-time high. That would be like a starting
or just go
point.
somewhere.
Right.
Just move somewhere.
It's 50% off of the all-time high.
Right.
Yeah.
So I would want to see that first before I get all excited about my dog coins and my frog coins and everything else. They can be volatile in between, right? You can have a day that gets your attention, a week that's up 20, 30%. But if you're going to be in that sort of volatility, you're probably playing for more than 20 to 30%. You can get 20 to 30% in Bitcoin still.
Yeah.
I think. So that's a look at performance. Let's take a look at vol, expected moves, and talk about anything else that you guys want.
Sure.
Yeah, let's get to oil too. I'm interested on your
We can talk about oil. We're seeing it show up in the data as of 20 minutes ago.
Oh, okay. In the inflation data?
No, in terms of, we were talking about what are you going to see next? Product draws, inventory draws, right? There's been this buffer. The U.S. is a major producer. Well, you're seeing that in the EIA report that just came out.
Okay.
So
draining the SBR now?
We've been draining it. Globally, there's been a 400 million barrel release that's been coordinated. But let's get to that in a second.
Okay.
All right.
IV is lower. Realized vol is lower. What does that mean? The ranges tighten up, of course. Still looking for 80 on the upside in Bitcoin, which is exciting. ETH, we need to take out 2,500, as we've talked about, not really being priced in on a forward basis over the next week in vol terms. Solana hasn't moved. Put Doge up there. Maybe you get to 11 cents. You might be there already. XRP is doing nothing as well. So that theme, again, it just remains consistent. Bitcoin over everything. There's no volatility until something changes. Not much to talk about. And as you guys know, this rally in the market, this rally in crypto and elsewhere, that could change in a second as soon as some headline comes across.
Yeah.
It's very quiet out there.
It's so quiet. It's so quiet.
It's not going to stay quiet.
It seems like if you can move, the memory stocks $1 trillion in like an afternoon, if you really wanted to get
I didn't think I would see it in my lifetime.
If you really wanted to get goofy, you could start moving Bitcoin and you could get some fireworks. I feel like you
won't see the headlines like that. You only see the headline on the way lower when we go down by 4 or 5% that we've wiped out. that's the fear thing, but you don't get the FOMO thing, which I think this is a lot of FOMO going on right now, where like, we've just added $1 trillion to the market, risk on.
Yeah.
Now, I do think that the path of least resistance is the hardest pull in the market. And we've been saying this for days as we've been going nowhere. Stair-stepping-ish higher, but really going nowhere, 20, 40 handles from around the mean of where we've been, that upside for the rest of the market, like it's such an easy sale here that I think that's the wrong move. I think, you probably have a little bit of move to the upside still. Maybe after all of these earnings, and I know we're talking crypto here for a minute, but I know after all these earnings come out, then maybe you see what's going on.
Yeah, get a little bit of clarity. But until then, I think it's largely driven by the volatility breakdown, right? If you're sitting there and you're waiting to invest, there's this uncertainty on the geopolitical front. VIX is at 30 and now it's at 18, 17.
But there's no volatility anywhere.
There isn't. But I think that incites those flows that otherwise might just sit on the sideline for a second. It's investable again, I guess, versus like, oh my God, what do we do? It's at a 30, in the chop. Doesn't mean that you can't get whipsawed, but I think to your point,
we just did a segment on whipsaw earlier today, so you can check that out.
But it's a weird, the oil volatility. Oil volatility is up 2% today. It's at 72 on OVX, which is not high, which is basically the lows we've seen since the war started, or right around there.
Yeah.
You have market volatility at lows. You have crypto volatility at lows.
Bonds on lows.
Bond volatility at lows. You have gold and silver
price on lows.
Gold and silver volatility has come in significantly into this pullback. It's like, are we back to like just grind? Like, is that what
I don't think so. I think that this setup has a bit of a floor in vol terms, right? If you talk about oil volatility, will you come off of 110, you're at 70. Is it going back to 30? I don't know. We haven't had those major moves, but you're still moving $4 or $5 a day.
Yeah.
So I think there's a floor in vol. As I've been talking about over the last, at least with crude oil, I've been talking about selling volatility over the last couple of weeks. You made some money on that trade. That's worked. Generally speaking, it's kind of just floated higher. It hasn't been a violent move. But I do kind of question, how much more juice is left to squeeze, so to speak, in that.
Yeah.
I think you got to grind, Nick. I think you got to grind higher.
You think so? It's just wall of worry? I mean,
look at anybody who's, any of these stocks and or the market goes down, I think you're going to get that, like, that sell off that, okay, we had the top, I need to jump on here. Public always risks on, risks off at the wrong time. I think they'll risk off at the first move lower.
Yeah.
And we get that bounce back. And if you don't get that move lower, then you just kind of grind. You get those people.
Well, I think that's a little bit of what yesterday was. Like
how hard is it to sell puts here? Volatility is going lower. How hard is it to get directional bias to the upside? Volatility is going lower. You haven't chased prices. If you haven't chased prices 2 weeks ago, you're not, and I'm not going to the lows, I'm going to just before the highs. If you didn't chase then, can you chase now? It's almost like
you have to get delta now. You have to just like buy shares or like buy, futures, and it's a hard buy.
It's a hard buy.
Because you can't sell the puts to your point.
That said, I have my lightest positions that I went to bonds today for option trades today. So,
Oy.
Tough market.
Yeah. So no chance it's to buy the rumor, sell the news.
In terms of
the market,
just the equities.
Yeah.
No, I agree with Tony in that, like, the setup is there. You got some economic data that's been somewhat positive. There's reasons to buy in here. Volatility's coming down. I'm specifically talking about oil vol.
Yeah.
Given the setup, I'm not quite sure it's going to go a lot lower given what you're starting to see show up in the data. But no, I think in terms of where you are with the economic backdrop, you could easily float higher here. Maybe earnings upset some things short term, but it probably gives people a reason to buy in that missed a bunch of this recent rally.
Sure. It's a resilient market.
That goes to your point. You're not going to get a chance to like buy a dip, or they're going to make it hard for you to at least buy a dip.
Resilient market.
Yeah.
And boring markets like this are creepers.
Yeah,
they never sell a creeper.
They're like a little.
Yeah, but I hate it that we're at all-time highs talking like this.
I know. It's unbelievable.
I'm going to let you go, my friend. I'm going to let me and my son go also, or my son and I go if we're speaking English, I guess. Even the S&Ps are down 2. NASDAQ's up 130. It's a 0.5% move higher. Russell's down about 0.5%. The Dow is down 0.5%. Ivy ranks in all of these are relatively high, good for trading. Bonds 112, 28, 29, down 21 ticks. Bitcoin down 400, hanging in there. Hasn't had too much movement today.
Day.
Wild
day.
I did not think that I would say oil up $5, market unchanged. I didn't think I would say bonds down 20, market unchanged. I didn't think I would be able to point to stocks to the upside like SanDisk, which has been a market leader. I mean, say what you want. I mean, it's definitely been a market leader here. Down up $90, market unchanged. Visa up $28. I mean, this is Starbucks. I mean, I don't know. Didn't think I'd be saying these things. Market unchanged. So
yeah.
Let's take a quick 90-second break and come back. We got more Tasty Live. Liz and Jenny, probably right on the floor of the SIBO, are going to have the insight.
It's always
electric when the ladies
always electric when the ladies are live.
We'll take a quick 90-second break and come back. We got more Tasty Live after this. Peace.
Peace.
To the Liz and Jenny Show. My name is Liz. Sitting to the left of me in the beautiful red shirt is Jennifer Andrews.
Happy Red Shirt Thursday, everybody.
The Liz and Jenny Show is probably my favorite hour of the day. It's somewhere where I get to be with one of my best friends that I've known since I was 14 years old and do something that I love. People get to take a look at how our minds work as ex-floor traders now transitioned into self-directed investors.
You know what's hot? Earnings. We are right in the middle of prime earnings season.
Well, we've got a big dog, Netflix.
Do you know what he did? And we've got those cards with us, and we're going to keep them on us at all times. He made us each certified badass cards.
He brought me the card, and I am no longer afraid to trade anything. Just try it, Liz. Any Strangle you want to put on?
Certified badass. And you know what? When she gets out of her comfort zone, I'm going to hand her mine.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
everybody, and welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette to the left of me is Jenny Andrews. And what's going on in the markets today?
SPOOs are down 3, not too much. Everyone is waiting. We have a Fed announcement later today, and earnings. Did I say earnings?
Earnings, more earnings and earnings. They're all announcing today. So, not all. There's not all, but there's some big money that's going to be moved after the market today.
Oh, yeah, lots of earnings announcements. And before that, the Fed announcement. So at 2:30, we'll be on last call. So we'll be on right in the middle of the action. We'll see if the market moves.
It could be JP's last meeting.
I know. And we're going to miss it. I usually like to watch. We're going to miss it. I'm going to be on last call.
I was joking, but we're going to play the audio during last call. We'll be fine.
Instead of our show, we'll just air him.
No, it'll be fun to be on last call. We're on last call today on a Wednesday versus Tuesday because yesterday, Jenny and I got to ring that bell.
Oh my gosh, it was bucket list check. It was so much fun ringing the bell. We had a great time. Yeah, why don't you pull up? I posted a video on Twitter. Do you want to pull it up?
Sure.
I don't know if
will it play? No.
I think you gotta. Well, this is exhilarating TV,
but
it's there. If you're on Twitter, I posted on our Twitter page. Also, we're taking live tweets. Include the hashtag LIZJNY.
Jenny, right? The hashtag is right there, but the video is not playing.
It's just loading. But the hashtag LIZJNY. If you want to post a tweet, put that on there, and that's what we're taking a look at. Any tweet that has that hashtag. You could see the video. We had a wonderful time ringing the bell, and we keep laughing because
our personalities came out with the bell ring.
Yes. Liz is very speedy, and I'm very slow. I'm very slow and calm. Liz is very
We laugh because the bell, I rang first, and I went 1, 2, 3, 4, 5, and then Jenny comes up.
No.
1, 2, 3, 4, 5, and then Jenny goes 6, 7, 8.
Liz was ring that bell so fast. My head was spinning. It was so loud, and then I just rang the bell. I pictured myself in the bell tower, like in the Hunchback, where ding, 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 ding. That's how a bell ringer rings the bell. Here. That's how I envisioned.
We were laughing too because afterwards, the audience is clapping, so I'm clapping with the audience, and Jenny's waving.
Someone was waving to me. Someone waved to me, so I waved back. That happened to be the piece that was clipped.
But nonetheless, our personalities did come out, and we had a wonderful time. We want to give a huge shout out to the SIBO, who lets us come here every day and film, or every twice a week and film, and for all the things that they did back there. It was awesome. It was such a fun time.
We had a good time. Liz was asking for a mic. She was going to get the crowd wound up. Luckily I know trader symbols. They were betting on how many times we'd ring the bell. So I signaled 8 to my buddy. I don't know if we made some money because I told him we were going to ring it 8 times, but Liz went 1 extra and we rang it 9.
I was never 4. You said you were just going to bet cleanup.
So I don't know, 8 or 9. I don't know what won in the pit, 8 or 9.
Well, definitely 9. I was 5 and you were 4.
I saw money changing hands after we rang the bell. There was lots of betting going on.
Yeah, they will bet on anything back there. And especially on a day like this because nothing's going on.
I wonder if that is on or could be on some of those
prediction markets,
prediction markets. Right, poly markets. How many times they ring the bell?
It could be.
You
can bet on anything.
But that can be totally fixed.
We got to go to that bar in New York City.
That can be totally fixed. I fixed it yesterday. Tried to.
You tried to.
Tried to. All right. Should we jump in the platform and see what's going on?
Yeah,
we have a busy day.
We have to clean up some earnings trades from yesterday as well.
Who's down 7 now?
That's still really a nothing burger. So we did a couple earnings trades yesterday. First, we did not do this, but we have to talk about it. Bloom Energy is up.
Oh my!
$2.51 right now. It is trading $2.78. That is insane.
It's up 23%. That is a huge move for Bloom Energy. I wish we did the diagonal, but it was just too expensive for us. It was $1,600. $1,600. We were doing earnings diagonals, and we said, if 51% of the stocks have gone up on earnings and 49% have gone down, if it's close to 50-50, if we do them on all and we're risking, a third to make 2/3, it would work out. But what we did, I think the 2 down ones, and Bloom, if we would have done Bloom Energy, that would have made up for all of them.
It would have, but it is too expensive. We also did it Microsoft, but that's our earnings trade for today.
Tonight,
so look at those.
Yes.
So first on deck is going to be SoFi, right? Is that the first one up there?
So
SoFi, we sold the 17 put in SoFi yesterday. It is trading 16.08. No harm, no foul, but let's roll that
But
up
it's
time.
down a decent amount. I mean, SoFi down $2. That's down 12%. It's a big move for SoFi.
It is a big move for SoFi.
We have short puts. What happens with the short put list? Let's see it. Let's see it.
So what? So
we're gonna teach the naked put dance. Okay. Here's the zero bar on the P&L graph.
Yep.
Here's the credit you're taking in. This was the 60-cent credit we had on those SoFi puts. Stack goes down. Because this is what a P&L graph looks like of a naked put. The stack goes down. So what? Because now you're long the stock. And then here's the P&L graph of long stock. So there, everyone's gonna learn the naked put dance. Stack goes down. So what? Now you're long the stock. We taught that to everyone in Germany at the RMC.
We did.
Yeah. We had the whole dance floor doing it.
I don't think they knew what we were doing because they couldn't hear us, but we're just like this.
I mean, the naked put dance, it's all the rage. You go to a dance club in Germany now, everybody's doing it.
The silent discos. I'm in there like,
funny. Okay. All right. Back to management of this SoFi put. So if we're
technically not long the stock yet. So, I mean, I know we just had the dance, but it went down. We're down a little bit of money. Worst case scenario, we would be long SoFi at, what do we collect here? 59 cents. We'd be long it at, 16.40.
Okay. Now, I said, so what? Now we're long the stock. Synthetically, we're kind of long the stock, but we'd be, if it ran up at 17, we wouldn't make any more money after that. We could let this go, leave it, and put the stock and take 100 shares of SoFi. Oh, I did this piece on the wheel, selling puts, getting put the stock. Yes, there's a $5 exercise. There's a $5 exercise fee. That doesn't bother me. I know there were some questions and comments in the chat about the yes, there's a $5 assignment fee. If I left that put, took 100 shares, it cost $5, and that assignment fee, it doesn't really bother me that much.
No, it doesn't. But we're traders. We'll probably roll the put out instead of take the stock.
Yeah, sure. We can roll the put out. That's always a choice.
So, I mean, honestly, this has 16 days left. It's a synthetic covered call right now, but we're just going to close that position, close your existing put, and then hold on, let me do it.
But when we go to June, I'm not going to worry about what put that is. I'm going to worry about if I were long the stock, what call would I sell? And when I take a look at what call would I sell, that's the put I'll roll to.
It's pretty easy in SoFi though, because it's cheap, so you roll to the same strike.
Okay.
So 17 to 17, we're taking in another 50 cents.
Not bad.
Right, I'm rolling it out to the June with 50 days, 17 to 17. But to your point, it didn't have to be 17 to 17. It could have been another one. If you had the stock, what would you sell?
Right.
But this just happens to be where we would land.
So roll it out to 17. We took in 60 cents with the first put. We're getting another 50-cent credit with this roll. So we've taken in $1.10. If we're short that 17 put and we've taken in $1.10, our cost basis in SoFi is 17 minus $1.10, so $15.90. So we got our
under where it is right now.
Under where it's trading right now. So even with this 12% down move, we're still not in bad shape.
No, we are not in bad shape.
That's what options can do for you.
I like it. So SoFi's rolled out in time.
What else? I hear some noise back there. Trying to hear what orders are coming up.
What else did we do yesterday?
Okay, so besides SoFi, we did Hood. That is.
Oh, that's another one.
That is no bueno.
Yeah, no bueno in Hood. Okay, so Hood is down a lot. So, we had Bloom Energy that's up 26%. We have these other ones that are down. Hood is down 13, almost 14%.
Yeah, SoFi was down 12%. Hood's down 13%. These are all beyond the expected move.
Oh, well beyond the expected move.
So with Hood down to 70, I said we would put on these bullish diagonals, and if they didn't work out, we would get our money back by selling puts. So we paid $3.70 for this. There's 43 cents left. Do you close it and take the 43 cents or do you leave it?
I was just looking at that. For 43 cents, I might leave it.
I'm going to leave it.
Yeah. But so we're going to sell an additional put. So do not be confused by that. We're leaving this only because there isn't much value left in it. I mean, can it rise? Sure.
Well, I mean, if something, again, I think the bad news in Hood was the crypto end of it.
Yeah.
And if something big happens in crypto in the next 9 days, this could come back.
Yeah, they said crypto revenue. So right. I don't necessarily.
Crypto revenue. Yeah. So let's just leave that. We don't need to sell it for the 40 cents and go to June and sell a new put. And if we paid $3.70 for this, and I want to get that $3.70 back,
you could sell the 70 cents for 60. I'm sorry, the 70 put for $6.
You could sell the 70 put for $6. I personally sold the 65 for about $3.85. either one. You can get aggressive and sell the 70 for $6. We can sell the 65 for $3.80, $3.85.
I was just thinking 70 because if we do that, then we can put it in for 50% and it's no harm, no foul.
Sure. Yes. And I wonder.
I mean, I don't think there's a right or wrong here. You can go however you want. It doesn't matter how many months it takes you to make it back.
Exactly.
That is not what we're saying here. There is no 70 is right or 65 is right. You can do whatever you want.
And I don't want people to think of, oh my gosh, I lost $370 on that diagonal. I need to make $370 back right now.
No.
Because you might not be able to get it sometimes.
No.
It might take 2 months. It might take 2 cycles or 3 cycles.
Or 4. Sometimes it takes a little while depending on how much you lost.
So if we eliminated that $3.70 that we paid for that diagonal, if we removed that, if we took the mind eraser shot and removed that from our mind and just looked at this fresh set of eyes, June 50-day options in Robinhood, what put will we sell?
Is there really a mind eraser shot?
Yeah, I think there is a mind eraser drink.
What is it?
I don't know.
I remember Samantha put it on Twitter for us, but next time I go to a bar, I should ask while I was on the Kentucky campus. I'm going to ask for a mind eraser.
I mean, when I'm selling puts and products, I always say I need a mind eraser because it's hard for me in certain stocks. Like McDonald's was one of them. When I sell puts when it was 90, 95, 100, it was hard for me when it was 200, 300 to try to jump in and sell puts. That's when I needed the mind eraser.
The mind eraser. We're going to get some of those. The next time I go to a legit bar with you, I mean, I'm not talking like a nice restaurant because we can't walk into like a fancy restaurant and be like, we'll take 2 mind erasers.
Okay. Something tells me if it's called a mind eraser, I don't want to drink it.
I don't take shots at all. I just want a picture of it with you.
I don't even know. So take shots. I don't even know.
Take shots.
Is that what they say? Take shots?
You want to take a shot?
I guess so. I don't know. I don't like shots. I don't like hard alcohol. I don't drink vodka. I only drink wine, I would guess.
Yeah. So I drink Prosecco, except for when you're on a college campus, I drank straight up beer because it was easier.
Oh, I'll have a cider every now and then.
Yeah.
If I have no choice but a beer, I'll have a cider.
So, but if we ever go to
I'm never drinking a mind eraser.
If we go, no, we have to take a picture with it. We're going to buy 2 of them and just cheers. We're not going to take it because anytime somebody hands me a shot, it goes over the shoulder.
Oh my gosh! Every time I work at a fundraiser on a golf course, and all the golfers come up and they've got drinks in their cart and they're pouring shots and they give me all these shots. Every one of them.
It's so much easier to say thank you.
Thank you. That was wonderful. Great. Loved it. Loved it. Okay. So mind eraser. We had no position going to June, selling a put and hood. What put would we sell?
Probably the 65. Oh, actually, if you had no put, you'd probably go to the 60.
Yeah.
Either way.
Yeah. Let's meet.
We'll split the difference and we'll go 65. I'm gonna flip it.
Because that's a decent credit.
There's 2. This is not that it matters.
She got very excited. I can't wait to hear what you're about to tell me.
How much the 75 holds up $1,300, or the 70 holds up $1,300,
and the 65 only holds up $800.
Yes,
I know.
That's the clear winner.
That's kind of what I think.
60. The 60 only holds up $600 to get 2. That's a great return on capital. That 60, you get $227 for putting up $600.
I feel like Robinhood's back in play. And I don't want to say it wasn't in play, but for me,
That's a really good return on capital in the 60s.
When Robinhood was 130, 140, I wasn't in it as much. But now with it at 70, I think it's back in play for the option trader.
I sold it. We got filled on the 65. I mean, honestly, that 60, I might have even started at the 60. I would even ladder those. That is a very good return on capital.
As far as buying power.
Yeah.
This is one of those I might make a phone call and say, hey, okay.
Ghostbusters. Who are you gonna call?
Let me see. Let me think about this. So the 65 put, if you take the stock at 65, that's $6,500 in notional value, $3,200 in margin is it should use $1,200. It should use $1,200, 20%.
And it doesn't. Well, the 60 only uses 600. That's 10%.
It's 10%.
That's very easy math.
They're giving really good margin out on Robinhood.
It's very easy
days.
math. The 60 put uses $600.
10%. 10%. The margin police they need a phone call.
Do not alert them. Do not alert the authorities. So that's all right. Yeah, that's good. Hood is done.
So Enphase Energy also had earnings. We don't have a position, just taking a look. That is also down 10%. So
wow.
We had down.
Yeah.
Was Bloom Energy the only up earnings trade yesterday?
We didn't even look at Bloom Energy on the show.
We looked at it. We looked at it. It was $1,500 or $1,600, and we said it was too expensive. It was too expensive. Do you have that earnings list?
Thank you for asking.
Okay. SoFi, AbbVie, Starbucks.
Bloom Energy was not on here.
No, it wasn't, but I knew it was coming.
I think we looked at it at lunch.
No, but on the show, we looked at the diagonal, and it was $15 or $16 too expensive. So Starbucks,
Seagate Technology. Seagate Technology was the CEO of Seagate Technology was on CNBC when we were ringing the bell.
Oh, really?
That's who it was. They were talking about Seagate Technology's earnings.
Oh, what did they do? Let's go. Let's take a look. Go back to the platform. STX.
And we have to do our study. We have an amazing study.
15%.
Yeah.
Well, look at that. 666.
Dun, dun, dun.
I don't know. And Starbucks, SBUX. Ooh, that had a big move too. Up. I didn't see that coming.
These are all big moves.
Yeah.
Thank God I took off our reverse Starbucks trade.
Yes.
Mm-hmm.
Yeah.
This would have been hurt. This would have been painful.
It would have been. Okay. And then AbbVie, ABVI, right? ABBV.
It's ABBV.
ABBV. AbbVie.
Up 2%. That's the only one acting normal.
I mean, honestly, if there's someone just selling strangles, they were all pretty big moves.
They were all, I think they were all basically outside the move, except for AbbVie. It probably stayed in there. Okay. We kind of alluded to this. There's a lot of earnings that are tonight. We know they're coming up. We're going to take a look at these. We'll do some of them today, and we'll do some of them.
Oh, Reddit
in last call.
I used to trade Reddit all the time. I haven't in months just because I forgot about it.
It's Thursday after the close.
What's today?
Today's Wednesday.
I've been off a day all week.
I know you have. I was like, we're not trading Reddit today. Old. So today we have Alphabet, Microsoft, Amazon, Meta, Qualcomm, Chipotle, Ford, Caterpillar, Bristol-Myers Squibb, Lilly, MasterCard, Merck, and Royal Caribbean.
Oh, there are so many. That's what I said. We could do half today and half in last call. And we still might not get to them.
And we still, but it is a Wednesday, and it is now 10:17.
Oh, 10:17. I think it's time to start our YouTube special of the day, Liz. Are you ready for it? Are you ready? We have an amazing study from our in-house genius, Jacob.
You ask, you shall receive. Today we're going to be talking about short-term jade lizards in SPX. Now, Jenny and I are in the SPX pit right now. We're at the SIBO's famous SPX pit. That's why we are doing these studies here.
Yeah, so we are in. So the SIBO is located inside the Chicago Board of Trade building, and there's a lovely new, new-ish museum in the Chicago Board of Trade building. We tried to walk through it yesterday. It's very nice.
It is nice.
And then the SIBO floor here, SPX pit, is inside that building. It's a great place to be. We see Chicago visitors on tour every day.
Oh, well, the architecture in this building is amazing.
Yeah.
They can't come in here.
No, not here, but in the building.
Yeah,
in the building. And it is really cool. It's a very cool building. Short-term jade lizards. Liz started doing these maybe 10 days ago.
A little bit longer. Yeah, a couple weeks. I've been doing them for a couple weeks, and I've been trying to put them on in the 7 day. So Jacob's great because he gives us, we'll go into the study. I've been doing short term in these. I like them. I have them on. But once again, I have a lot of SPX positions because Jacob has brought us a lot of other things. I've still got some of the other things that we're doing in there. So let's go through the results of the short term.
Okay, so Liz started doing these a couple weeks ago in SPX, going out about 7 days. And then you asked Jacob, can you do a study on this? I just started doing these and I want to see the results. And I love this. He didn't just take your 7 day. He looked at a 5 day. He looked at a 7 day. He looked at a 10 day. And I love that he did this for us. And I think everyone has really been appreciating these SPX studies because so many people are trading these 0 day. And now these are 5 day, 7 day, 10 day, a little bit further.
They are a little bit further, and you get a little bit more credit for everything that's 5 days, 0 day, 5 days, 0 day, 10 day. And so my results, like I said, I've been, not Jacob.
Oh, your results are only 2 weeks. He's going to take 3 years.
My results are 2 weeks, and I haven't, where's Wood?
Your arm's not long enough to, here, this is what.
I have not had a losing trade yet, and in my opinion, and it's funny because this kind of edifies it, they've been off in about 2 days ish.
Okay.
Okay.
Now here we're going to have 3 years of data, so I think that's going to be, and I love that yours have been winning for 2 weeks, but 2 weeks just isn't enough.
Oh, it's not big enough.
Yeah,
right, and that's why I love it. So something that I've been doing, we have the ability to say, Jacob, tell me what I'm doing wrong. Because remember, that's what you and I used to do all the time. Tell me what I'm doing wrong.
Not even tell me what I'm doing wrong. Here's a strategy I started doing. Tell me what the results are over the last 3 years, as long as these, and honestly, since these are going out 5 days, 7 days, 10 days, I'm kind of curious how many years of data he used because he could have gone much further than 3 years.
But in the study, it says when it becomes the 0D.
Okay.
So it's a 0DT study we're springboarding from. All right. But here's the study. Zero DTE options have never been more liquid or accessible, making them an increasingly popular venue for active premium sellers.
That liquidity makes trading a wide range of option strategies smooth and efficient, from simple put and calls to iron condors and beyond. That's how iron condors and beyond. Here we go, jade lizards.
The jade lizard is a skewed iron condor with a wider put spread structured so the total credit collected covers the call spread width, eliminating all risk to the upside.
The explosion of activity in zero DTE options has also breathed new life into other short-dated expirations in the right underlyings. 1 and 7 DTE options now offer liquidity that would have been hard to find just a few years ago.
It's true. I agree with that. And today, let's explore how everyone's favorite bullish neutral short premium trade performs when trading the closed expiration. My favorite.
I love it. I love it. And it's kind of crazy how we haven't been doing this longer. Just a couple weeks ago, you said, hey, I'm going to start doing these jade lizards in this short term. It's weird how we haven't been doing it longer.
So, but I had to go to the 7-day in order to get far enough and cover my costs.
Yes.
So that's why, I mean, I would love it in the 0-day. It's a great study in the 0-day, but I was just too tight.
Right. Your short call and your short put are just, you don't have enough room in between.
Correct.
Going further out gives you enough, allows you to cover the width of that call spread, gets your put spread far enough where you feel comfortable.
Yeah, but it's still pretty instant gratification. There we go. There's a big order.
Big order.
Okay. Here's the study. Using over 3 years of data in short-term SPX options.
Considered selling 7 DTE jade lizards with short strikes at the expected move and either $20 wide put wings and $5 wide call wings, or $30 wide put wings and $10 wide call wings. So you've got a $5 wide jade lizard with a $20 wide put spread, or a 10-point wide call spread with a $30 wide put spread.
Now, I will tell you, I vetted these too. So the $10, $30, you're not quite covering. You've got about $7. In the $5, $20, you cover it. You're at $5.
And again, this is a study. He had to put parameters. He's putting his short strikes at the expected move. I've put these on, and sometimes I have to bring my call spread in a little bit. My short call might not be all the way to the expected move. It might be in a little bit, but I don't care because I'm collecting over the width of the call spread, and it doesn't matter if I bring it in a little bit.
So I'm glad, like I said, I've been doing the $5, $20. That's my go-to move, and that's why he started with that one, and I love that he put something else on there, because there is you can get a little bit more credit with the $10, $30.
Yeah. Okay. Winners were closed at either 25 or 50% of max profit, with trades being checked at the end of each day and then every 10 minutes throughout the day on the day of expiration.
Okay, so wait, only at the end of the day, at the end of each trading day. So they don't have an order in as resting order for 50%.
Well, I don't know.
That's fine, because you do
close at 25 or 50% max profit, with trades being checked at the end of the trading day.
And that's fine, because it's neutral to bullish, meaning you've got both sides. That's why I just wanted to be very clear on this. When you've got both sides, with a put spread, you can get out in a short pop. When you've got both sides, and I've noticed this, you need a little bit of time.
You need some time to pass.
So that's okay.
We know theta gets bigger and bigger and bigger, greater and greater as we near expiration.
Yeah.
So if this is starting at 7 days, the theta is big on these already. And if at 6 days, it's even bigger. And at 5 days, it's even bigger, which is why you can get out of these so quickly.
Yes. But it does take time. I've never put one on and gotten out of it that same day.
No.
I've never just sucked the vol out of everything.
No.
It doesn't happen like that.
Okay. All trades were assumed to exercise at mid-price. All times are Chicago.
I love it. Okay. Now here we go. This is $5 wide call, $20 wide put, closed at 25% of max profit.
Average P&L. My eye line jumps right to average P&L. All winners and all nice average P&Ls. Sometimes we'll do a study and we'll see some average P&L, $8, $10, $12, and we're like, no thanks. But average P&L, 68, 48, 48, all pretty decent average P&Ls for the amount of buying power you're using.
So this just shows me, and you can see the 5 DTE, the 7 DTE, the 10 DTE for the buying power you're using. I like I'm just going to give my takeaways from each of the slides. I've been doing the 7 DTE and always have, when one comes off, one comes on, because there's always a 7. I'm switching it to 5.
Well, let's see all the slides and see. But I think here, the starting at 5 DTE is better. Now, you're always going to have a 5 DTE because we have daily expirations for these SPX.
So I'm going to go in and show this. Let's go to SPX real quick.
Okay.
So I'm going to SPX. Now, granted, this is not the Chicago time, but if you're going to go what Jenny's referring to right here, you've got 0, 1, 2, 3, 5. You will always have a 5. You'll always have a 7, and you typically have a 10, but there isn't a 10 there. But there seems to always be a 5. Now, what the study they're going with is expected move, $20 wide.
So are you at the like 720, 7,000?
Yes, the 727,000.
727,000.
And then the top, you're going to do a $5 wide, and I went to the 72.35, 72.40, and you're getting about 470. Now it is
close enough.
10.25 right now. So yeah, I mean,
it doesn't matter what time you put these on.
No, you're going to get, but that's what I'm saying. I just wanted to say, but he said he's putting them on at the.
But for these, to me, when you're going out 5 days or 7 days or 10 days, it doesn't matter what time.
It's not like the zeros.
Yeah,
You're right.
It doesn't matter.
So every time I put these on with these same parameters, this is exactly what the trades I've been doing. I get just under $5, and that's happening here.
And we could ship this. Well, let's wait till the end. Let's wait till the end and look at the results, girl, because
I love your enthusiasm, though.
Because this isn't one of those where they have to go on at the open or they have to go on at 9 a.m. They don't have to go on at a certain
time. And when one comes off, I'll put it on at whatever time it is.
Now, maybe if it's 2:45, I'll go to the 16 instead of the 5-day.
Breaking the law. All right, let's go forward. The next one, now I've got, did I go to it? Now this is 50%. So this is closed at 50% profit, and it's very similar to what it was before. The 5-day, the 7-day, the 10-day, all have profitable.
All
25
profitable.
or 50 doesn't necessarily matter.
All profitable. 5 days giving you the highest average P&L. That's very interesting that the 5 days giving the highest average P&L, and in both scenarios. And to me,
and the average days in the trade were less.
To me, I think it's worth holding on for 50%. The average P&L is high.
Oh, but wait, there's more. Next week, I asked, what if we leave him?
Yeah, we'll see. We'll see if he does that. We gave him a couple options. We'll see if he does that. But I would like to see if you don't manage at 25%, if you don't manage at 50%, if you leave them.
Yeah, what happens if you leave them?
Yeah.
Okay. So all these so far, this is a choose your own adventure. None of these are wrong.
Hey, you came up with a winner.
Thanks. Okay, next we've got $10 wide. So this is you're going to take in a little bit more credit, right? So
let's go to the platform and pull this.
Yes. So you've got I'm just going to keep the same short strikes. I've got a $10 wide on the top, and I'm going to go $30 wide on the bottom. So I'm going 720, 6990. Okay. On the bottom, and I've got on the top, I'm getting 7235, 7245. So $10 on the call side, $30 on the put side.
You are not covering the width of the call spread if you go out 7 days or 10 days. Are you? If you move expiration, if I go,
I could just move the expirations out. So I'm gonna take these same strikes. Well, no, I got to move.
It stays. It keeps the same strikes.
I don't need the same strikes because it's gonna be different strikes.
Oh yeah, right.
I'm gonna go to 7 day. I don't believe you do, but I'm gonna take a look at it. So I'm gonna go 70, 10, 69, 90. So it's the same on the bottom. It was at
70, 10, 69, 90.
No,
it's got to be 30 points wide.
69, 80.
69, 80.
Okay, 69, 80. And then the top is going to be $10. I'm going to go 72.55, 72.65. It's about 750.
And you're still not covering.
No, I don't think you do. I really don't think you will. But so there's a little bit of risk to the upside.
Yeah, there's a little risk to the upside.
And that's okay. That's okay. You're collecting $750. You've got $10 risk to the upside, and you've got $30 to the downside.
But that's interesting. It's a decent amount of upside risk. It's around $250.
Yeah. But the average,
if you want to cover
look at the average P&L on all of these. So this is at 25%. The average P&L at 25% is higher across the board than it was in the $5.
So I remember. One of the road shows we did, I did a Jade Lizard study.
Yeah.
And my results were best.
Like this, when you didn't cover
this, where you didn't quite cover the call spread width. You had a wider call spread. You didn't quite cover the width of the call spread. You brought your put up, we're collecting more. And those showed the best results. So when you do a Jade Lizard, you don't have to have this be hung up on, I have to collect over the width of the call spread.
No, and you're not in either example. But I found that fascinating. Starting at the 5 DTE, look at this. I'm going to go back a slide. Right? So here we are, 5 DTE with the larger correction around 750. The average P&L is 96 at 25%. If I went back one slide and you're making it narrower, the average P&L is less. That 50% max profit on the narrower one. Do you see what I'm saying?
Yeah.
This is 50.
Yeah.
Here's 25%. I actually prefer the 5 day.
$10 wide, $30 wide put spread, but you're only getting so let's talk about risk. You're getting about, let's say $750, and you've got a $30 wide. So you have $22.50 in risk, $2,250 in risk.
The other one has about $1,500.
The other trade where you're collecting $5 on a $20 wide, you have $1,500 in risk. So there's a lot more risk on that one, but your average P&L is higher.
Your average P&L is higher. So then let's go to the 50% on this one, okay? So that's what we're going to. Your average P&L gets a lot higher across the board.
Yeah.
But you are risking quite a bit more.
So win rate on this one, highest average P&L on the 5 DTE, Five
Five's the winner.
5 DT. But so average, the win rate is 82%. What's the win rate on managing at 25%?
Okay, so I'm going back one on the big one. You want 10,
on the big
30?
one.
10, 30, 25%, 85%.
So not that much. It's not. It doesn't go from like 82% to 92%.
No.
Not much different. Not much different.
I like this study a lot. I really like what Jacob is producing because this is actionable, right? This is an actionable study. This is something that I have been doing, and now I'm going to continue to do it.
Yeah, and I still am unsure, and I know these results are great. I'm just still unsure if I'm going to do the 30-point wide put spread or the 20-point wide. Because if you go back to the 20-point wide, for someone that wants to risk less, because I have, so you have to keep in mind what other trades you have on. My SPX positions are scrolling.
Correct.
And so if I have, if every week I'm throwing on a 45-day iron condor, and then I'm throwing in put spreads daily, and then I'm putting this 5-day jade lizard on, I don't want one swift down move in the market to take me out too much.
So everything that you said has the same risk to the same side.
Yeah, so I might do the $20 wide put spread because I have so many other positions on.
I agree.
So it kind of depends. What else do you have on? How bullish is your portfolio? This is a neutral to bullish trade with risk to the downside. I don't think there's any wrong choice.
No, I mean, honestly, what I was fascinated by this was all of these, every single option on this board with the jade lizard, the 5-day, the 7-day, the 10-day, the 25 or 50 weren't bad.
No, Liz, high five, pat on the back. Nice work, because this jade lizard, this short-term jade lizard is a winner.
It is a winner.
And again, I'm not saying it's always a winning trade.
Nothing we do is a trade recommendation, but I like seeing these results going back 3 years.
Yes. Nothing is a trade recommendation. These are results, back testing. Past results are not indicative of future performance. We get it. We get it.
And I understand pattern day trading role is going away, but the reason
it doesn't matter for this.
We went to this because when you put it on, if you put a put spread on in the 0 day, you're gonna want to close it. Like at some point during the day, you'll be tempted to close it. You can't, like in my limited engagement, you can't close this in 1 day. No matter what happens.
This isn't coming off in a day. All right, now
comes off in 2 days. Let's go to the results.
Yeah, day and a half. The takeaways. The jade lizard held up well, and when winners were taken as early as 25%, trades could usually be closed and capital redeployed before they ever reach 0-day DTE. So that's one thought of, do I want 25% instead of 50%? Because then you're right back in. I want to know what the numbers are in the end. If I did, at the end of the year, if I did 25% and constantly redeploying versus waiting for 50%, and then you're in that one longer.
But you weren't in that much longer. Let's go back, okay? Let's just...
No, but I just want Jacob to give me those numbers. Like at the end of this period, Jacob, if I did 25, took it at 25% and then put another one right on, how much money do I have at the end of this versus if I waited for 50%? Because then you have fewer on. You're making more money per trade, but you have fewer on.
You always have one on.
No, but you've done over 3 years of time. You have done fewer trades.
Oh, I see.
Waiting for 50%. Okay. You're making more money on the 50%, but you've done fewer trades than if you.
And it's a big. I guess you're right, because I just was kind of going back, comparing apples to apples. If you are, I'm just going to use we'll just go to the $5 wide for purposes. So if you go $5 wide, 50% max profit, you're in the trade for 3 days and 3.79 days. Okay,
so almost 4 days. You're almost 4 days. And
then if you go 25%, it's 2.5.
Right. So you have way more on. So your average P&L is lower, but you have way more on.
You've had more occurrences.
So if someone could figure this out for me.
Someone can. But I mean, when it's lather, rinse, repeat, the difference between 3.79 days and 2.48 days is a lot.
It's a lot. So you're looking at average P&L per trade, but you have way more trades on if you're taking it at 25%. So let's go back to the takeaways and see if Jacob has anything to say about that.
Okay. Okay. Staying for 50% profits means staying active through the 0 DTE sometimes, because they'll get to the zeros, but gave up surprisingly little in win rate and took home larger profits.
Using wider legs also brought home more total profits, but about in line with the increase in BPR, making the two approaches similarly capital efficient.
Okay. And the jade lizards have been an effective way to pair a bullish outlook of a belief that implied volatility overstates realized move. Now, the efficiency of short-term option markets lets traders put them to work in a matter of days rather than weeks.
I love it. I love it. I can't believe it's taken 3 years of having these 0 DTE SPX to start doing the short-term jade lizards. Nuts.
Let's put one in.
This is gonna be the trade of 2026.
So I kind of think we should put this in.
Yeah.
And let's go with the 5-day. So let's go.
I agree. 5-day, definitely.
We're going to go 5-day, least amount of risk. So I'm going to go to the expected move. I'm going to go.
All right, I'm going to follow along. Let me pull up the 5-day.
$10 wide. So I went to the, we'll go to the bottom first.
Wait, you're doing the $10 wide call spread?
No, $5 wide.
$5 wide call spread.
$5 wide call spread. So
Okay.
we'll go to the top and we're going to do $5 wide. I'm going to do the 35.40.
72.35, selling the 72.35 call. Oh, you know what? Well, let's let everybody see. Selling the 72.35 call, buying the 72.40 call. So selling a $5 wide call spread.
You're getting 120. Then I'm going to go down and we're going to sell a $20 wide. So it'll be $1,500 in risk. Okay.
Can I just put just a little hold on this and say, with the Fed announcement today, would we want to wait till tomorrow?
No.
I might. If I could put this on all the time, I might wait till with the Fed announcement and a million earnings, I might wait till tomorrow. Why take this risk?
Because it will move.
Yeah, like the market's going to move and we don't know which way.
Okay, but it is set up. I'm not going to, I'll press the button. I won't. We can even do it in last call if we want to. But here you go. So I'm the $5 wide at the expected move to the top side. And I'm getting exactly $5 here because I kind of brought it. You'll notice I kind of cheated the system and brought it in a tiny bit.
Oh, okay.
Because I did the 72.35, 72.40.
And then what put spread did you do?
And then on the bottom, I did, and it's exactly $5, the 70.30, 70.10.
Okay.
So I cheated it a bit to make sure that I was collecting.
So it's not quite at your break even's at the expected move, but your short put's not quite at the expected.
So I cheated it in a little bit.
Just to get the $5.
I'm risking $1,500 to make $500 in 5 days.
In 5 days. I know. I like the risk reward.
So when you're talking about, this is why I'm enticed to ask what happens if it goes to expiration. Because remember how we were talking about sell put spread, you close it for $100? That's exactly what this is. You're getting $100 if you're doing $100 a day, but this is in 5 days, you're getting $100. So I'm just curious to see what the results are if you leave it till expiration.
So when we look at his results, if you're getting $5 now, 50, 100, you're getting, if you're getting 125 in 2.79 days or something like that. So you're getting 25% in 2 days. Just in 2 days. So you're getting 125
you're
in 2 days.
You're basically getting a 10% return on capital if it's $1,500.
Yes, so you're getting 125 in 2 days. Or you're getting 250 in 4 days.
In 3.75 days.
Yeah, in 4 days. Or you're getting 500 in 5 days. That's why, but if we take the 125 in 2 days and then put another one on and you're getting 125.
Because the strikes will always be moved.
Yeah, 125 every 2 days versus 500 every 5 days.
I mean, I don't think there's a right or wrong, but I will tell you, as you're moving them, it's kind of tricky because I have been doing these. When they come off, that means it's neutral to bullish. Your put spread always comes up.
Comes up, or time has to pass, or you're in it longer and the market's not moving.
Correct.
It is silent down here.
Yeah.
It turned completely silent, dead still. I don't see any movement behind us. It's kind of weird, right?
Yeah, what is this doing? They're down 11. I mean, it is very quiet right now.
But again, everyone's waiting.
I don't know. I will be shocked.
May calls, coding some May calls over there.
Do you want to see? We can go to the active list too. But so that's it for the SPX study. So that's good. That's done and dusted. We'll put one on either tomorrow or after the.
Yeah, maybe on last call today. Maybe on last call. If we do a lot of earnings early, I don't know. I don't know that we should be doing our earnings early. We always say with the Fed meeting, I'd wait till later to do the earnings.
Yeah, I think we're going to do all of our earnings in last call. There's really nothing that we need to do there. I wouldn't be as afraid of the SPX because let's take a look at what happened with the earnings today. So we had a bunch of earnings that happened today. Some went up, some went down. So the SPX is kind of it's a basket of products.
Now we have a couple. We do have a couple tweets coming in.
We got the mind eraser.
Well, we got the recipe for. We have the recipe for mind eraser. I'll take a look and let you know if I'll try it.
I can't wait.
Okay. Ooh, I love Blue Wackadoo when he's done for the day. Done for the day. GTC hit $200 in the bank. Thank you, Mr. Market.
I love it.
Blue Wackadoo.
Good job, Blue Wackadoo.
And what did he do today? He's got an iron condor. Sold it for $4, bought it back for $2. And I'm surprised with the Fed announcement that he's already in and out of an iron condor.
I get it, but this Fed announcement is pricing in a nothing burger. The markets are pricing in nothing for the Fed. They're saying that nothing is priced in for the rest of this year.
Well, we'll see.
And that's what's on the CME Fed Watch. So and that's pretty accurate. It's on the CME Fed Watch tool where they say this is what we're pricing in the interest rates. Now, sometimes there's surprises.
Who knows?
But that's what.
And I feel like there's usually more movement when he's talking.
Yeah.
Then at
it's about his verbiage.
Yeah,
and it's
right,
about,
right.
then
So
yeah.
we'll see, and that's going to be happening right while we're on last call. So we'll see if the market.
So somebody please tweet us and keep us
posted because we'll be live on air.
Okay, so Don Duke comes in. Beautiful ladies, L&J. A mind eraser is a layered cocktail made with equal parts vodka, coffee liqueur like Kahlua, and club soda, served over iced in a glass. I could drink it.
I could do that. I could do that. It doesn't really sound bad, and I don't think it's going to erase.
It sounds delicious.
I don't think that drink's going to. I need a lot of those to erase my memory of where certain stocks have been.
It's going to take 10. I could totally do that. That's great.
And if you scroll down, Samantha puts the picture of it. It
doesn't sound bad.
But here's what I am having a hard time.
It's the mind eraser. I thought it was going to be like Malort.
Well, have you ever had it?
Malort, yes.
It's terrible.
It's the world's worst alcohol.
I think it's a Chicago drink. Malort, it tastes like gasoline.
They popped over when we said Malort. It does taste, I'm pretty sure it is gasoline.
When I took my son out on his 21st birthday, we did a little bar crawl in town before we went to the casino. And the one bartender gave him this whole story of Malort, made us drink it. It was horrible.
It's horrible. It's absolutely horrible.
Okay, so what I am having a hard time with is combining the club soda with the little cream, because I don't like to combine. I feel like combining like a bubbly soda with cream just isn't going to sit well.
Maybe that's what erases your mind. It's the bubbles that activate and erase your mind. But I love it. Samantha, thank you. I'm actually going to make Jenny and I drink one at some point the next time I take her to a bar. Okay, but Scott Somer comes in. Royal Caribbean.
Okay.
This is, I believe, RSB.
Ratio Super Bowl.
Yeah, it's a Bob on Fire.
Ratio Super Bowl.
That's a Bob on Fire.
Yeah.
Okay.
180, 250, 300.
Let's take a look. So I'll take a look for you, okay?
Okay, I'll read you the strikes. So he says January, and he tags Bob on Fire and says RSB, Ratio Super Bowl.
Okay.
Selling the 180 put.
It's got to be twice, right? Ratio.
Yeah, selling so two. Well, maybe do the call spread first, and then otherwise everything's going to go in as two.
Yeah, I'll delete it.
So, and it's usually how we start the Bob on Fire.
Yeah, go ahead. So the call spread, I'm going to go 260.
250, 300, he says.
Okay, 250, 300. He's going wide. 250, 300. Okay.
So we're buying the call spread 250, 300. So that's $5,000 in profit potential in that call spread if we cover the debit by selling two 180 puts.
Let me see. You can go down farther than 180 puts
Bob on Fire likes to take in a credit.
Okay, I'll put this in.
The last one I put on, I did take in a credit. I was pretty proud of myself.
This is a $7 credit though.
The last Bob on Fire I put on, I took in a $5 credit and I liked it. I liked it because I thought even if it meanders down and doesn't go up and stays in between, I'll make something. I'm still making something.
So I like this. Scott Somer, our international man of mystery. I'm going to put this on my account. It's a little heavy for this one. $5,515.
Okay, I don't know that we want to put this on a Royal Caribbean, but he gives us. Scott Somer also comes in with a Ratio Super Bowl in Hood. And I know we did we just sold a put in Hood, but I like that Ratio Super Bowl in Hood. I do. Want to look at it?
Yeah, and then he also did one in something else, but he doesn't give us so we've got Hood is the 55, 70, 95.
That's got to be SoFi.
That's got to be SoFi.
It's got to be SoFi. So this is a nice way.
It is actually better after the fact. Put on that instead of
stocks down.
So what?
Stocks down. So what? Put on a Ratio Super Bowl.
All right, let's take a look at Hood. I mean, we already rolled our Hood.
Yeah.
But I do like it. So I actually think I'm going to do that in mine too.
Yeah.
So the Ratio Super Bowl, and I'm just going to pick these strikes. I'm going to go 75, 95.
Yeah, I'm going to add this to mine.
Is he 75, 95?
I could just throw on a ton of Jan, Bob on Fire, Ratio Super Bowls, kick my feet up.
Though, I kind of like when things go awry, you put it on. Because the stock is down, the bounce back up, great.
Well, I also, honestly, I put these on when stocks are so high, and it's like, okay, they're so high, but if I want to keep riding the run, sure. And I'd have to get back in on a pullback.
I think they're good for both.
They're good for, you know what? They're good for every scenario.
They're good for every scenario. So in this one, in Hood, I did the 75, 95. I don't know what his strikes were. I bought the 75 call.
It's the 70, 95. That's it.
Okay, so I was 75, 95.
70, 95. So it was $25 wide.
And I sold the two 47 puts.
He's collecting more. He's selling two 55s.
55s.
I hear you. Well, I mean, we just had a 12% down move on Robinhood. So he's getting more aggressive with his puts. And I don't mind it. And I like the credit.
I do too. So you're collecting $7. You're putting up $1,700. I like this. We already rolled our.
I know. Did we get filled on our new Robinhood position?
Yeah.
We just sold those puts. But you know what?
Close them. They're profitable.
No, we're okay. I mean, we
made $28 on them. Let's close those and do the Bob on Fire.
Sure. Yeah. There's more profit potential in the Bob on Fire.
Let's do it. Okay, so I'm going to close this. I mean, honestly, this is a quick little scalp. We got into it and out of it.
And when you put this on, okay, pull this trade up and then go to the analysis page.
Okay.
Because I want to answer a question. Someone is asking, when would you close the Bob on Fire and why? When would you close the Bob on Fire and why?
So I took a little bit of liberty. I sold two, because it's a lower price product. I sold 2 50 puts instead of the 55s.
Okay.
And then I did the 75.95, so $20 wide. And I'm collecting.
His was $25 wide.
I'm collecting $4.10. I just took a little bit of a liberty here because I wanted $1,600, and I'm $5 wide down in the puts. But
yeah, there's no set. It's again, when we do this show, it's not like this is the trade. Everyone can make a trade their own. Our trades are not trade recommendations. Liz's trade might be different than my trade.
Yeah. So we just know the Bob on Fire because we know what we're going to do with those strikes. They might be slightly different. I'm shipping this.
Wait.
It's
Can you just go to the analysis page?
Sure, we got a lot of stuff in there.
You just have to take off what we take off on analysis. Just take off everything except the January. There we go. And take a look at this. Now that make $2,000. That's only at expiration in January.
So that probably won't happen for a very long time.
If Hood goes up $5, this trade will probably make $250. If Hood goes up $10, this trade will probably make $500 in the short term. So if someone asks, when would you close a Bob on Fire?
Whenever you have the profit potential that you want. And you might close it faster than I did. I know you leave some on, and I'm like, and sometimes I'm like, I'm good. I'm out on this.
I mean, I'll have in my mind a mental profit target. So,
but if you right, so you're risking, you could just have to keep like realistic figures in there. You're risking $1,600, right? You're risking $1,600. Would you take it off for a $300 profit? Probably.
Intel's been running. I turned mine to Bob on Fire. A lot of people in the show account, like we took off our Bob on Fire Intel trade. A lot of people took off their Bob on Fire Intel trade. I left mine because in my mind I had a profit target of if at end of the year, this is up to here, this trade can make X amount. And in my mind, I said, I'm just leaving it. I'm just leaving it. I'm leaving it till December, leaving it till January. Maybe I'll just close it in January. Then I'll have to deal with that for the 2027 tax returns and just leave it. It's a personal choice.
It is personal choice. But I'm shipping this. So I'm shipping this. Bob on Fire. Thank you very much, Scott Sommer. Okay, filled immediately.
Yeah. Okay.
I'm going back to Twitter because we've got about 7 minutes left.
Yeah, Dronin it has the question about when would they take off the Bob on Fire, but they also have
he calls it Bon Fire.
And then they have a question about Palantir. So if you go to Palantir, I'll read you these strikes. They have a Bob on Fire in Palantir.
Okay.
So where is Palantir?
It's been down. I keep an eye on Palantir. You know that and it doesn't look like it's been down that much, but it's down.
And so what's the price right now?
It's trading 136.
Okay, so they have the 135, 175.
Am I going to January? Okay.
Yeah.
They have the 135, 175. That's fine.
Okay, and they sold 292.5 puts.
Okay, 292.5 puts.
And they put it on for even.
Okay.
And what is it now?
Oh, I put this in backwards. Hold on. It's a 90-cent debit.
So, I mean, when would you look to close? They have this on in Palantir. I mean, when would we close this? Again,
so here so kind of when you look at this, your profit target here is you're playing for the 35.75. So let's look at this on the curve view. So here, now granted, they took a credit in for it, so ignore this. They have a credit.
Oh, okay.
Okay, so don't worry about that. But you're playing for an up move. So to Jenny's point, if it goes from 137 to 147, you'll probably make about $500.
Yeah,
50% of the move wrapped around. It could be 40%, could be 45%.
On a one call spread by 2 puts. If you're doing a one call spread 2 puts for a $5 move, you usually make about $250. You usually make about half the move now. You'd make more than that as you get closer and closer and closer to expiration. Yeah, for every one lot, for every 1 by 2. When would we close it? It's up to you. If we put this on today and it made $100 on it tomorrow, we might take it off. But someone might say, I want to keep this on until I make $500.
And a lot of times I'm looking at what my buying power is. So this buying power is $3,200. Maybe I want at least $300.
Yeah.
Do you know what I mean? You might want to, you can do that with however you want to.
Or someone might say, I'm really bullish on Palantir. I'm going to put this on and leave it. And I'm not going to look at it. I'm going to put black tape over Palantir and I'm not going to look at it until January.
These are good black tape.
Yeah.
Right.
I was thinking there are some things I don't want to manage. I just want to leave some positions I don't want to deal with that I want to start a second account to put those in. And that's the account I don't look at.
I don't touch it. There's one I don't even open on a daily basis.
That's what I want.
I look at it probably every 2 months or so.
And so some of these Bob on Fires, I wouldn't mind putting them into that. Like put these into the account where I don't look at it. I'll come back in January and see where they are.
Yeah, you don't need to. You don't need to look at it at all. Yeah, I think that's a good. It's nice to have it on there. I mean, I have the line item, so it's in there, but I just never even opened that one.
Yeah. So I do want that. And I know now at Tasty, each person could have multiple accounts. It didn't used to be like that.
No, you can have multiple accounts.
We can't, but it didn't used to be like that.
Oh, it used to be one account.
Yeah. So now I think you can have. So I think I'm gonna open a do not open account. Like that's what I want with my Oklo. I want my Oklo in the don't ever look at this and just leave it.
Put it in its own account.
Put it in the account with the Bob on Fires.
I think you're right. Now Scott Somer says, answer the 1045 question. I choose to close when the trade moves close to the credit. So he was collecting $7 a lot. So whenever it gets the credit
to a credit,
moves to a credit to close.
I choose to close when the trade moves to a credit
to close. So instead
he's taking a credit to open. He's taking in a credit.
So I took this as like if you're taking in $7, he's going to take off the $7 profit.
Well, if he's taking in a credit, it is a credit.
No, but I think he takes it off. Scott, give us more sugar on this one. We need more sugar. I think it's if you're taking in $7, you're going to take it off for $7.
I don't know. But I think too, like everyone could choose their own exit point. Florida 7 says on Laverne and Shirley, Laverne DeFazio, played by Penny Marshall, famously drank a mixture of Pepsi and milk.
Oh,
a combination that became her character signature quirky drink. The drink often called Pepsi and milk or a dirty soda.
Oh,
well, they.
Fun fact: Jenny had a bunch of cursive L's embroidered on a sweater for me.
Yeah, because we did.
Because we didn't call Laverne and Shirley.
And I don't know if you know this, but they had a short period of time in my life where I was that bartender.
What?
Yes. And so I know.
How old were you?
So when I was.
Oh, you don't want to tell us?
No, so when I was pregnant with Logan, I left the trading floor. With my first child, I left the trading floor, pregnant with Logan. I couldn't sit home. I was like, I can't sit home. So I became a bartender. I was a pregnant bartender. I made more money than anybody because
tipping you because you're a pregnant bartender.
I was like 8 months pregnant bartending, and I made so much money because everyone was giving me tons of tips because I was huge.
Oh my God, that's amazing.
And so when you make like those certain martinis with the foam on top, you have to mix like a milk and an acid, like a lime juice or lemon juice. You have to mix an acid and a milk to get that foam.
Really?
Yeah. So I learned how to make all these drinks, although no one ever requested a mind eraser. That wasn't on my list. Yes. Yeah. So, leaving the trading floor.
We were busy for years. I had no idea.
We were busy on the trading floor. So busy that I couldn't just do nothing.
I get it. I think that's kind of fun. And I think you talk about swimming upstream, a pregnant bartender.
Hey, love the trader turned bartender. I did it for a very short period of time.
It's fun though.
It was fun.
I'm going to have you test. Can you flip bottles? Is a pregnant bartender?
No. No. But I can make drinks. I know how to make some drinks.
That's awesome.
I can slice a lime like nobody's business.
We're going to test your skills.
I can make the twists.
You can?
Yeah, like the lemon zest twist.
This is breaking news, ladies and gentlemen. But she hasn't had a mind eraser. We're going to figure out how to get her one of those.
At La Dolce Vita.
Really?
Yeah.
By me?
Yeah.
Oh my God, no way. Okay, moving forward.
All right, we have 1 minute to go.
And this is Frank Walsh. This is the last one we got to get to. This is Kostable. This is Frank the Great from the YouTube chat. I didn't get the Jade Lizard study. Isn't a Jade Lizard a naked put in a call spread? Yes. Wasn't this an iron condor? Just an iron condor?
Oh, because it's it's a put spread. We're using a put spread. We're not using a naked put. They were like, we can't use the naked put in SPX.
We can't afford a naked put in SPX, so we're using a wide put spread, replicating the naked put because it's such a big product.
If someone wanted to do a Jade Lizard, use XSP. XSP is 1/10 of SPX. Use the Jade Lizard with the naked put in XSP instead of SPX put spread.
Well, and then they go on to say, wasn't this iron condor? If so, why not collect more premium and just widen the call spread? What we're trying to do is eliminate risk to the upside. The Jade Lizard, and if you'll notice, in and out market, that's where we get hurt the most. I don't want the risk to the upside. That's the point. We've got a narrow call spread and a wider put spread.
Maybe we have the next study be an actual Jade Lizard with the naked put in XSP.
We can. It's still very expensive.
Is it? What's the naked put in XSP?
Hold on, I'll show you.
We are out of time. This is the final comment of the day is going to be how much buying power is a naked put in XSP?
I'm going to go
the size of
5 days. I'm just going to go to a 70-cent put, okay? Just because it's
Is
easy.
this going to be like SPY? Is it like 6,000 or something or 9? What is it?
It's $12,000.
Oh,
we're SPX.
Yeah.
We're SPX or bust. We're with these guys.
All right, everybody. Thanks for tuning in. Can't wait to see what the market does later today with the Fed announcement.
Yeah, tune in for last call and remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you later today.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
freaky. Come on, let's play. I got a good feeling. I got a good feeling. Yeah, I love this life and I'm living it up. You can't stop this dreamer. I'm a mad hatter. Call me one of a kind. I'm a true believer. I got a good feeling. 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 Yeah, I'm up with the sun, soaring high as a kite. Call me an overachiever. Leaning off of that edge, don't need a green
What's up, JC Nation? Welcome back to the show. This is Options Trading Concepts Live. My name's Mike. I'm here with Jamal, and it is Glenn's day. So we have Glenn Freiberger here. How you doing?
What's up, man?
Good to very good. Good to very good. Wow.
Love that.
4 to 5, 4.5 to 5 on a 5 scale.
Yep, we've been chopping back and forth, but we're trending upwards.
That's good.
Wednesday is always a volatile day. You wake up, you realize it's not Thursday. You say, I can do it. And then post lunch, post this hour, you're moving. That's on a normal Wednesday. Is this a normal Wednesday? No, papa.
No.
This is anything but. We have FOMC this afternoon. 4 of the largest tech names reporting after the close. 80 seconds to define this week's market moves. And on top of that, we've got our commander-in-chief hitting the button once again. Good or not
You gotta
good.
clip that. That was perfect.
yeah. Bravo.
You just can't draw it up any better.
I can't contain my excitement about today.
It's crazy.
Yeah.
I cannot contain my excitement.
I am so excited.
I'm so excited, and I just can't hide it.
How are you guys?
Great.
Yeah.
Driving.
I gotta tell you guys, I was hanging out with some friends yesterday, former trading friends from Peak 6, and friend of mine, I'm gonna say this on air. I tried my first Zen yesterday. I never had one.
All right.
I didn't know
One of the
that
boys.
they do that. Like,
Oh, yeah.
It's incredible.
Oh my God.
Yeah, I can't do those.
I just figured it's like tobacco. It's like smoking a cigarette. No.
Oh
my God.
I can't do those.
Yeah, I can't do those.
It's like
that might be a one and done on that.
It's like depositing a check with my phone. Can't do that. Just like Zins, can't do it.
Did you take it out promptly after getting lightheaded, or did you try
At first,
to tug it out?
I hung in there. I'm not a complete wimp. You know what I'm
Nope,
saying?
there's no winning. That is where you get in trouble.
I was like, okay, this was not going to last that long, right? Just,
you think this is going to knock me out?
breathe through it. Yeah. Wow. Holy cow.
I get full ass tunnel vision. Like I started with a little 3, and I was
Sure.
like, damn, this is so sick. This is so fun.
Yeah, I don't remember when I started.
Got nicotine flowing through me, and then all of a sudden I'm like, oh God, I'm gonna throw up right now.
Yeah, it felt like more than nicotine. I don't shit. Tell you, man. Yeah, I'm
Something
good.
about your gums goes
Holy cow.
straight to whatever.
Yep.
That was
Something about him.
But pretty funny experience. You made it out alive.
I made it out unscathed. Yeah, I'm
That's
okay.
pretty good because
Heart racing.
I don't partake.
That's good.
But the one time I tried, I ended up just on the floor of the bathroom for hours.
For real.
Hours throwing up.
Oh my gosh,
Yeah.
we really got
With
hit.
friend's little brother opening the door, laughing at me. Doesn't help at all.
That's terrible.
So could have been worse.
As he popped his in, he's like 12 years old. Popping.
No, it was. They were his. He gets the like crazy 12 milligram.
Yeah,
Swedish
I'm gonna have to
variety.
I'm gonna have to tell my 13-year-old about those. Just like, hey, stay away. So you know, this is what happened. Because again, I mean, there's nothing wrong with trying something, right? Like, hell, I tried a cigarette when I was like 10 or 11 years old. I mean, but like, it didn't do that. It didn't make me dizzy. Holy cow, those things are crazy, man.
Well, that's a good
kids. Stay away from them.
Shake up a Tuesday night.
Yeah, it was
Well
something
done.
else. Yeah,
Love it.
good combos about trading. Friend of mine.
Probably speedy combos after that.
Well, luckily, most of the trading combos happened earlier in the night. But a friend of mine who's like, I mean, he's a leaps trader. He's incredible leaps trader, and we started together. But God, stuff he's trading is crazy. I mean, leaps are a different world. They really are. Not the way we trade them. I mean, like the way that they trade them, like at a firm. It's crazy.
Just because of the
Well,
size, or
the size, definitely, but like just the way the vol curve changes when you go further out. It changes a little bit in certain things too. Like it's just wild. I mean, it's a trip. It's a trip. I'll have to get them out here sometime to talk.
would you say they are more attentive to trading like one Greek, if that makes sense? Like if you're saying their trades are just manipulating that volatility curve?
Definitely. I mean, it's I mean, you can obviously have some deltas on and like for example, one trade would just be like 10,000 by 20,000 further upside, and like something like an XLE and short upside, but like having long deltas as it rides up. And so vol swing, just the way the vol it comes, it just collapses or moves so big because that's true Vega, right? Like it's just crazy how much it changes. So something else. I'll have to try to get him in here and talk one day.
Yeah.
But
I actually did this for one of the, definitely not what they're doing and the complexity of what they're doing, but I showed this, like if you're buying call leaps, you can make way more money on the upside than you can on the downside because increasing stock price is a huge contributor to the value of that. And you don't have to be right as much. If you hit 2 or 3 call options and they 7x, your win rate does not have to be nearly as much as if you're buying puts on the way down and you're only making 2x or 3x.
Yeah.
Like your win rate has to be much higher on the downside versus the upside.
Yeah.
So.
Yeah.
Ought to be done out there.
Options give you options, they say.
That is true.
Look at this Humana, bro. This Humana's running for me. It's a nice little
Humana.
winner. It's a little winner.
Zion. Yeah, USO, or not USO, UNH rallying too. Almost at 370. Love to see it. Oh, I didn't close that yesterday. I meant to close it.
Good thing you didn't.
265.
Oh yeah, I remember
made money
you were saying
again.
you were going to close. That's right.
Yeah, we bought that call calendar spread 370, and we're sitting at 370 almost exactly. So, $275, $265. We'll take it. We'll take it. But yes, as Glenn alluded to, we have a Fed decision today. The decision has already been decided. They're not going to cut rates. 100% probability on the Fed Watch tool. I've never seen that before.
There you go.
But the narrative, I think, is what's going to move these markets if we're going to see market movement. But then, as these guys alluded to as well, we've got Microsoft, Meta, Amazon, and Google all after the close today. So what's really crazy is if you look at the Qs, you've got a $10 implied move for tomorrow and a $12 implied move through Friday. So all of the implied volatility for the week is being priced into tomorrow in the Qs, which accounts for those 4 products. 4 of the Mag 7 make up 18% of the Qs from a holistic standpoint.
That is larger than 4.
Yep.
X1D just keeps climbing throughout the day here. 11 and change yesterday. Now it's 15. Yeah, vol seems to be like increasing across this landscape, I feel.
Yeah.
I mean, you didn't expect on a slate like today for oil to be up 5% after yesterday, did you? So
I'm trying not to think about
silently, exactly right.
Trying not to
Because I mean, volatility for the equities not reacting that much. You'd say certainly price not as reactive to getting well above 100 for this type of crude oil, higher abroad, but I don't know. It has to factor in eventually, right? Or no?
110 crude for the rest of the year.
Digital money making does not require any crude oil inputs.
No.
Why everyone's so worried?
But
Why so serious?
These later dated contracts continue to climb higher. Now we have 2 contracts over 100. I think that's the first time that's happened. We've got the N and the M contract, both over 100. Even in the craziness, we had the K at like 115, 120, but the M was still sub 100, if I remember correctly.
Interesting.
So catching a bid across these back contracts here. So yeah, it's crazy to see the equity market just kind of ignore it. But the equity market is driven by Mag 7 and the AI and chip narrative for the most part. So I don't know.
It makes you wonder if they don't hit and they don't perform tomorrow, how bad things could get in the market.
Yeah.
Wonder about that.
So what is interesting if you look at the Qs. So if you look at the Qs for Friday, which encompasses all the earnings that are coming out this week, and then you look at like a 5% sell-off or rally, you're looking at, let's call it 630 and 690. You still have plenty of put skew here. If you were to say, like, if we get a 5% move in the Qs over the next 2 days, which would be wild, still put skew here. 3 times the amount of value, much higher implied volatility or in the money probability. So yeah, 2% to the upside, 5% to the downside, and 3 times the amount of value. So the market is telling us that the velocity of risk is certainly to the downside, which I think makes sense, because if you assume that all these companies are going to have ridiculous numbers, and with the ridiculous numbers, maybe the guidance isn't like great. Maybe you see an inside up move or an inside down move. But if they miss and they say these crude oil prices are really affecting everything here, I'm not sure that they're going to say that. But I think you could see the big washouts definitely to the downside, especially after the fact that we've recovered to all-time highs or near it.
Yeah.
And with that said, I'm super bullish on Microsoft. So
right. So you didn't put anything else on for Microsoft. You got in at a very favorable price looking at it right now, and just deciding to let that simmer.
Yeah. We got into the 500 calendar in Microsoft a month ago, and then we got into the Super Bowl 2 months ago. So we withstood all the craziness. Microsoft recovered, and I've just been using this short option. I've been selling premium against this long call, 16 days out, and I picked up a lot of premium just doing that.
Interesting.
So $600 was what I rolled into. It's now trading for $600, but like this goes away regardless of what happens with Microsoft. Ideally, we get a rally, but I'm still going to reduce cost basis on this whole position by $600, $700 in 2 days. So if we get a rally, I'll just close all these.
So you wouldn't take off that short call pre-earnings?
No, because this is trading for $600. It's going to be zero extrinsic on Friday, even if Microsoft chops around, or if it rallies up to 430, 435, it's still going to zero. So this is kind of the last stand. Ideally, we get a rally in Microsoft. I'll close all these positions by Friday.
So you are not calling for.
He's not worried about that short call.
450.
He wants to lose money on that short.
Yeah, I want 470, 480. Yeah. That'd be great. But yeah, we still have Meta, Amazon, Google to talk about. So let us know in the YouTube chat if you want to join us there. Pop over to the Tasty Live. Throw in your trade ideas on the right-hand side chat, and we'll scan through them in about 15 minutes. But I think you have some slides for us, do you not?
I do, yeah. we're looking at today.
On this fine day.
On this
Did you forget
fine
the title?
Wednesday. Every once in a while, I like to give myself a moment to compose myself.
Yeah.
Okay.
Deep breath.
And action. Today we're looking at how to trade FX on and around economic events, a packed slate like today. What do we have here? We're looking at a screenshot in the TastyFX platform for tomorrow, but today we've got an FOMC decision. Tomorrow we've got an ECB decision and a BOE decision. Is that it? No, we've got personal income, GDP, and PCE from the US directly after that. So this week, an action-packed week, and just want to give a little bit of handbook, some loose guidelines on how I think about trading around some of these events using spot FX markets, because spot FX markets, traditionally retail US traders primarily trade US dollar, but not limited to that US dollar exposure, and by proxy, not limited to US macroeconomic events. You have a ton of these central bank decisions that are not the US. Their accompanying data, like earlier this week, we had Australia inflation data that directly factors into their central bank decisions. And we've got a market landscape that is now highly susceptible to inflation costs. And what everyone's wondering is how central banks will react. And so you have a ton of these events to possibly trade around and trade a ton of markets that might be affected by these events. How do you head into them on the next slide? There are, a number of things you can do depending on what your portfolio looks like, but it's important nevertheless to consider that these are volatility events, or they could be non-events, but doing that kind of refreshed thinking ahead of these events is critical. You can either hold existing positions, close everything and go flat, or add new positions that will directly speculate on the event alone. And closing everything, I think going in flat to these events does allow some advantages for getting all the new information, right? A lot of these events, people like Tom and other people that don't watch or trade the news as regularly say, this news is all old, and so therefore it doesn't matter. But you do have people reacting to this latest bout of news, and the only way to trade directionally, especially with all that information, is to do it after the fact. But this particular slate of events does give an interesting potential opportunity to go into the event holding some positions, because we've had a whole month of pricing in, pricing out, rate cuts, now rate hikes, and that's pretty interesting. For example, we just talked about these European central banks. We're now looking at some traders pricing in 3 25 basis point hikes from the Bank of England this year alone. They have not hiked yet. We have 2 hikes of 25 basis points priced in for the European Central Bank, who has done nothing since last June when they were on their cutting cycle. So you have a lot of these decisions priced in to varying degrees that you could get, although you're not getting a decision tomorrow. Every bank likely to hold tomorrow, like you called out, pretty priced in, almost absolutely priced in for the U.S., looking at CME Fed Fund futures. But the posturing, the positioning of the central bank, as we know, those entities like to signal what they're going to do ahead of time, could inflate those chances of future rate hikes, or that could get crushed completely out of the equation if they say, we are not We will hike if we have to, but that is certainly not our base case. And that you could, in theory, only get direct exposure to by speculating on the event ahead of time. So just want to go over to the next slide and talk about what happens on these event releases. Central bank decisions in particular are a lot of fun because you have kind of two events baked in one. You have the initial decision release, and then 30 minutes to an hour after that, you have the head of the central bank providing commentary, answering questions for us in the U.S. We're all very sad that this might be Jay Powell's last time addressing the nation in his purple tie of varying shades. Very nice ties, all very nice.
Yeah.
Just varying degrees of lilac and magenta.
Yeah.
Go
Depending
Cats.
on which side he's leaning towards, a little bit more blue in this shade, a little bit more red in this shade.
Unfortunately, that analysis might not be
Might not matter.
Yeah, it might not matter anymore.
But I am very excited to see the deep fakes on Twitter of his last.
Oh,
go
yeah,
around.
that's true.
'Cause there's
Yeah,
going to
yeah.
be some people
Yeah.
making some crazy stuff.
Yep. So watch the news sources you report to. But the main thing I want to call out on this slide for retail traders is on this on the slide behind. Sorry. On this event release, you will get a lot of volatility. Spreads will often widen, and you'll get an algorithmic response, especially from the release of the decision alone, where people are combing through all of the rhetoric in an instant. That is not where retail traders have an edge necessarily, and so it can behoove you to wait out at least even just 1 minute to not get caught into a potential fake out and still possibly have room to hop on a breakout, even just waiting that 1 minute. And another thing to call out here is while stop loss and take profit levels are advantageous for risk management, if you have something on into a release like this, that might not be the time because you could get dinged on a millisecond of price action, be right, but have gotten stopped out because of that stop loss. So just something to be aware of. On the next slide, we can talk about post-event entry strategies. If you are flat into an event, what can you do if you want to speculate? Of course, you take in your own considerations. What does this mean? Perhaps you're a fundamental trader. Perhaps you're just looking at tape action. But you can either, in FX, spot FX markets, you have to get directional. So you can either trade a breakout continuation, fade an overreaction in the initial minutes. This, you can absolutely see from a central bank decision where the words appear hawkish, the figurehead comes out and dispels some of that rhetoric and says, no, this is actually way more dovish. That can lead to two-way action, or just trading ranges. If you're near historic support resistance, it gets tested, and it doesn't look like it's sustainable. So a myriad of things to do, but what this does is give you on a more volatile day more price levels to get in, whether you're long or short. So on the last slide, just some trade management considerations. Because of the volatility, position size, you can consider reducing, just because if you are going into it, speculating, and you get new information immediately, it's important not to keep this psychologically, you're tied to this position. You don't want to close it because you don't want to admit you were wrong, but you have new information, the next trade. Sometimes you can't put on until you close the old one. Adding those stop loss take profits after to avoid emotional trading similarly, and make sure you're sticking to your time horizon, because if you did put this on just for the event, it did or did not go your way, no reason to elongate that time horizon if that's not what you were planning to in the first place. So a lot of exciting stuff happening and different ways to play it in these spot FX markets, and not only today, but every week, every month, some of these economic events stirring volatility across the globe 24/5.
Good guidelines, man.
Oh, thanks.
It's glorious. Very nice.
We'll see. But it is interesting. Usually, I find it more interesting to react to some of this news if you get maybe there's favorable risk reward if markets price in a big hawkish reaction and you really think Powell or whoever else will talk it down. You have that 30 minutes to get in. But right now we have such speculation on especially these European leaders expected to hike rates, and a lot contingent on that, especially given these are supply side inflation shocks, which historically are not as good to hike into. You really want your economy to be surging and be able to withstand higher rates. We'll see if they can.
So that's the thing. Like you said, I mean, it doesn't look like they're expected to do anything, whether it's a BOE or ECB. But like you just mentioned, there's talk of obviously inflation being higher, and at some point they're expected to maybe hike rates. Do we expect like any movement in these pairs tomorrow with the euro or with the pound?
Yeah, we'll see what their. I don't know off the top of my head what their. We release dot plots sporadically or every other meeting. I'm not sure exactly what they release, but if they release something similar and it strongly says no one is on the committee is forecasting 3 hikes this year and markets are, you could see that tamper and the British pound lose some strength. Or you could see, the tail risk is that we've seen markets, especially from using US dollar as an example, we've seen the Fed and markets be at odds with each other for extended periods of time. Do they converge eventually? Yes, but just something to think about your time horizon. Personally, even numerous times I've said, they're saying this, markets are, you're not getting any of these cuts taken out from something like the Fed fund futures, what's going on. And they're just, the market is not subject to, bind itself to Fed expectations. Perhaps it's a smarter thing to do, but if we're looking by year end, the Fed has just as much time to correct towards market expectations as market does to correct towards the Fed. So you see some of that convergence. You also see some wonky stuff like I'm looking at this dollar yen today that just breached 160 to the upside. The BOJ said earlier this week they're ready to hike next month or in June, and that did nothing for this Japanese yen, which is really beholden to a lot of other factors like their domestic policy really not supporting this yen. U.S. rates and even the price of oil that's holding this U.S. dollar up quite a bit. We're in rarefied air here.
Yeah, that's a good point. Yeah, that's probably one of the reasons why, right? The yen is struggling, the whole oil thing, and they're an island nation that imports.
Yeah. So this is still within the range, but this is one of those dangerous pairs where you have to understand the risk is two-sided. Just because we're at an extreme does not mean it has to come down and has to come down now. Over the long term, these markets do mean revert historically, but this is tradable in both directions. We have our clients on the TastyFX side net long this market right now, having a good day for US dollar Swiss franc as well. A majority of clients long that market, but struggling to hold on some of these risk currencies like Australian dollar, New Zealand dollar, dipping today. I think we're leaning a little bit short euro dollar as well. So long dollar overall. but we'll see how that changes post Powell farewell.
We're so close in the dollar franc. So close.
Really?
Yeah.
All right. Yeah.
797 is my freedom point.
That is your break even and your get out?
Yes.
Okay. Nice. Yeah, this one's been supported pretty continuously since mid-April.
I like it. But yeah, the Fed speak's interesting because I feel like you mentioned three hikes projected, and I was just immediately like, no, it's not happening, because I'm in the Fed chair who cried wolf mentality of like, they keep saying that all these cuts and hikes are happening, but nothing ever happens. So prove me wrong.
When you have
show me a hike.
when you have something that is, has political consequences, even though these central banks are supposed to be independent, and for the most part they are, regardless, it's not a popular decision for constituents of any country to be hiking these rates. You definitely feel the pressure there. And so a lot of times central banks will defer to no action over divisive action. But we'll see. I mean, we've had Australia central bank hike twice already this year. Their currency's doing okay, and their economic indicators are doing okay, not falling off a cliff. So if you can support it, hikes, if your economy is strong enough to support rate hikes, the central bank does hike. In theory, that should bolster demand for the currency. You risk the central bank hiking, those economic conditions deteriorate, and then it's no longer a purely, I get a higher yield for holding this currency, but you have less economic activity taking place within that currency, and numerous other factors where that theoretical rate to currency strength relationship starts to break down.
And I think it's interesting that if you look at the FedWatch tool, the first decision time frame where the probability is less than 70% that we actually make a movement, whether it's a hike or a cut, is all the way out at the end of April in 2027.
Really?
Everything else, like this,
very low odds. Yeah.
It's very low. Like next June, 96% no cut. July, 94% no cut. September, 90%. October, 90%. December, 88%. Jan 2027, 82%. March, 75%. April, 67%. So I think that could be why, like on a day like today where so much is happening, and you look at SPX 0-day implied move, it's only 25 points. I think that could explain why, regardless of what's said, the Fed, the futures market is telling us that nothing is going to change this year.
Yeah, I mean, what's exciting, maybe not as that picture of stability sounds very nice.
Could change though.
Could change, and a political wrinkle there would be the possible confirmation of the new Fed chair, Kevin Warsh, and how much markets respect either his independence and will just take this stewardship and guide the ship in a similar direction, or if people want to be priced on the side of, in the case that he and the board lower rates for more political reasons, do you want to be positioned for that to be a favorable situation? Who knows?
Yeah. Well, thank you for coming on. Thank you for the analysis. I'm sure you will be glued to your computer at 1 p.m. Central, 1:30 Central.
God, oil up 7%?
Yeah.
Things are moving.
Oh, I just looked at ZB. That's one.
That was not on my bingo card today. Yep.
Nope. You know what is on your bingo card?
What?
Greek Kitchen.
Yeah, it is.
Bye-bye.
All right.
We'll
Thank you,
release
guys.
And again, thank you. If you want to follow Glenn on Twitter, he's at Glenn Freiberger. Give TastyFX a follow as well. But enjoy.
Thank you, sir.
Hopefully you get some ribs.
Yeah, leave some for us.
Not ribs. No ribs. This is the place with the sliced potatoes.
No.
Yeah, no.
It's the place with the chunky.
No.
Chunky hummus.
No. That's the rib place.
What am I?
This place has the pita chips.
Oh yeah, they do.
There you go.
But I'm limiting myself to just
yes,
3.
Just 3.
Hey,
what's wrong with pita chips?
Gotta get shredded somehow, right?
Don't get shredded eating pita chips.
I think you do. If you only eat pita chips, you probably get shredded.
There is something to that.
I got to think about
20
that.
chips a day. All right. Thank you
Thanks,
very
guys.
much. And we will catch you later today. Peace. E-minis NASDAQ selling off here. E-minis down 26. NASDAQ down 7. Just a slight little hiccup here. Microsoft down 8, almost $9 right now. Maybe a pre-earnings sell-off. Hoping for a post-earnings pump, though, there. But I haven't really looked at Google or any of the other ones. Have you placed any trades in there today?
No, I haven't done anything. Yeah, I haven't. The only thing I've done is just close that Humana. That's worked out. I closed out one of them. I got 2 more. I was kind of trying to see if stock was going to get to 240. But now that market has turned a little bit, it's pulled back some.
Nice. But yeah, $4. Love it. Big win there.
Yeah.
I did actually, I closed something, but I didn't post it yet to the follow page. It was the HE short put spread to finance the butterfly.
Oh, yeah.
So I closed that for like $100 net profit. I'll post that to the follow page when we're done here. But yeah, it was a $100 net profit between the short put spread and the butterfly out in June. So just took that off into this rally here, slight little rally, and just wanted to free up some capital for some other stuff here. But yeah.
Look at bonds right now, man. Those are not pretty. Not pretty. CB below 113. EN below 111.
Yeah. Things are moving.
Yeah.
Things are moving. And yeah, I think really it's gonna be pretty wild to see the earnings announcements after the close today and how that moves the markets. You can just look at the NASDAQ futures to get a holistic view, especially if they all report around the same time and the futures are crashing or ripping higher.
Speaking of ripping higher, 10-year just alert went off. 10-year just went above 4.4%. There's that. So I'll set a new alert on that. It's going to 4.5. What are we doing?
Wow. 4.4, up 1% today. Big move. Big move. But yeah, let us know what you are trading in the YouTube chat. I'll pop over there, see what the people have for us today. The break-even point in trading options is not the guarantee I won't be assigned, right? Correct. If I sell a $100 call for $5, my break-even's at 105, but I can still get assigned below that. No, you won't get assigned below 100. I mean, technically you can, but there's no reason for the counterparty to exercise it. Your assignment risk has everything to do with extrinsic value remaining in your option. So even in like Apple, they have earnings after the close. Tomorrow they have earnings after the close. But even if you have a short call at 260, yeah, you're 10 points in the money, but you still have $200 of extrinsic value in this option. So whoever exercises this option lights $200 on fire. You could close the shares, resell the option, and add $200 of extrinsic to your cost basis. So extrinsic value on an in-the-money option, the lower it gets, the more at risk you are for assignment. But if you're selling a naked call or selling a naked put, it doesn't change your risk profile. You already have 100 deltas of downside risk with a short put and 100 deltas of upside risk with a short call. So assignment is not something I worry about at all. But we're usually rolling or adjusting positions prior to letting things go to zero extrinsic value, 100% in the money.
Yeah, so we don't have to think about these type of things. That's exactly why you want to roll.
Yeah. Intel. We talked about a call diagonal spread on Intel. It's up 55%. Still have a lot of time, but I'm unsure of how to manage longer duration diagonals. Any advice? It was an 80-105 long July, short June.
And you're right in the middle of that thing.
Yeah.
Good place to be.
Yeah. So yeah, this was a 15-point wide. I think you put it on for like $7 or something. I mean, it's up 10% today. Massive move after the gap higher. So yeah, I think closing it is on the table.
I'd probably close that.
But yeah, other than that, like you don't really make any adjustments with this kind of thing. There's nothing to adjust, right? If you had the May 105 short call against the 80 long call in July, then I would say what you could do into this rally is buy back May for $3, move it to June, and move the 105 up to the 115 or the 120 if you wanted to make an offensive adjustment. Or you could roll it into June and pick up more premium. But you're already in June, July. There's nothing to do other than if you want to hold it, if you're still bullish, you can make a little bit more money on it, but still a great return on that trade. Powell speech is delayed. Whoa, whoa.
No way. Is it really?
Come on. Is that fake news? Is that fake news? I don't see that it is. Palantir?
Yeah, this thing's getting beat up today. Not sure why. What do they want to do?
Jermike. Too short. Oh, Jan 2027. Spicy. You're out in the spicy zone here. So too short, 92.5 puts, 135, 175, call spread.
Whoa.
Okay. And okay, that was for $1 debit. So basically, short put to finance an upside call spread. Don't mind it. I think it's okay. I would rather collect a credit here personally, but I mean, it's whatever. If you move this in a little bit, you pick up a credit of $1.50. You don't really change your upside prop potential all that much, but you do create a neutral zone of profitability instead of losing $80. So it's a $200 swing in the middle. And you reduce your cost basis below 92.5 just a little bit with a credit versus a debit, where your break even is above your call at expiration. So I kind of like just forcing a credit here for longer term trades, especially, but it's up to you. And then Hood.
Hope they listened to us yesterday.
Yeah. Hood down 15%. Interesting. Very interesting. I think it's a similar too short 50 puts. I guess it's in Jan 2027. Two short 50s and a 70-100 call. Yeah, so just Super Bowl setups here with undefined risk to the downside. Yeah, I like this one because you're collecting a credit here. And you have a lot of asymmetry to the upside. So, yeah. And you can take shares below 50 if you want to do that.
Approved.
Approved. Only 27% of my 900 stocks I track are higher today. The end is near. It's all over, folks.
Well, let's see. Number of S&P 500 names above the 50-day moving average, is 50%. Yeah, the breadth in this rally has not been that great. It's true.
Yeah. Only one page of green today on the S&P 100, multiple pages of red. I wonder how the NASDAQ 100 looks. Oops. Yeah, we got some Starbucks up.
It's bugs.
$9.
Oh, was that earnings? I'm
sure Dr. Jim was placing a bullish trade on that.
That's his stock. He loves that one?
Yeah.
It's got to be earnings.
Can't fade the Starbuck. But yeah, kind of an interesting day. But I still think this is kind of an inside choppy day until we get those big earnings reports from the big names later. Like, things are moving for sure on their own earnings reports and other things, but I think you get the macro move after today when the market closes. What's up with ADP?
ADP.
You tell me.
Earnings probably.
Automated data processing, mooning. Surprise, surprise. Off of the lows, though. Interesting. They must have had earnings.
Earnings. Probably.
Yeah. Yeah.
Yeah.
Yeah, up $12. Nothing too crazy. Low vol back here. So if you think this move continues, I think this product is interesting for like a diagonal spread. Just because you're buying 32% IV back here. You can still sell some heightened IV in the near term, but these options are cheap for a $200 product that's up 6% today. Long August, short June, something like this. 20 points wide for $9. Markets aren't that great, but it's interesting.
Yeah, I've never really traded this name like that. Certainly not personally. Maybe once upon a time, but
yeah, indeed. Wonder what time earnings come out for tech stocks today. I can take a look at the actual times.
Oh.
Let me take a look here. So today after the close, we've got Microsoft at 3:05 Central, Amazon at 3 Central, Meta at 3 Central, and Google at 3 Central. So all of these are going to be right after the close, immediate movement. I'm just going to look at the NASDAQ futures and to tell me what's happening. And Microsoft, because we have a big position in there. Big in terms of multiple strikes, not necessarily like risk big.
Something else. What a day. What a day.
Insane. I love that they're all at the same time.
I know. It's amazing. It's like, oh my
I have
God.
just like everything on all at once,
boy.
flashing around.
But again, the big thing is their calls, right? Like whenever they have their calls, that's probably the most interesting part.
Yeah. Indeed. Natty Gas, Iron Condor, short put at 2.7. Trade management thoughts.
Gas fall is actually kind of low. I wasn't looking at this until Chris pointed it out yesterday when we were on Futures Power Hour.
Yeah.
He's talking about buying a call spread or something. I kind of agree with him. I'm not yet. I got too many other things on that are more important right now, but maybe.
Yeah, I had the same strike. I had the 2726, 3334, but I closed that on the 22nd for $100 winner just because having a winner in Natty Gas is foreign to me.
Yeah.
So I closed that and just took some risk off. But 2726, if you have it on the same trade, there's nothing to do here. I mean, it's at the money. It's a risk one to make one situation now with 27 days to go, and Natty Gas can move on a dime. So, yeah, I think if anything, maybe you consider buying back the call spread if you had the 3334. As long as it's worthless, yeah, it's 30 cents. So I might consider buying this back. I don't really like rolling this down because then you're just creating like a butterfly feel too close together. You have to hold it all the way to expiration to get any value out of that. So I think if anything, you buy back the call spread if you're still in that trade. But yeah, not much to do with the 2627.
Yeah, I'm interested in the idea of buying to open a call spread. Either June or July. Just not at the moment, but very interested in that.
Yeah. At these lows, yeah?
Yeah.
Why not? Or QG is a smaller product. Do they have a micro? I don't know.
I don't know. What is QG?
Oh, yeah, they
Is
do.
that- they do? Oh,
Micro.
yeah.
So yeah, if you wanted to just get long at these
That.
lows, you could use MNG, buy a contract here. I'm gonna do this. I'll get in.
Thing?
I think it's just $2,600 notional, because QG is bigger. QG is I think 10 grand. I think it's 5x the micro. But the MNG is $2,600 for one contract notional. So I just bought it. So I'm with you. I want the rally. What else we got here? A couple minutes left. We are all cooked.
It's the end of the world. I'll
So-
see you guys on the other side.
Yeah, to that point, this person is spouting off some bearish sentiment. But like, this is a time, if you think that these tech stocks can really ruin this market if they report poorly, like a downside butterfly is how you can hedge against that. We've got a bunch of them on. The 100-point wide turn into a 50-point wide put spread, 100-point wide long put spread. Like, if this thing goes in the money, this will be a $3,000-$4,000 winner and it would offset any losses I have that are on the bullish positions. But yeah, if you want to hedge this week, I think that's really interesting for like a 2-day butterfly in SPX. I don't know how cheap this is going to be, but yeah, $500 for a 50-point wide, 7,100, 7,050, 7,000, or you could go 100 points wide for $1,600. It's more expensive, but like, let's say you have $5,000 in upside risk on bullish positions. If you think these markets, you want to hedge against these markets, like this is a trade that can be an $8,000 winner on Friday if we get down to 7,000, 100 point sell off in the E-minis. You could do a similar thing with like Qs and whatnot, but downside butterflies in a day like today, I think makes a lot of sense. But we're already in it. Qualcomm earnings.
Yeah, they're on the way.
Trading that one?
No, it's interesting though. You wonder if it can pull off an Intel-like move.
Mm-hmm. I mean, it already kind of is.
Yeah.
Sympathy 3% upside move. July, May, 170, 175 strike. Calendar spread.
July, May?
July, let's see. Let's look at June versus July. Yeah, July you're paying like $200 more for each of these options as opposed to June. So it's not that if it was less expensive to go to July, I think going to July makes more sense. But to Jamal's point, like June, you have a similar amount of implied volatility here. So I think going to June makes sense if you want to make it more sensitive. But yeah, the 170, 175, you're reducing basis pretty well there. I would go with the 170 personally, just because you're picking up twice as much premium and you get all that premium in 2 days anyways. Even if it rallies to 170 or 175, like you're going to be golden with a 170 calendar out in July or even June. So yeah, I always try and reduce basis as much as possible with that short option because it just widens out your break evens the less you pay for it.
I mean, I think it's worth a shot. I mean, the peers are Intel, AMD, at least the ones that have had earnings more recently, and Texan, and seen what those have done. So
yeah,
worth a shot.
Yeah. And if you go to July, it's a $500 debit, $2 or 2-day short option here at 190. And then you have the ability to buy back the 2-day, roll it to May if you need to, roll it to June if you need to. So you can reduce basis pretty well here. I'll get in on this with you. Why not? Instantly filled. And price improved. Oh, God. July, May 1st, $5.32. 170. What else we got? Amazon Iron Fly, 2 days to go. Sell at the money, buy wings at the expected move.
Amazon.
So you're playing for an Amazon nothing burger, huh?
Possible. I know, right? All this hullabaloo we're making about these earnings. It's possible to do nothing.
Yeah. I mean, I don't hate this kind of setup. I think if you're playing for an inside move, you have $1,400 max profit relative to $600 risk. If you do get a move, your max loss isn't going to come into play right away because Amazon is still almost a $300 product and it will still have implied volatility around here. So I think your real-time risk, if you look at the Theo, is closer to like $200-300, as you can see here. At expiration, it'll be $600, of course, by the hockey stick looking risk graph here. But yeah, I think
I do kind of like this.
Yeah, I think you got to temper your expectations though. At the same time, like even if you hold this to Friday, you really need to hold this to expiration. So like the 30th, you can see even if you get this vol crush and middling price here, like you can make $300-400. To actually get $1,400, you have to hold this to Friday's expiration, 2:00, 2:30, and then you'll get most of this value. So Just something to be said there.
Nothing burger. Could happen. You never know. Something.
One more here. You mentioned in the video to roll a short put before it goes in the money. That was the latest options in action video talking about short puts. But short 11 put in SMR, $1.50 credit. How should I manage or just wait?
May.
June expiration, it looks like. 11 strike put. So you're in June, so I mean, you still have plenty of time. But if you wanted to roll it down, it would be moving it way further out of the money or farther out in time. You'd have to go to like the 9 strike out in August for a small credit, something like that, or the 10 strike for small credit. So there's not much flexibility here just because it's $11 stock. If you had a higher price stock, you could make more adjustments, but that would be the only thing. It's just like buying back June, going to August or even further out in time and moving it down and matching the price here. Looks like you can't really go further than 10 or 9. So I think this one, I might just hold because it's $11. But that's it. We're out of time. Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. Glenn is at Glenn Freibarger, and give TastyFX a follow as well. But stay tuned. Plenty more content coming your way on the YouTube channel as well as tastylive.com. And we will be live from the SIBO floor tomorrow.
Yes, we will.
See you then. Peace.
Earnings and Fed.
Woo, woo.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to.
What is going on, everybody, and welcome back to Risk and Reward, where we are on for a full hour today, going right up to the Fed decision. We'll be getting off just before that comes through. Thank you. You're all too kind. So that gives us plenty of time to discuss this very confusing market environment that we're in. I'm joined, as always, by my wonderful co-host, Errol Coleman. Errol, how you feeling? What's going on?
Good, brother. How we doing today? Yeah, it is a really interesting market. I know we're just prior to FOMC, so I'm kind of excited to see if we get a little bit more directional volatility. But interestingly enough, we had seen oil catching a pretty hard bid last night. Really curious to see where the market ends up from there, because it seemed that oil and NASDAQ kind of disconnected from each other. And I wonder if that correlation or that inverse correlation is going to be back in the picture. So that's been top of mind. But how are you doing today?
I'm doing good. I'm doing good. Yeah, I'm very confused, and we are. I mean, this is going to be one of the biggest catalyst days of the year. It's major earnings today after the close. It's 4 of the Mag 7, Google.
4 out of the 7, yeah.
It's Google, it's Apple, it's
Microsoft,
and Amazon. I want to say Qualcomm goes off also.
Yeah.
Somebody can correct me if I'm wrong on those earnings, but it's four Mag 7 earnings after the close. We have FOMC in the middle of the day, and as you just alluded to, oil really starting to move out of sync with what we had come to expect, which only confuses me further. We can jump straight into the Tasty platform here, and I'll just try to paint this picture a little bit. So let's look at oil first. That's
and also,
a better way to do this.
One caveat is the fact that today I think is Jerome Powell's last time up there today, if I'm not mistaken. So that's another check mark on the box. I think, funny enough, it's Jerome Powell's become a little bit of a meme, especially with the young Gen Z generation over the last 5 years. So, I mean, before 2020, 2021, I didn't really hear our peers speaking about Jerome Powell, but it's a meme now.
You think he's gonna blow it up walking out the door?
I don't know. He might do something.
It's a cool guys don't look at explosion situation.
Honestly, I really don't know. Curious to see what color tie he's wearing. Maybe so. It would be like a mic drop moment, but I'm curious to see some type of directional volatility. I have no idea, but I don't even know if that'll influence anything. But humans are funny.
Yeah.
Maybe
he's done a good job for a long time here. Everybody's always got their qualms with the Fed chair, but I think he's been pretty solid overall. And it's time to play some golf.
He's definitely kept himself composed, especially with the position that he's been in over the last few years and the type of pressure he's gotten from other political figures at the same time.
Yes, lots of professionalism there for sure.
Yeah.
I will take a brief deviation from what I was about to dive into because I've seen two people mention it. We are 65 short put in hood, 50 DTE. And then I also saw somebody say, I'm selling 50 DTE put in hood per Liz and Jenny. I suppose this maybe is a Liz and Jenny idea originating here.
Right. They crashed pretty hard, right?
Yes, they did. But yeah, no, big dump in Robinhood. I like it is the...
I do.
To put it short.
You got a lot of options.
That's good. Production doesn't think it's funny, or we would have gotten
that was a good one. It went over. It went over.
It's just.
It sounded too natural.
But no, yeah. I mean, in short, I like it. 65 would be, year-long lows that we would have to test down here. 50 DTE is plenty of time horizon to let things recover, and that's one of my favorite trading opportunities to take advantage of is big gaps down after earnings like this on strong companies that you feel are going to recover. Taking those back to the upside. You might not have exactly timed the bottom perfectly. This does seem to want to continue to fall throughout the day today. Maybe we'll get some, little baby legs down, test this 67, 68 sort of level over the next few days. But with 50 days, you got plenty of time, and yeah, I would expect things to go because you always have to imagine that. Well, not imagine. I mean, it sort of is reality, but you have to understand that right after an earnings call is at least should be I don't want to say the craziest things you're going to get. It should be as extreme as things are going to get. The market quickly reacts to try to price in this new available information, and often does it a little too much. Often overprices in that information, overreacts a little bit, and so it's rare to see situations where you get a down move like this on earnings, and then we just continue to make $10 lower over the next 2 weeks. Usually, if anything, it's an overreaction or it's the correct reaction, and we stagnate at these levels, which would still be fine if you're short the 65 put. So I don't hate it.
100%.
I like it.
I actually might have to go.
It's hard to bring myself to say I like being long Robinhood. They're the enemy.
Yo, you know what? When you put it that way, I actually do like a little bit of long delta in hood. Might have to throw some in there because Micron is not working out too hot right now, and we got to diverse a little bit. So it does make you feel a little bit more comfortable after the gap down and the continued sell-off. So as much as I hate to say it as well, I don't think Robinhood's going to be going anywhere. So.
Yeah, back into my original point here, and I see James Swanson is actually way ahead of the point that I'm about to make in the chat. But we have crude oil flying, okay, and forever. Well, I shouldn't say forever, but for the midst of this kind of volatility cycle that we've been in, and we can zoom in to get a more granular picture here. This has moved opposite the broader market. You can see here, same zoom, market going down, flip back over, oil was going up, and then oil coming down. And we have market going up. But now, suddenly, for the last however many candles this is, 8 days, they've begun to just move together. We have this rise happening, and they seem to just wrong thing I'm looking at. I was like, why'd that look so different? Yeah, they're running up together. This is almost to the day. 8 days is right here, April 20th, and if we pop back over to SPX, 8 days is right here, April 20th. Both of them moving up together, which is not what we've come to expect and makes no sense because the whole reason that we've seen this V-shaped recovery happen in the market, as everybody is well aware at this point, is Iran conflict, uncertainty, driving things down, some semblance of certainty drives things back up, and if there's some semblance of certainty that things are ending, you would expect oil to come down because oil has seen it the other way. Iran conflict drives prices up, perceived certainty drives prices down, and you would think that this downward continuation would continue if the certainty is really there, but oil continues to fly. As James so acutely put it in chat over here, CL is basically VIX now. that's sort of the way that I'm choosing to look at this. VIX continues to stay contained, obviously elevated a little bit today, up about $1 off the sub 18 levels, but VIX continues to stay contained below 20. We're not seeing any insane levels on VIX, but the oil market seems to be what's actually pricing in uncertainty at this time. And I don't know if that's just because there's so many retail traders getting involved with the broader market that aren't getting involved with oil, and it's more institutions that are trading these oil products, and they just have a better understanding of where we're actually at. I have a hard time attributing it, but I'm quite confused by this action that we're seeing in the broader market. We're definitely at a decision point. I can't help but feel that tail risk is imminent. I just have no idea in which direction that tail risk is going to present itself.
It's such a funny spot, too, because I think it really puts Trump in an extremely difficult position because, once again, rising oil doesn't help inflation. The market is chilling at all-time highs. We've got a little bit of a pullback, but we're technically still at all-time highs. And let's not forget the legs we put into this all-time. I mean, it was one of the most insane runs I think I've seen over the last couple of weeks. We put in 2,000, 2,500 points in the NASDAQ to the upside. Now we're consolidating at all-time highs while oil is ripping back to its previous highs. We have more volatility coming into the market with FOMC. So I could imagine if the market pulls back hard, I could imagine oil popping to the previous highs, or maybe we get another extreme surprise where the market pokes another all-time high and then oil finally takes a little bit of a cool-off period and a pullback. It kind of seems like those are the two scenarios that may play out. And I think both will be interesting, but I think Trump is in a really difficult spot when it comes down to inflation and oil.
Yeah, I think Viggy Sags put it very well here. This is very articulate. Nah, just stonks. We don't care about no stinking oils. And stonks only go up, just stonks as long day. Wait, I don't know. I don't understand the last part. As long days a text. I'm with it. I understand, and that's basically what I'm getting at here. I think that the market is saying precisely that. As funny as it is to say, I think the broader market is saying stonks only go up. We don't care. We don't care about no stinking oil. And that's to say retail is doing that to a large extent, and maybe some institutions are involved with that as well. But over here with oil, I just think it's more institutional traders. Like go to some finance convention of some sort and walk around and find people that look like me and ask them what their favorite product is to trade. And I would bet you less than 5% of them would say oil. If you took a substantial sample size, they would all say things like AMD, like NVIDIA, like Tesla, like Microsoft, these things in the broader market that move. Whereas if you go to any institution, go to Jane Street, ask them what they find themselves trading a lot of, but there's a lot of oil. They have the information, they have the monitoring, they have the algorithms to go after these things. And so I believe I am at least interpreting this as, and as people have pointed out, there is a shortage of oil still. I understand that there is a substantiated reason for this move in oil that does not necessarily have to translate to the broader market. But I'm interpreting this as a pros versus Joes sort of situation where the public is hyped up and pushing the broader market higher, while there's more institutional involvement with oil, which is actually properly pricing in the risk that we're seeing a little bit more. So, as I said earlier, I believe that tail risk is imminent. I lean that it comes to the downside, but not with nearly enough conviction to start, actually getting full short portfolio delta, because I also am not surprised if we're at 7,300 by the end of next week.
No, agreed. I'm really curious to see what oil's going to do here. Rhett said Trump told him yesterday to get their deal done or else get going. I guess that's why oil is up. Yeah, oil's definitely being tampered with. And I mean, even if oil does continue to pop, oil is still completely in play because oil's not going to be sitting at these levels. I think oil, once again, is a round two. It's another gold, it's another silver. We already had the oil run. It's going to be another round two. But if that does happen, I'm curious whenever the real pullback in oil comes, if the market will pop to another all-time highs. I'm just curious, who's a buyer right now? Who's a buyer right now, all-time highs? I know a lot of longs are managing their positions, but I mean, I feel like this is one of the most difficult positions to be in. We got interest rates today, we got FOMC today, and we're consolidating in the range at all-time highs with oil popping. So, to hell with this market in a handbasket, I guess.
Yeah. My prediction for the next 48 hours is that I think with all the earnings after the close today, with how beaten down some of these stocks reporting are,
I forgot about earnings. Good Lord, look, things are getting crazy. I forget.
With Microsoft chief among them, but a lot of these stocks still off of their highs. These companies that are reporting earnings later today. I think that we're going to see a big jump into new all-time highs at tomorrow's open. And then probably some drawdown after that for some days. That's sort of where I'm at here. I think that all these earnings, there's just going to be so much hype. I think everybody's going to crush their earnings and give really good forward guidance and all that good stuff. So yeah, I think we'll see like a leg up, maybe test 7,200, maybe even a little higher with the way that this market has shown a propensity to move. And then we see a slow trickle down, maybe to retest 7K over the weeks that follow once that giant earnings hump is out of the way. However, you might notice at no point in my prediction did I just say anything about the FOMC, which could totally shake things up as well, depending on the sentiment expressed there. So yeah, confusion is the word of the day.
Volatility for sure.
Yes.
Yeah.
But not in VIX though.
No, it's still quiet over there.
Yeah, I mean it does continue to climb.
But that makes me a little it's a little quiet right now. When things are a little quiet, the storm, usually is right around the corner sometimes.
Yeah.
I would just once again I think oil getting bid up this high really threw a wrench in like everything, because I think oil is really driving a lot of the market right now, because I think the Iran and Trump conflict is on the forefront. And I mean, I think I'm just a little bewildered that oil's at 107 right now. So
yes, bewildered is a good word that we could use about today.
I mean, these moves are so aggressive. They don't even take like 2 to 3 to 4 days. They will happen in the span of just a few hours overnight, right?
And I'm becoming desensitized in a big way. Like the moves that things will take, where I'm just like, yeah, okay. Like I look at my account this morning and it's like, oh, oil's at a new high. Okay, oil's up 7%. Sure, man. That's just another day in the market. A lot of these companies, like take Intel, for instance, no news, no nothing, 10%, 11%. Intel going ballistic here. And it's just insane, because I see this and I'm like, okay, I'm not like, oh my gosh, this is insane. Like I should try to get involved with this. I think this is too high. I think this gap to the downside needs to get filled. I'm not thinking any of that. I'm just like, okay, this makes sense. This is what happens. SanDisk doing it again today, much to my dismay, although earnings could still mess this up for him. But yeah, SanDisk, gaps up 7%. I literally don't even blink when I see this. 7% on SanDisk is like 0.1% on the broader market. This thing moves 5% every day like it's its job. And sometimes it's to the downside, sure, but obviously in vast majority, it's to the upside. And this thing is up, what are we even talking about here? 20x in the last year? In the last 6 months. It's incredible. It's incredible, this market. And it is very difficult to trade, I must admit. We are running out of products. The price is wrong, Bob. I agree. We're running out of products. And I mean, that was what I got at with the whole Allbirds frenzy, was it feels like we're running out of products when Allbirds does this, when a failing shoe company can just say, AI, GPU as a service, and then they go flying like this. It's like, okay, man, is the top in? Is Is this 2001 right now? Is that what's happening? Is Allbirds Cisco? Who is Cisco? Somebody is. It's I don't know. It's alarming. Perhaps would be a good word to use.
100%, and I'd agree. Keeping up with the news is exhausting. It's something you have to constantly pay attention to. I'm not going to download Truth Social. I don't need another social media app to log into, but I will follow the account that tweets everything that comes from the Truth Social account. But I mean, that's just another layer onto all the news that we're getting, and it can be exhausting. And I think it's really murking the waters once again when it comes down to this headline risk. It's like, what type of headline actually moves the market when it seems that every headline is moving the market? Struck oil in your backyard, hit us up. Stay right there. Don't call anybody. We'll be right there.
That would work. That would absolutely work in this market environment.
I know. Extra supply of oil. We got to pull back in oil. Shout out to Arjun.
The ticker is APER. We're gonna slam this new company.
Yeah.
What you're gonna want to do, Agent Per, is while you're drilling that oil, go ahead and build a data center in your backyard also.
Yeah.
That's how you really bring it in. All right. Can you imagine the oil and GPU company in the year of our Lord 2026? You'd be richer than you knew what to do with.
Oh yeah.
Certainly wouldn't need to worry about trading anymore. Only thing you'd need to worry about is which yacht you're going to buy.
Pretty much.
But yes, keeping up with the news, trying to trade it has been exhausting. I mean, that's just such a true and all-encompassing statement for what we've seen over the past number of weeks. We just. Because the news changes all the time too. That's the thing, is even if you can stay on top of it, it might only be valid for like an hour. And sometimes that might be to your benefit. I had a very benefit when we had the fake out dump on oil like 2 weeks after this all began. I was able to take major advantage of that.
Yeah.
But often it will be to your detriment.
Yeah. Look, I'm more of an independent, but I really do think when it comes down to all those things with the market, I mean, I really do think Trump is manipulating a lot of the market, if I'm being completely honest. I'll just make it blunt. I think he is manipulating a lot of the market for whatever reason. I think he's creating a lot of the uncertainty for whatever reason. I think uncertainty creates a lot of opportunity. And I think that it just trickles down to the rest of the market participants as well. And I even think Iran's a little confused too, but I don't doubt that even Iran is taking advantage of all the chaos that's going on right now.
Yeah, so. I mean, I think everyone's confused.
Yeah,
I don't know that anyone really has a full handle on the situation on either side of the equation right now. I got some call credit spreads for American Airlines expired June 18th. Let's see how it goes. That's a good way to break us out of our cycle here. American. I was able to. I took advantage of some nice shorts on this after the United merger fake out situation. I got into those. That was like this gap here, and I managed to get out like around the 1150 range. So did okay on those.
Nice.
So a bit too aggressive with my strikes. So I didn't max profit, but something like 20% profit on that position. But yeah, these airlines are an interesting spot, and the rising oil prices only continue to worsen that. But yeah, I don't hate it. I don't hate it.
No, yeah, and I mean. Yeah, lastly to your point, Steve, you mean people go on the internet and lie? No. I like Trump markets. I don't like a lot of things that Trump does, but I like Trump markets. I mean, as a trader, I think volatility is a trader's best friend, and I think volatility creates opportunity. So at the end of the day, I think it's great. And it just reminded me of, the airlines. It was something with the airlines. They've just been so slow moving for me. I haven't been really keen with them. I don't think I'm patient enough. I think it's just an entirely different product, but getting a lot of volatility in there over the last couple months, though.
Yeah, I think we'll see some nice recovery.
That's American, right?
Soon. Yeah. These airlines are all just in a position. United, especially this one, might be the most attractive to me. But these are all basically in the same position that Microsoft was down here off these lows, where it's just like, how long can a strong company continue to slide? How long can a United Airlines can continue to slide, continue to lag behind the all-time highs that we're seeing in the broader market without really catching any semblance of momentum? But I mean, yeah, we're way down here off the highs, 120, so something like 30% below the highs at the moment. And yeah, I think recovery is imminent. I think recovery is imminent. And I like United from a technical perspective here too. I mean, dating all the way back to last year, this 85-90 level has been a pretty firm point of support for this.
Yeah, most definitely.
I might even talk myself into something here, because I think I want to get some longs into tomorrow, because I just think we're going to get a little bit of of a jump after these earnings. And then, like I said, I think we will slide after that for some weeks, but I'm less certain of that. I'm pretty sure that just the earnings hype alone is enough to prop some of these things up. I don't want to get too crazy with this. Let's do the 85 level, like the bottom of this range, and we'll keep this pretty tight. We'll just go 30 DTE. Let's do this.
The thing about that, Steven, is I think that your mom might be right. You might be one of the most handsome in the world. Just let's get you might agree with that too. Yeah, what you looking at over there?
Yeah, trying to find the best risk profile here. Obviously, this far in the money, I'm going to wind up posting up more than I'm able to get out. But I'm deciding exactly how I want to attack this.
Yeah, admittedly so, Stan. I'm on board there too. The Trump markets are really fun, I will admit. If you say that out into the streets where people aren't familiar with the market, they might throw some stones at you. But Trump markets are kind of fun. They're very volatile, and the uncertainty creates so much opportunity you kind of have seen coming. So, here we go.
Yeah, I think we're just going to do this 80-45. I'll get 3 of them. That feels right. A little over $100 to be collected, and we'll hopefully get a fill there. How wide was that? Pretty freaking wide.
Market's just a little bit wide over there.
If we can't get, there we go. All right.
It's an insta fill.
Yeah. So we're in for 100 max profit there on what was that? $201 of buying power. So pretty much exactly 1 to 2, I guess 2 to 1 risk to reward there, which is a little bit less aggressive than I typically like to be. But this 85 level is just such a strong support on United. I feel at least fairly confident we're not going to see a dip below that. And it does seem to be running out of steam on these lower levels. So yeah, hopefully we get a sustained bounce, or even if we just hang at these levels, give myself a little bit of room to run there. 85 level, like I said, I mean, all the way back to last summer has been pretty strong support for this. So we'll just hope that can hold. And like I said, I do think the airlines just can't stay beaten down for too long, especially if the momentum in the broader market keeps up.
Yeah, good points.
If this war is not resolved soon, oil will go to new highs, setting the stage for an inevitable U.S. recession. What would that look like? IMO, SpaceX, and OpenAI IPO shortly thereafter sink. Interesting. That's interesting. As far as the oil new highs, inevitable U.S. recession, I think that line of logic is fair. SpaceX and OpenAI IPO, though, I don't know if I would expect those to sink in really any environment. Maybe in the months to year following the IPO, if we are in a period of recession and things, the whole market is just working down and down and down, it would be hard for them to sustain any growth through that. But I think no matter what, the first few weeks to month following those IPOs, it'll be pretty insane. Like I've said, my plan is just to hopefully get involved in IPO, ride it up. Even if not, I will definitely be looking for the top of whatever I can determine to be the top, because there is going to be a disproportionate amount of hype surrounding those companies. As strong as they are, as much as they might be a giant part of the future, I guarantee they will get too high. And there will be one day where all of a sudden we have to come down 10-15% and price things back in.
How does SpaceX make money again? Sounds like a rhetorical question.
It does.
That's hilarious.
No, SpaceX. The biggest thing for SpaceX, well, I mean, they do a lot, but Starlink is, I believe, their biggest revenue segment, which is ever growing and being adopted wider and wider.
I think it could be a big player for real.
Yeah, and then they do lots of launches for other people. They have government contracts with NASA to get people to and from the ISS. They take lots of satellites up for other companies. They kind of do it all. There's like all these other space companies, your Planet Labs, your ASTS, your Rocket Labs. That do individual parts of this process. They can manufacture things to get you into space. They can take your stuff into space for you. They all these different things. But SpaceX is sort of an all-in-one. They're kind of doing all of it.
Mm-hmm. Is it a better use of my time is investing it into learning how to use AI to benefit my life, coding, et cetera, et cetera? I would agree as well. I think that technology is moving very fast. Let's say you got into the workforce. Let's say you started getting into whatever you wanted to get into in your early 20s. I mean, times change really quickly. I think it's all of our duties to continue to stay educated and learn how to use a lot of these tools. So, I mean, to Jackie's points right there, I'm actually a little excited for the whole AI train, just because In the .com bubble, I mean, most of the companies went away. Most people don't even know where they are today. I'm excited for the AI bubble to pop so we can see which ones rise to the surface to that point.
Somebody tell me the space ETF. It's living on my mind right now, but ASTS is a reference.
Sold the 65 strike, put in hood, 50 DTE for a little post-earnings action. Nice. Everybody's getting on a little bit of long delta. I think you got a nibble there.
That seems to be a popular trade. I think that's the Liz and Jenny trade from earlier. I'm not sure.
Yeah,
but
I think you got a nibble on it.
Yeah.
You know?
I
mean, the IV's solid, gapping down.
Yeah, I'm inclined to agree.
Red on the day. Starlink's the largest percentage of the IPO. Forgive me if you already said the date, but when is SpaceX IPOing again? Sometime this summer?
I don't believe there's a set date
Okay.
yet. But yeah, they filed their prospectus. I don't know. I believe they filed their prospectus by now.
Okay.
Remember, like a month ago, there was news breaking that they were going to file their prospectus in 2 weeks, but I actually never saw a follow up that they did that, and I feel like I would have. So somebody can correct me if I'm wrong there, but I believe that's already submitted.
Yeah.
At this time. And yes, as you said, I think I can't believe how much, and like, you know, I can understand some of it from a moral standpoint, from a logical standpoint, whatever, but I can't believe how much anti-AI sentiment there is in the world right now. It's like you gotta just get on board. I'm sorry, you know, it's I hear everything. It's, you know, it's taking jobs, it's destroying the environment. These things are all true, but if you don't accept that this is not going anywhere, that this is the way the world is headed, you are going to find yourself so far behind.
Exactly.
The best thing that you can do is just adapt, equip yourself with these new tools that we have, and keep it pushing. You know, moral quandaries aside, whichever ones you may have, you have no choice. You must just begin to use AI, and I'm as sick of it as anybody. I mean, it's frustrating scrolling social media and there's just random AI slop videos that pop up. I can't even tell you how many Instagram accounts are just having AI write all of their captions now, and it's so blatant and annoying. I don't like those aspects of it, but I just see so many people that just push back and say, oh, you know, this is so bloated, this is going to go away. That's the wrong idea. It is, if anything, if we are in a bubble, you know, everybody always references the .com bubble. Did the internet go away? No. Yeah. You know, it stayed around. The reason that these bubbles happen is because everybody is correct in the belief that this is going to transform the world and be the entire future. And it's just too much excitement for companies that are too fringe or don't have the fundamentals. But this isn't going anywhere. You must just learn that this is the new world order, basically, and find a way to adapt to it.
Yeah, I actually think that most people would be pretty accustomed to it, and I think most people would actually like AI. I think the word AI just sounds like, oh, new tech, new technology. But I think people would like it if they found a piece of technology that helped them in their everyday life or whatever they do. It helped them out a little easier, made their process a little bit more efficient. I think they would like it, you know. But I do think there's a sentiment regarding AI that people are pushing back against. But it's the same type of behavior that we saw in the early 2000s, same type of behavior that we saw in 2010s. It was just human nature at this point. Everybody pushes back against new technology, but it's coming whether we like it or not. But to that point, I'm just excited for the AI bubble to pop. I know there's so much incentive out there, and I think when there's too much incentive out there, sometimes people are kind of just throwing anything at the wall. So we see AI slop. We see people trying to produce more and more with AI. That's just not great products. It's because they know the opportunity is there. They just trying to figure it out. And you have millions of people doing the same thing. So then you see that lower quality of content being posted everywhere online. People are trying to just figure out this AI thing. So I think AI is a little bit in price discovery mode at the same time, trying to figure out exactly what it is. I think it's a little bit vague to that sense.
Yeah.
So
yeah, and yeah,
using AI to create more AI. Yeah, I mean, AI squared.
It's true. I mean, and yeah, that's pretty much what all these companies are doing at this point. I mean, Anthropic, OpenAI, you name it, they are just.
Oh, why wouldn't you? I think it's one of those things where if you don't, you're just going to get beat out by your competition that will. So I think you don't really have a choice if you want to stay afloat for the most part.
No, yeah, it all builds on itself. I mean, such is true with technology of any sort, right? You know, it's just constantly, building on itself, and each discovery allows you to make the next one a little bit easier.
Future generations are screwed. No, I'm just kidding. No, but I mean, I would say so a little bit. I mean, I don't know. I think Gus and I might have been the last generation where we grew up without technology. And then into our later elementary school years, I know for myself in middle school and high school, that's when Instagram started to come around in 2012. Everybody thought that was one of the most stupid purchases, buying Instagram for $1 billion. So once again, everybody pushes back against everything that sometimes becomes very big. So to that point, though, I think it is the last generation. I don't know how we're going to raise kids with this tech. I mean, I thought the iPad kids was kind of crazy. Maybe it's the AI kids next.
When people, I find that there's a lot of people who still have like this 2023 sort of mindset towards the accuracy of AI as well. Like that's a complaint that I'll see a lot on social media or just in any
how can
space
they
like
make that comparison? Did you
yeah.
see the Will Smith spaghetti video? That
Yeah,
was like 2023,
that's-
and look
yeah.
what we have today. That's just 3 years later.
Yeah, that's a good way. Yeah, and I just constantly will see people say like, I mean, right now today say like, oh, you know, you still got to really fact check AI. Like it loves to hallucinate,
Which is
it
true.
loves to get things wrong, and that's true to an extent, but it's not true to the extent that people are making it out. I
Fair.
can't tell you. I mean, I use ChatGPT for a lot of research, and I can't tell you the last time that it's gotten something wrong. I use Claude to code, and I can't tell you the last time that it's messed something up there. I mean, this stuff has come along really, really, really fast. I mean, we are just leaps and bounds from where we were 1 year ago, let alone 3 years ago, in terms of accuracy, in terms of everything. And the hallucinations still do absolutely happen, and you still do need to proceed with a little bit of caution. It can make mistakes, but people act like it's like 50% of the time you're going to get wrong answers from these AI services, and that's just not true.
Yeah. It's a good point.
iPad kids are becoming adults and having children. It's true. Not quite. Not quite, but we are getting there. I was fortunate to just barely miss the iPad kid generation. I remember when the iPad came out.
Yeah.
I was like 8 or 9 or something like that. And yeah, it was just a little bit too late in life for anybody to be putting a tablet in my hands when I was 2 years old. But that's its own whole issue. Yeah, and literacy rates are falling apart. I do think AI is detrimental for that. I think the main way that I believe AI to be detrimental is to children and childhood development and education. I think that those are the problems. Is that critical thinking and just free thinking skills in general are going to begin to fall by the wayside, because it's one thing to, you know, like I feel like we had pretty perfect educational timing with the development of AI, because by the time AI was coming out and like really was becoming usable, I was like a junior, senior in college. And so, you know, the education had happened already, and I was just kind of using AI as like a supplemental tool to help me with really complex topics in 300 and 400 level classes. Whereas I see stuff on social media all the time now of kids using AI to do like their algebra 1, and it's like that's problematic. Like those are skills that you do actually need to have, but AI has essentially just made education like an optional thing that kids who do not want to go to school, I didn't want to go to school, nobody wants to go to school, have to buy into on their own.
Well, that's because the curriculum needs to change.
Yes.
Right.
Yeah. And perhaps we do just need further shifts in the curriculum.
It will be shifted. Yeah. They have no choice.
It must be like the same way that we had, you know, computer classes growing up. Perhaps there's AI classes on the near horizon in that regard. But yeah, it's I don't know. It would be frustrating if I were a teacher right now. I can tell you that much. I can't imagine how much slop they're getting on a daily basis.
100%. But yeah, I was no iPad kid. I mean, if I'm at the table and my dad saw me eating without my knife, or my knife was in my right, or it was in my left hand in the wrong hand, I'm cooked. I'm getting slapped through the window. So, let alone an electronic. Pretty much, bro. That sounded familiar.
I didn't even know that. We all get better. We all better get good at using these tools. We better watch the trainers to be sure they're training their models on truth and not crap that they want to have in the system. Yes, that's also a good point. These and I have seen instances of bias arise in a lot of these AIs, whether that's just little bits of slippage from how they're being trained, or if it's deliberate to, you know, praise certain groups and not others. I have seen that come to pass with some of these AI services as well, which is also alarming, and especially as more and more people use these to educate themselves.
And because there's so many AI startups too, this is where it gets difficult and it murks the water. When you go on social media, everybody's talking about a new AI agent, how I'm implementing AI into my business. Everybody's just hyping the mess out of all these different tools. When there's people, that's what I'm talking about. The incentives, in my opinion, are messed up, because everybody's pushing everything because there's an incentive behind it. So, right, the way to market in today's society is you find influencers, you find people that can talk about this product, that use it, blah, 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 blah. And people are hyping up a bunch of BS that's going to go underwater in the next 6 months. Maybe 12 months, if then. So again, I think the incentives are a little bit messed up, and it's pushing AI even more. But I think if we just stay educated, you'll see what works, what doesn't. But we already know we have the big boys like Claudia, ChatGPT. Yes, I said Claudia. That's Claudia. ChatGPT and those things. I think those are good to get a great start off. But all the AI agents, it's getting kind of crazy out here. At our house, I was the remote control. Dang. What do you mean by that?
It means you had to get up and change the channel.
Oh, Right. As we all did, right?
Well, no, I mean, like we had a remote.
Oh, right.
I think he's implying you had to go up to
Oh.
the TV and change the channel. Fortunately, we only had 2 channels.
That's exactly, yeah.
Yeah, there you go.
That's hilarious. That is hilarious. You just, move the antennas a little bit. Hey, funny. Can you guys imagine? I grew up with the TVs that had the VCR and the TV still, and I had to move the antennas. I seem young.
Imagine.
A lot of them probably think I only grew up with flat screen TVs,
sure.
right?
You're saying the other way. Yes.
100%.
Yeah.
100%. So, I mean, I think we lived through a very unique time era. We kind of seen each clip of technology, and it's only going to speed up from there. So
I remember the VCR. I remember TiVo.
Yeah.
It's all
The whole VCR.
I had a DVD player for the airplane.
You remember what I hate? Oh my gosh, I feel it in my fingernails right now. The little clear cases that you pop the VCRs in.
Yeah.
Whenever you want to take a movie out, you got to pop it out that little clear case too, and it just hurts your
You're talking
fingertips.
VHS?
I'm sorry, VHS.
Yeah.
So you had those VHS tapes, and you put them in those little clear cases. And as a kid, it was so difficult to pry them out of there, mess up your fingernails.
I know what you're talking about for sure. Oh yes, Mike, I meant to respond to your question earlier. Are there any tasty videos on how to use AI to build an options trade? Has anyone used ChatGPT or Claude to build trading models? No. Well, no to both is the short answer. However, we do have some tools in the works that will be available on the tastylive website in some indeterminate amount of time that are right in this vein that you're talking about. I don't want to put timelines on things that I do not know the timelines of, but I know we are hard at work on some AI tools to do exactly that, incorporating into the back testing as well and all that good stuff. So it's happening. It's happening. My grandparents would make me and my cousins hold the antennas.
Hey, don't get what did that come from? The Proud Family, where you get shocked behind the TV, then you get stuck in the TV. That was like a fear as a kid. I think that came from some cartoon or something. You go behind the TV, you get electrocuted, you're gonna end up inside the TV on the thing.
Anyway, back to markets here. We can move it back in. You've been slinging anything over there on your end today? A little bit of chop happening, but I mean, I'm sure it's not too opportunistic for you.
No, not much today, just because of FOMC. But we can go ahead and jump to the TradingView platform. We'll just check out some of the more active levels over here on oil and kind of the levels that we're going to be eyeing. Oil was a really difficult one to get long on, especially because with all the uncertainty. I was super surprised when the market pushed all the way to all-time highs. So whenever the market did that, I kind of took my eye off oil a little bit, but now we're catching a little bit of a bid. I don't mind we're missing the long. In my opinion, I think the risk to reward is out of favor for the longs. I mean, I think you can still chase it a little bit. I wouldn't get short right now, right? I don't want to go against the trend, but I don't think oil will stay at these prices. And if we zoom out a little bit here, we can see oil was previously trading at around 110, and put in a high at around 117. So if we get any type of consolidation over here, we can see over here on the volume profile, if I can bring up this little tool, we can see over here on the volume profile, we have some low volume nodes right here. We're just gonna mark that off as an LVN, a low volume node. And these low volume nodes are really interesting because these low volume nodes just represent where the market didn't find a lot of interest. So there wasn't as much trading activity within this range. So whenever the market breaks out of these levels, it has an easier time. It doesn't mean it has to. Not every breakout is successful, but it has an easier time to break out just because there's less liquidity, there's less orders, there's less market interest here. And whenever the market is breaking out, it's always looking to seek fair value. So where's that level of fair value going to be? It could be here. We could go to a new all-time high, which will be in another price discovery mode, and we'll have to find value from there. But with that being said, seeing the directional price action within these low volume nodes helps us paint a little bit of context. So because we have a little bit more trading activity over here, I think this is going to be the more interesting spot to pay attention to if oil gets back over there. And if you're somebody that likes to watch the tape and you see how other market participants and large participants are positioning themselves, I think that can give you a little bit more confidence and conviction to pull the trigger on there. So with that being said, I'm not going to prematurely pull the short on oil, but I will be very interested just to see how the market responds. We're not trying to predict. We're not trying to guess. We just want to see if the market is going to respond in some fashion at these price levels. Because, I mean, oil puts in a low, down here at 78, and I don't think that's going to be the long-term low for oil. I think we can make it beneath there, but let's not get too far ahead of ourselves. I remember buying my first VHS tape player. It was about $750. I remember buying the fancy phone that had 2 tapes, one for an outgoing message and the other to record message. It was $275. That sounds overpriced. That's an Xbox.
It was fairly priced at the time.
No, that's an Xbox. No, I'm just kidding. I would sell some very far out of the money options on that. Out of the money calls on that one, Grumpy. No, I'm just kidding. IQs have increased 3 points every decade for 100 years till 2008. The Flynn effect has been reversing since then. The Flynn effect, I'm not familiar.
I'm not familiar either, but I take contextually, I'm taking it to mean that IQs have been decreasing or at least stagnant since 2000.
And I'm assuming that's being taken with technology advancing in mind. Maybe is that where the question's coming from? Like as technology advances, maybe IQ is going down a little bit?
Presumably so,
Okay.
yes. As I suppose as information becomes more readily accessible, you don't have to have as much of it in your.
But don't you have to know the right question to ask though?
Sure.
Right.
Well, I don't know. I mean, well, yeah. Now, not as much. In the earlier stages of search engines and things like that, you had to be a little bit better with it. I actually remember learning how to Google things properly in elementary school.
Yeah.
How to use keywords.
It's a skill, yeah.
Not just directly Google questions and all that good stuff. So yeah, that was a skill for a second. But those skills have been the need for those skills is ever diminishing as we move further and further in this direction. I remember when a 5 megabyte disk drive was the bargain price of $4,900. I did not buy one.
I was telling Gus the other day, I remember one of the first flat screen TVs we bought as a family was in like 2005 maybe era. It was like a 42-inch that weighed 100 pounds, and it was like that thick. It was a 42-inch, and it was like $1,100. That was like the biggest purchase of all time. And you can buy a 80-inch flat screen TV for like $500-$700 now.
How can I make rich?
Why say many word when few word do trick?
Why waste time? Say a lot word when few word do trick.
Why many word when few word do trick? 116. There we go. Just marking off this level of value, and then we'll pivot from here. Value area high, 1-1. What is that high? 116, 117. We'll go 100, 116. And the reason why I love the volume profile is because it's not opinion-based. It's just a distribution of trading activity. It just objectively gives us a view where the market found interest, fair value, right? Where buyers and sellers are quote-unquote agreeing on price. So that's why this is a little bit interesting and why we use the volume profile so often. But with that being said, it's going to be a waiting game from there. I don't like to have it on all the time. It gets a little messy. But it's going to be a waiting game. You know, we got to sit on the sidelines and execute whenever the opportunity comes, if it comes.
Yeah, absolutely. And what levels are you dealing with on NASDAQ?
Let's check out NASDAQ. No, we haven't been doing anything on NASDAQ. Looking forward to doing something on NASDAQ if we get more volatility into the market. But we have a value area high over here. Let's go into a smaller time frame.
Your all-time high notation seems to be a little outdated.
Wait, where is that at? Man, I hate messy charts. I need to clean this back up. Go ahead, readjust. We got an all-time high right here. We'll just go ahead, label that all-time high. It's nice to have these things prepared, so whenever you pop into your charts, you're able to gain context like immediately.
Use SPX to make me Lambo money. Don't make mistakes. Time frame, months.
Risk management. Phone numbers used to be 5 digits. Wait, what year were you born, Reds? 5-digit phone number. I'm just kidding.
I remember, I don't know why there was a shift either. I mean, I guess maybe there's just more of them these days, but I definitely remember in my childhood, it was not a big thing to put area codes with phone numbers. Like if you saw a billboard for like a local business, it would just be the 7.
That's a good point.
They wouldn't feel the need to put the 5, but I think it must just be because of population growth and more area codes being needed everywhere that they now have to, everybody has to start putting area codes. I mean, like I know Houston had 4 area codes, so it was always a thing there. You had to know which one to do.
Oh, that's a good point. I'm not a big fan of TradingView data. So take these levels with a grain of salt. I would look at some data from DexFeed or source it from the CME or something, but TradingView data is honestly not the best data. So if your volume profile looks a little bit different depending on what software you're using, that's probably going to be why. But it'll give you, somewhere in the range. Yeah, somewhere in the range. But when you want to be precise, it is important, but at least you can get a good idea.
Tim Knight would be very disappointed with your messy charts, sir.
Hey, sorry, Tim Knight. Hold on. Let's clean this up. Can't disappoint Tim Knight. Can't disappoint him. No, sir. It's not on our radar. This volume data was my new favorite thing to add to my charts. Well, absolutely, Jared. Would love to go back and forth a little bit more about volume, more volume analysis and all the above. But just waiting on this pullback, right? I know we can zoom out a little bit here, and forgive me if anybody has, I forget what it's called. I know some people have those things with their eyes. It's like stigmatism. I think it makes it a little bit more difficult and it can give you a headache when I move so much on the charts, as I do it. So forgive me. Like a lot of muscle memory. We move around a lot.
I have astigmatism in my right eye, but I've never thought about it in that context.
How did you have to go to the eye doctor to figure that out?
Yeah.
Okay.
I have terrible eyes. I'm legally blind
You have
without correction.
contacts in?
Yeah.
Okay.
Contacts all the time. But yeah, astigmatism in the right, but it doesn't, the movement's not a thing. It's just, I have a hard time, especially driving at night, like all the lights, like street lights, stoplights or whatever, they're like really, I don't know the right word, like overexposed, like they got like the streaky lines.
Yes.
Sort of thing, like when you take a bad picture.
Makes sense. Makes it a little bit more difficult at light.
Yeah.
Or at night. At light.
It's fine if things are well lit. The worst thing is on two-way streets at night when somebody with their bright ass headlights is coming right at me. That's there will be a moment there where I really can't see. Astigmatism. Yes. There we go. Thank you.
423.
5 digits. I have a phone book that predates me that has 2 and 3 digit phone numbers. It's one page for Long Beach, California. What is a phone book? Just kidding. I remember phone books.
That was normal for us.
When I was a very, very little baby, my mother modeled with me for an ad for a phone book.
No way.
That's as detailed as I can be with that story. It hasn't been told to me for a long time, but yes, I was in an ad in a phone book at one point. So somewhere out there,
I knew you looked familiar.
Somewhere out there, I could prove that I was alive at the same time as phone books.
Astigmatism. There we go. There we go.
Yeah, I'm deciding if I want to try to do anything with these earnings that we have coming up after the close here.
Yeah, it's a tough one.
I think Microsoft is probably my favorite among them, just because of the levels. I just feel like it's discounted. We've had some nice bullish consolidation going on with the rest of the broader market here, but I feel like if I have to pick one, it would be Microsoft. I'm bullish. I just don't know how bullish I am after tomorrow. That's the thing. Like I'm sure that I'm bullish on pretty much all these Mag 7 earnings that report after the close today. I think that we'll get the move higher into tomorrow, but I just don't know what happens after that, and it makes me very hesitant to get involved with any of these earnings calls.
Oh yeah, absolutely. I had just seen the comment with the phone book. I remember flipping those pages in between and kind of connecting them together, and like you couldn't pull them apart. But if you could rip a phone book in half, you were that guy.
Oh yeah,
Grumpy Mike was that guy.
It's like a party trick. I think there's just like a method to it, though. I don't think you actually have to be that strong. You just got to know how to do it.
Magician never tells his
There's
truth.
definitely some strength to it. But they've started changing the street lights to those blue-purple colors for that reason. Oh, that's interesting, Jared.
You know what's funny?
I'm really aware. Shout out the municipal government for looking out for my eyesight.
You know what's funny? I can't tell the difference as we look at Bitcoin, but I can't tell the difference between the orange light and the red light when we drive. For real, I cannot see the difference. Yeah. The only way you know the difference is because exactly.
I guess those ones with the five lights probably mess with you a little bit.
Yeah, you got to just kind of guess on those ones, you know. You just got to guess on those ones, you know.
Errol, you allowed to show us placing a scalp live? You do all the time, right?
Yeah, 100%. Market isn't very conducive right now for any scalps, but we can go ahead and mark out our accurate levels on NASDAQ so you'll know exactly what levels we'll be looking at, and then you'll probably see me take some trades off of that this week. So how much time do we have? We've got about 12 minutes. We have a little bit of time.
Why am I emotional over Jay Powell's last speech? It's the end of an era. You're allowed to be emotional. Got to feel these things.
He fit the brand really well. I wonder if the next person that's going to hop in there is going to have any type of personality, you know? Like Money Printer Go Burr, that was because of him. Like he really set the tone for the younger generation. That's hilarious.
It's true.
Or the younger generation set the tone on him. I mean, he didn't ask for it.
I mean, he's been the Fed chair for the entire time that I've been trading.
Right, and he hasn't been as popular, I feel like, until the last 5 years. But maybe that's just me because I'm young and then got into the industry and he's more relevant to me now.
I think that's just my perception, but I'm not sure.
Interestingly enough, I feel like we pay attention to interest rates and the FOMC and CPI so much more than we did, you know, even 10 years ago. But anyways, value area low. Let's zoom back in over here on NASDAQ, adjust these levels real quick. As you can see, we're pretty range bound. So this is the price action for today. We have this swing high marked off and this swing low. Those points don't really mean too much to us. It just kind of helps us visualize how we're stuck in this range and how we would like the market to break out of this range to at least give us a little bit more context as to what we might want to do next. But with that being said, we will take some more trades.
Right in the middle there, huh? Nothing.
Yeah, directly in the middle. I mean, just dead. I mean, this is where you get chopped to pieces. This is where you want to throw your account in the trash and you don't want to trade anymore. So one thing that's so understated all the time is like we put on positions all the time, but I think also if you can recognize when to take your foot off the gas and maybe when to step aside, that frustration that you miss out on is so important because you're going to end up taking trades where the next day you're going to see your setups and you're going to be like, yo, I could have just been a little bit more patient, not take these 2, 3, 4 dumb trades that I did yesterday when my process or my opportunity wasn't even there. That's one of the most frustrating things, losing money on something where your opportunity wasn't there. Like lose money on trades that you take. That's perfectly fine. But anyways, value area low is going to be 27,379. So before we adjust these levels, let's just mark these down because I'm looking over here. Got them written down, 379. 379. And then we'll do the ones on ES as well if we have time. The levels on ES have been absolutely banging this week. I'm not going to lie. We'll check those out here in a moment because sometimes ES is leading the pack and then sometimes NASDAQ is leading the pack. So it really does vary.
I think I'm going to fire on Microsoft here.
Yeah, what you thinking?
Yeah, I'm going to do a sell the 430, buy the 427.5 put, and I'm doing this for just 2 DT.
Okay.
Because I want to, if I'm going to do this, I really want to be able to isolate just my sentiment about what happens after the close today. Like I said, I don't really know what happens after that. Even just having to hold through tomorrow and into Friday kind of scares me. But the risk profile is attractive enough on these. If it bounces to a local maximum here, that would be like the 433 level. So I was tempted to do the 432.5, but the risk is just, I mean, literally no better at all. It's $3 notional. That is 3 cents on the contract better. So not super inclined to do that. 430 feels aggressive enough. In fact, what's the 425, 427.5 even look like? Oh, it's the same. Okay, yeah, we're gonna do that. 425, 427.5. Microsoft. Yeah, we'll see if we can't get a fill here. It is sort of a wider spread.
So you said just a couple of days because you just want to isolate that earnings announcement?
Yeah, just want it to be earnings. And I just think, I think and this might sound a little counterintuitive, but I feel like there's just enough earnings that it will raise all boats. Like I feel like there's enough big companies reporting earnings that even if, if 1 or 2 of the 5 go bad, if the other 3 are good, I just feel like it's enough to just force recovery on these things tomorrow, even if they want to work down after market today as the announcements start to come out. So yeah, confident enough to do that. 425, 427.5 is what I've landed on, and that's slightly better than a 1-to-1 risk profile, even just being that little skosh out of the money. That's a 0.5% move. Market pricing in a much wider move than that. 460 on the upside and 387.5 on the downside is 1 standard deviation. So yeah, plenty of room there. To see if we can't sneak one through, keeping that very cheap 0.5% portfolio allocation in that one. Should things go wrong, I mean, obviously a volatile move, but I don't want to be hands off for earnings. So that's how I'm going to choose to play it.
No, yeah, absolutely. Yeah, no. Shout out to Vecchio and the boys, but they don't know where the hell this market's going. Best macroeconomists around, though, no doubt.
Afraid it's going to be hard to scalp from 1 to 2 p.m. Central because it'll bounce a lot. Yes, for sure. However, that does present good scalping opportunities if you can get your direction right. The volatility will be there. That if you catch the right move, things will go well for you. But it doesn't make it any less scary. That's for sure.
I hope this market moves though.
Trading AVGO was a big mistake. I don't know why I traded them. I never trade them. Well, hopefully the earnings after the close today can bump us a leg higher and save you a little bit there. Unless you had to play to the downside. I don't remember exactly what your trade was, Ranch. I know you mentioned it yesterday.
A pretty big gap, huh?
Yeah, I've been long AVGO for some time and just letting these things cruise. Now I don't even remember when I put this on. Let's see. 62 days. I'm 16 DTE now. I've had them open for 62. But this was I have a 330, 340 vertical, and I remember this was better than 1-to-1 when I got it. So I must have had some pretty exceptional timing looking at this. Yeah, I mean, it's just been this crazy run. I guess 62 days ago is 2 months, is like February, mid-February.
Yes, just about.
So yeah, that would have been like 320-ish level when I got those on, and now they're pretty much home. But I am gonna hold to squeeze my last $30 out of them because we're so far above my levels anyway. Long, yeah. Tough to get long off those highs, but like I keep saying, hopefully earnings smash after close today and we get a leg higher and you're saved. It's that easy. That's like 2 steps.
It's just
step 1, earnings go well. All the earnings go well after the close today. Step 2, market goes way higher and you're saved.
It's just that easy.
It's just that easy.
We are running out of time here. I'm going to be keeping an eye on these indices. If we get a little bit of volatility, if we can trade down to our lower levels of value or, one side of these levels of value, we'll post the trades if we do that. We'll circle back around tomorrow and we'll go over them. If we pull the trigger on them, you guys will see the executions, show all entries and executions over here. But with that being said, that's gonna be else for me on my end. Shout out to Jerome Powell. I guess it's the last day we get to speak on his day, so I guess that's a little bit of an honor. It's been a ride, Jerome.
It has.
It's been a ride.
It has. Thank you, Jay Powell.
I've learned a lot.
You and your purple tie will be missed.
Yeah, I jokes aside, I've learned so much from inflation going up and paying attention to Jerome Powell. I learned so much about interest rates over the last 6 to 8 years than I knew prior to that. So these market events definitely help you stay educated and up to speed with the things. So it's been fun.
Yeah, it has. It has.
Cool.
Well, that'll do it for us today. Everybody, good luck with the Fed meeting. Good luck with any earnings trades that you have for today after the close. Good luck with all of your positions. If you have them in oil, if you have them in anything, really, it's a time of high uncertainty. Proceed with caution. Make sure you're managing everything. Thanks so much for watching. We really appreciate you taking time out of your day. We never take it for granted. Errol and I'll be right back here, same time, same place tomorrow, 12 o'clock noon Central Standard Time. We'll see you guys next time. Peace.
Nicky, we are back, son. You know what that means? A little bit of time for a confirm and send Wednesday, April 29th. What?
No, you're right.
Okay,
You're right.
but let's take a look at what's going on in the market before
giving you
we
your props. I was like, yeah, it's
get there.
Even
the S&P is down 3. You'll see here they got down to 71.61, up to 88. They're at the lower end of their middle range, down
5-ish, 27-point range. Bah.
Yeah, pretty. Yeah, which is kind of low when you've got about a $34 expected move. It's elevated today compared to yesterday with all the earnings that are going to come out and the earnings that did come out last night. I'll get to those in just one quick second. NASDAQ, your leader in the clubhouse to the upside, up 58, although small. Russell up 2 and the Dow down 16. Basically an unchanged equity market with volatility anemic. 1970 making new lows. Bonds down 7, 113.10 at the low end of their range. Bitcoin up $840, 77.5. Kind of oscillating around here at the lows of around 76, the highs of almost 80, sitting at 77.5. Ethereum up about $15 or so. Oil up big. You could see here over the last couple of days, really catching a bid, surprising me at least, maybe surprising nobody else from the emails that I get. Got up to 104.37, 103.78 right now. Gold, I think that's a surprising move. I know you were going to write your congressman.
Ray Dalio.
And Ray Dalio.
That's who I got a bone to pick with here with my gold position.
Right, he liked it around 47 and change. It's 45.50 right now. Just made a new low, down 50 cents. I have a couple of 1x2 put ratio spreads on in GLD. I was looking at the how the futures are priced, and GLD should have a little bit of drag to it. The futures in the front month are lower, 45.60 or so. To about 45.90 and change. So a small little drag in GLD. Yeah, wow is right. Let's see. Let's see what else is moving here in the market. Silver down $1.20 and change, following the move in gold on an equal, if not greater, move lower. Net gas down 5.5. It's making new lows, 2.6 and change. I remember when it was trading around 2.7. and change. I was saying, you know what, I should get long a little bit of net gas just for giggles. Rallied up to 2.8. Couldn't believe I missed it. Now it's 2.6, and I don't have any interest in doing anything in net gas. But let's see what's been moving in the market. On the downside, you've got Hood down around $10 for earnings. I know SoFi is not the big mover, but I think you have a position in there. It's down about $1.50 or so. Those are your two to the downside. Visa is up around $20. It still is. STX up around $100, $90 now. BE was up around $50. It's still up around $50. That's Starbucks was up around $3-4.
I closed out the rest of the NASDAQ that we traded yesterday. We bought it around, average was probably around 27,100 ish. I closed one in the middle of the day yesterday. I just closed the other now. we get a little bit of a dip, I think I got to buy some too into the Super Bowl at the end of the close.
Good scalp.
Yeah.
Yeah,
So,
good scalp. Took 100 handles. What do you want?
Yeah.
All right, good job. Let's go.
Confirm and send. Let's
Wednesday,
do
April
it.
29th.
Yes.
There are a lot of events today and tomorrow. If I want to just hedge my entire account, which is currently long, around 500 beta weighted deltas, what's the better way of doing it between selling /MES or selling call spreads in one of the S&P 500 products?
If you wanted to get flat, you could just sell one ES future. That would get you
MES is the smaller product to ES. One ES.
One ES
MES.
is 500 deltas. So you could just sell it. Sell one contract.
Sure.
That would flatten you out. I don't think that's the route to go. I don't think you want to get to zero because you're long delta. You want to be long delta. So 1, 2, 3 MES would
give you 300 long, give you 300 short beta weighted deltas, and then you'd have 200 or so beta weighted deltas. Now,
wait, MES is 50. 50.
Oh, 50.
So
Sorry, yes, I
get
always
you,
do that too.
Yeah, so 3 or 4 of them would get you, 150 to 200 short deltas.
Right.
It would, you want to reduce your overall delta by somewhere between 25 and 50%. You never.
That's the way we would do it. You can go all the way to 500 if you want to.
Yeah.
By selling one ES.
If you don't want to be as long, maybe you take some positions off that have worked. I mean, like that's the way I would go. But if you're looking to reduce your overall delta, 25 to 50% is probably what you do. You could also look at
that would be the most cost-effective way, buying power-wise too, using any of the future products as you just
for sure.
outlined. Yeah.
You still have relatively high volatility. Maybe you look at put diagonal spreads or something like that in like an ES, or you could do it in SPY as well if you want to get a little bit smaller to give yourself a little bit more dynamic delta exposure. But those are that I would probably say if you wanted to do the easiest way would just be to sell a couple MES contracts.
That's correct. I would also challenge you to go through your position a little bit and, where are your 500 deltas? Just for argument's sake, if you're short 50, 10 delta puts in SPY, I'm going to tell you selling one ES or 234 /MES or anything else like that is probably not the right thing to do.
Yeah.
If you got 500 shares of SPY stock, then I would say, sure.
Yes.
Go right ahead and do that. They're going to match each other.
You're talking more in like the sense.
I was making a very.
No, I think it's a good point.
Okay, go ahead.
Yeah, it's dynamic versus static delta. Like if you're static delta, you need the static futures to have them more of a hedge versus if you have options that are giving you delta. That delta is not as fat right now.
Yes.
It's more dynamic delta. I like it.
Next one, please.
When you have a smaller account and so many companies reporting earnings, how do you decide which ones to trade and which ones to sit out?
I mean, just because you said smaller account here, I have a larger account and I typically don't do earnings trades. You don't have to do earnings trades. It's what makes you happy with your overall portfolio. So in a smaller account, I would say unless you have a strong directional bias, where you could maybe hit yourself a home run, and by a home run I would mean a couple of $100 on a trade, maybe some sort of diagonal spread, or maybe some sort of 1x2 where you're actually long units if you wanted to, like in a small account where you're probably fully invested all the time with all your buying power. Sure, go ahead. But if not,
of all the other times, I mean, this is the most liquid. Biggest companies in the world. So these would be the ones I would trade earnings for if this was a random day and you're like yesterday, Seagate and Visa and Enphase Energy. I don't think those are earnings trades that a smaller account is really focused on. Today is a batch that you can certainly look to put positions on.
Yeah. Next one, please. I know when selling options for core positions, we look at opening trades around 45 days, if there's an equivalent for trading 0-day trades in the terms of what time to open and what time to close. So they're really talking about 0 days here. They understand when they're looking for more of our core positions, 45 days is optimal for placing, something like that, usually in the monthly options because they're most liquid. But what about the 0 days? Is there any time to do this?
Yeah, we've looked at it. I mean, the first 30 minutes is the time. Sometimes it's, 9 a.m. is better than 8:30. Sometimes it's flipped around.
Sure.
So somewhere around that time frame, and I think unless you're doing this like very mechanically, like via the API where you're like setting and forgetting the entry mechanics, unless you're doing it that way, you probably just somewhere in that time frame is right around the sweet spot. Like that's everything that we've looked at has been the spot. And then, within the first hour or two, you should be looking for that 25% exit. That's generally when it happens. If it doesn't happen in that time frame, it's usually one that you kind of got to hold till expiration. It's that first 2 hour window is really where most of the juice is coming from.
Yeah, I think to add to that, I think it's equally important. Like, when do I close it too? Right? Like we've been managing those winners at a relatively tight 25 to 50%.
Yeah.
In most cases, I know you've held a few recently, which are butterflies, to the end of the day.
Those have been lotto tickets.
Right. I'm just talking about in most cases, an iron condor kind of thing in 0 day, we're closing them fairly quickly. And also after 12 o'clock, kind of in dicey land, you don't add any more kind of positions typically, unless you're really, adding units and really trying to trade 0 day all day long. Yeah. Usually if you're doing one and done and you're going with our mechanics, you're looking to close sometime around noon. So if you had a losing trade, it got back to unched or small loser, maybe take it off before noon. Next, sure. Please.
Is there an optimal ratio to use for ratio spreads? For example, is a 1x2 more or less optimal than a 3x5, or is that not the correct way of thinking about it?
No, I think you're thinking about it correctly. Just remember, unit size kills. 1x2 has significantly
is one naked.
3x5 is 2 naked.
Yeah.
So there's more risk in a 3x5 than a 1x2. That's why it uses more buying power. I like to keep them typically 1x2. That's the way I do it. But you can certainly go 3x5 if you have an account size that,
or 1x3.
Or 1x3 that warrants 2 naked options. Like if you have 2 naked options other places and using the same amount of buying power, then you're fine.
All comes down to size.
All comes down to size.
If you're comfortable with 2 naked, if you're comfortable with 10 naked options, you're okay doing the 1x3 or the 3x5 or a 3x8. I mean, like you're still within your parameters. But if you're a one lot trader and you're looking at a 1x3, 1x4, you're getting bigger with that position.
Very good. Let's take a quick 90-second break. As we come back, the mini S&Ps just turned green. They're up $1.50. Really an unchanged market everywhere except oil. That's up about 3% or so, 103 and change. We'll take a quick 90-second break and come back. We got more Tasty Live after this with
how to handle a whipsaw.
Oh, we'll be back in 90 seconds. Tasty Live.
This might help me with my bloom position.
It should.
It's option jive.
Nicky, we are back, my son. It's time for a little bit of an option jive. How to handle a whipsaw.
Let's do it. Classic. A whipsaw has become a classic part of trading. It seems like. Get some big moves in both directions here. So let's do it. So a whipsaw we describe as a scenario where an asset's price swiftly moves in one direction, then rapidly reverses. We've seen a lot of it this year, this last 5 years. It's been a lot of V-bottoms. The V-bottoms have been whipsaws for the most part. It's common in volatile markets and can result in losses for those who misjudge the initial trend. And so, we've talked about this a lot, like getting short delta into a move like this, it's almost unavoidable. That's because you're getting whipsawed on these moves. Even if you're rolling up puts, it's never enough delta there. And you're seeing in volatile markets specifically, and we've been in a very high volatility environment for the last 5 years or so, the realized volatility has been in both directions. It's not just to the downside. That's certainly something that's been happening this last couple of years. So the term whipsaw is inspired by the back and forth motion of a saw. Thank you for that. So we're going to provide a clear understanding of the whipsaw and what has happened previously. I think this is an interesting look back here. This is a revealing look back of what we've experienced this last 5 years. So on the next slide here, historically, we've identified whipsaw as a whipsaw move marked by a rapid down move and then a swift reversal. Statistically speaking, historical market moves that were at least 30% to the downside took much longer to make a 2/3 recovery than the 1.5 months that we have experienced recently. So here's a couple of quote unquote crashes. I know 2020, not exactly a crash in some books. Tariff tantrum this past Iran war. It used to take years. Now it's taking months, as you can see. So in 1929, the crash took 17 years to get back. 2/3 of that.
Yes.
It's a lot.
Yeah.
A long time.
Yep.
A whole lifetime of trading. You think that could happen again?
Oof.
Can you have a 17-year like the Japanese markets is another one where in what, the early mid 90s it hit its high?
Yeah, and it was the model of all economies. And it has never recovered.
I think it just got back there.
Yeah.
I think last year it got back
30 years or 40 years for it to get back.
You think that's possible for the US market? I mean, of course it's possible.
I mean, of course anything is possible. Probably not in my lifetime.
Tend to think so. I tend to be on that same.
Yeah.
I mean, I think just news and things change so quickly now that it's very hard to see that being the case.
Yes.
I don't know what would have to go on for us to have a 10-year chop.
Yeah.
And go nowhere. Maybe the moves become lesser to the upside. I don't think that would be so bad of a thing. But yeah. So here's just a look back at recent V bottoms versus what has happened in the past. Just to give everybody a little FYI there. If we use SPY as an example of a whipsaw trade, one that moves sharply in both directions here. April of 2025 is certainly one of them. That was a tariff tantrum. We're on the next slide here, guys. And then 2026 this year. I mean, these are huge, huge moves. You're talking about these are as big as they get. V bottoms always and forever. And so if we get to the next slide here, so Tesla's another one. You see these a lot more, I think, in single name equities. It's even if you're doing strangles and SPY, and if you caught the bottom of that move, you're still kind of okay. In something like an AMD where the stock moves $100, there's just not much you can do against that position. In SPY, there's ways to hedge it. You can add to the position. You can use the futures. When you're talking about single name equities, the whipsaw risk is a lot greater than what you see in the ETFs here.
Agreed.
Next one,
it's funny we're talking about a whipsaw when we haven't had any kind of back and forth movement of any magnitude for the last 2 weeks or so. Although you had that big V bottom. I don't know. We should be talking about V bottoms as being the new whipsaw.
It is a whipsaw.
Yeah. I mean, Frankie just wrote me. I remember whipsaws daily in the OEX, and it did feel like that on a 10-handle move on the E-mini S&P.
It's all relative.
It's all relative.
That was the same.
That's right. Yeah.
At that point, it was probably a 1% move, 0.5% move.
Yeah.
So, being whipsawed relative to strangles and their deltas, we're going to talk about kind of just what that means here. Strangles with lower deltas have less of a chance of experiencing whipsaws, of course, but the magnitude is going to be greater on those. I think the point of this slide here is that that 20 to 30 delta range is a comfortable, manageable risk probability of touch wise. The probability of touch on both sides when you're selling a 20 delta strangle is about a 50-50 shot. And you should expect to be tested on each of those options here. So those less aggressive strangles have also seen far fewer occurrences of whipsaws in practice. So SPY, you have much more risk of this, huge, even the V bottom, you get to at the money and you're like, well, this stinks. But in some of these other names like an AMD or Tesla or STX, these moves are just way, way bigger. So the expected probabilities of being tested on each side, if you're selling a 20 or 30 delta strangle, is about, twice the delta. So you're looking at about 40%. The expected probability would be about 16 on either side of being in the money. The actual occurrences where you're tested is about 2% if you're looking at like a 20 delta strangle. So it tells you that although, you have this risk, it's still a little bit overinflated. So while choosing lower delta strangles is one way to defend against whipsaw and trade entry, some outlier moves like that of earnings announcements can't be avoided. I think, when you're talking about tail risk, I worry less about it in an ETF than I do in a stock for earnings. Like I would be much less aggressive with short premium into an earnings than I would with a SPY strangle. I think that's a little bit more easy to handle for most.
You're right.
So you've got rolling up, rolling down. Those are things you can do to mitigate some of this. I mean, just the mechanics of rolling at 21 days is going to push you further out in time. It's going to push you further out on the curve. Even if you are a tester in the middle of these sort of V bottoms, it's one way to kind of reduce your overall exposure here.
Yeah, really what you're talking about here is just staying mechanical, right? I mean, the only thing you can do about a whipsaw is being mechanical. Remember, when we are mechanical, we're reducing, you talked about it in the confirm and sense, we're reducing our delta by that 50%. Like you even said, I wouldn't reduce it completely by selling one E-mini S&P. I would probably do something else against it. I went so far as saying, hey, dig into your position and see where your deltas are. Don't just take it as face value. See where your deltas are. If you have short units of far out of the money options, you can't look at those as real solid deltas for futures. So that's not the place for you to go. You probably should use some sort of option strategy.
But those options that you have in individual equities, and it's a reason why we manage positions and close trades, and we're not trying to get every penny out of those trades, is because you hit some sort of tail event, and it'll offset hundreds, if not thousands, of those nickel options that you're trying to hold to get every dollar out of. You have a strangle in BE into earnings and the call's way out of the money and you think, oh yeah, I can't possibly get there. And then you wake up and the stock's up $50. You're going to give up a lot of those occurrences.
Good.
Couple takeaways though. Whipsaws cause the testing of both the put and the call side of a trade. Typically recovering 2/3 of a crash of crash losses has taken about a year. That's kind of the more current market. If you have these kind of crash scenarios, it usually takes about a year to get back 2/3 of that move. We've seen it happen much, much quicker. The last one, 1.5 months. And could you imagine if everything just like stops after a week? You get down move, you get a 10% down move and all of a sudden you're back in a week. Maybe that's how it goes. It's the 3-body problem. You watch that show?
What is it?
3-body problem. It's a good one. I think it's based on a book.
Most movies are.
The 3-body problem.
The 3-body problem. What's that about?
It's a good show. It's about like technology change and how everything like exponentially gets quicker. Doubling every single year.
Sure. Things move here. Like you're saying, things.
But at a certain
faster.
point, like it's moving so fast. Kind of like how we went from like Nokia phones to now we have computers in our pocket, and now we have AI that's telling us everything we need to know.
Yeah, I mean, I think the Apple phone is only about 20 years old. I mean, I think Nokia was.
You had a brick in the car. You had those.
A
huge thing with a wire.
Yeah.
In a briefcase.
Yeah.
That's what.
And we would argue about it being like $5-6 a minute to make a phone call, but now you charge $1,000 for a phone. We're going to take a quick
3 minutes though.
What's that?
Free calls and texts now.
Yes. Yeah. We'll take a quick 90-second break and come back. We got more Tasty Live after this. Even the S&Ps just reached their lowest point that I've seen them so far this morning. Down 7. NASDAQ still green, up 30. Russell down $1 and change. Dow down 50. Volatility up 4 cents.
Oil at the highs.
Oil at its highs just made a new
Something
high.
happening? I need my time.
All around the world. And we'll take a quick 90-second break and come back. We got more Tasty Live after this. son. You know what that means? Time for a little bit more Tasty Live. That's right. With what's your assumption? And when we are bored, we are spot on. Even the S&P is down 15, NASDAQ up 22, and my friend Bain did remind me, and he's right. They're right. I don't know if it's a boy, girl, or whatever, but it's just D. Bain. Newer traders might want to know on 0 day, which we just did at 470 here. Don't move as quickly when the Fed is talking, and they're 100% correct. So they usually avoid them. Our research would actually kind of avoid it too. So knowing that now going in, you have a chance to scalp it, make a penny, two, or whatever. Do you keep it on?
No, we'll let it.
There you go. Look at you, big stud. But you might not see any contraction until after.
I think you're also, I mean, when you look at volatility, futures are up a little bit today. I mean, you're seeing some choppiness in the market. You have all the things happening at the end of the day. You should expect volatility to kind of stay bid. I don't think we're going to get a vol crush type day where you're closing, you know, your SPX trade in an hour, you know? So.
Got it.
Cool.
Good job. Good job out of you.
All right, should we do it?
I'm ready.
All right.
Oof. Mags. Short term. Neutral. What'd you do?
I just closed off I sold a call in ASTS, Space Mobile. I sold the calls again. I have a put ratio that's right at the money.
Space Mobile down $3.40. Great job out of you.
Well, I have a put ratio that's getting tested, so not that great. Mags.
What say you?
Okay, so obviously you have all the big Mag 7 stocks reported, or a lot of them this week. Can you even trade this? I know I've looked. Yeah, you can't.
Palantir down $5. That's becoming a thorn in my side.
Oh yeah, 136. Do we do something?
Mags, short term. What do you think about Mags?
These options, Travis, I think this is and I've looked at this with Chris. I've never really looked at the options, but I've looked at this as a way to view the Mag 7 stocks as a basket. I think that's about as good of a purpose it has. Options-wise, these options do not look liquid. I mean, you're talking about dollar-wide bid-ask spreads. I'm looking out in June. It looks like some of the strikes do trade. If I was going to trade these, I would look at those, $5.
They've been around longer. That's why they have more volume to them. But yeah, I mean, and I just put up open interest there to do exactly what you're looking at doing here. I agree with you. I think these markets are probably too wide and doesn't warrant a trade.
I'm going to pass on this one, but I give myself kind of like a half mark on this because I have basically all the Mag 7s that are reported.
Next one, please. SPX 0 day. Well, there you go. We put it on, and look at this. FOMC not being worth it. There they are. They're kind of San Mateo. You're 100% correct. The Fed is 99.9% likely to do nothing. Why not sell the extra premium into the inflated IV? We didn't go so deep and granular into this.
Yeah.
But I like the story that you're painting here, and I'm going to tell you that's why we made the trade.
I would like
not because we were bored.
Yeah, I would like yours to play out.
Yes.
Instead of
me too.
Your Taiwanese source over there telling you not to do it, which I respect as well. But we do have that SPX trade on. We did a $15 wide at 470. It's marked right now at like 440, so it's coming slightly. I have an order in to close it at 390. So
very good.
A half mark as well for this one, Abhishek.
Yep.
Thank you, though.
Next one, please.
Amazon bearish. Who is bearish on anything? Come on. All right. Mostly neutral on Amazon. Okay. Maybe a touch bearish. Has outperformed the other big names by a lot. I guess maybe a little bit recently, but it's still, it's at highs, but it's not like it's like blasting off here. Not sure if it's fully justified using weekly options for an earnings trade. Okay. So I am sort of neutral here. I have a 1x2 crab trade. So I'm long the May 265. That's in the May monthly. And then I sold 2 of the May 1st 285s against it. So it's basically delta neutral. From a delta perspective, I sold 2 of the 18 deltas right now with the stock basically unchanged in the 2-day options, and then I bought 1 of the 46 deltas in the May monthly. So I'm netting like 10 or 15 long deltas here. What would you do as an added trade to that? Maybe like a put ratio spread? Does that sound crazy to you?
Sure. No, that doesn't sound crazy to me.
It's not exactly bearish.
Exactly a bearish trade for earnings, though. I mean, if you were going to do a bearish trade,
it's omnidirectional.
Omnidirectional. That's fine. Are you going to go in shorter term, or are you going to go in?
I was thinking the 2-day because I'm already using because I'm naked an extra unit. I'm already using that buying power. So if I go into the 2-day, I was thinking maybe like the 250, 240. It's marked at like a 40-cent debit. But it's a trade where I'm hoping it doesn't come into play. Okay. Now, I'd rather lose the 48 cents on this because I'm probably net profitable on the rest of the trade. If I lose this one, it means we're here or slightly higher or maybe slightly lower. And so that would be the best case. It's adding, it makes me more neutral.
What does it do? What does it do? Yes. It takes away some of your
47 cents.
Beautiful.
Small put ratio spread. Break even is 230 on the downside on that one.
Beautiful.
And my 1x2 I did for a small debit. So inside move is the perfect spot here.
Which is
inside the expected in either direction.
Right. And Amazon's expected move is
the big one.
About $7.50 or so.
No. You got you're Amazon? Looking at the 0-day option.
Oh, I'm so sorry. $18.
So it's about an $18 move.
Yes.
Which is
0-day options will be done.
Yeah.
Today.
But I'm doing the 2-day. So
I got you. May 1st options. Yep. Good job.
Good job awesome. Out of you.
No, good job out of you.
No, you. CMG. No. I think I've sworn off CMG here. Earnings play. Does it have earnings? It's got earnings.
CMG.
Who is looking at CMG for earnings after the close today?
It does, and I did mention it with Carvana and Lilly, but they're afterthoughts. But yes, you are right. Who's looking at CMG?
What does a new subscriber do here?
Good IV rank of 86, almost a $3 expected move, which would be just under a 10%. $3 doesn't sound like a lot when you're looking at some of these other stocks that are multi-hundreds of dollars. Stocks is at $32 stock that has not been able to find its way to the promised land.
Oh, this one's.
What do you think? What do you hear? What do you say?
I'm going to do something real Johnny.
I'm going to do something real Johnny here?
Really Johnny. I sold
a naked put isn't real Johnny.
16 days out, 31.5 strike put for $1.22. If we're lower, I'm taking stock. I'll wheel this like I did Snapchat, and I'll hold it for the next 6 months, and I'll make 50 cents on it.
Boom.
Amazing.
But you use a limited amount of buying power.
Yeah, $400
Well, there you go. I mean, you sometimes use $5,000 in buying power to make $2-3. I mean,
capital.
Do 20 of these.
It's a capital efficient.
Do 20 of these is what you got to do.
Oh.
10.
I don't want
10 of these.
I don't want to have.
Do it. You have the technology.
I don't want to have.
Do it when you're bored. There's nothing better than going big.
No, that's when you get yourself into trouble. I'm not going to do that. I'm going to stay.
Oh, do it.
I'm going to stay small.
I'm channeling my old co-host. McDonald's bullish in June. Super bullish on McDonald's after this pullback. Super bullish.
Wow.
Down $1.80, has earnings May 7th.
I mean, look at the McDonald's this is kind of the lows.
This is the lows.
I mean,
it made the same price a few days ago, pretty close to this right here, maybe 50 cents lower actually. But yeah, this is the lows that we haven't seen since June of last year. And then you've really got to go back to like January of last year. To get any lower than here. So yeah, they're right. They're right. IV rank at 84 is good. Earnings coming May 7th. Go.
I did a call diagonal spread, June, May. I'm long the 295 in June. And then
that gives you 50 deltas. I mean, you did it twice, 25 each.
Yeah.
But yeah, that's you're putting your money where your mouth is. I mean, usually you'll just give them, one or something like that.
The 305 call is about a 20 delta in the May monthly. So it has earnings in the middle of next week. And then I'm long the 45 delta call. So I'm net 22 or 23 deltas on this trade.
Very good. Push it through, and I will show the world. Next one, please. Qualcomm, neutral. Qualcomm has earnings today. Neutral on Qualcomm with 120 looking like a solid floor and 160 as resistance. Qualcomm. I don't want risk on both sides like an iron condor, so I'd rather keep it one-sided. They're going with an earnings play. They don't come up with something, but he gives you a little bit of guidance on what he's thinking. 120 to 160. Stock is 152, up $2 and change. Oof. Qualcomm has an expected move around $11 in the next 2 days.
Oof.
Oof.
The chip names they've been face rippers.
They have been. Let's see something here.
Spook me a little bit.
If I can come up with something here. So
I know it.
All right, you got, can I help you?
Sure. Are you thinking? So they have earnings after the close today.
Yes.
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 Okay.
Go ahead. You were saying, was I thinking? I was going to see if you can.
Are you thinking earnings trade or longer duration?
Well, that's what they're doing, an earnings play here. So Ryan in San Diego, I'm going to try to, if you gave me everything that you gave me here, I'm going to try to give you something that goes with that scenario. Are you ready?
Okay.
155, 60, 70. Broken wing butterfly, 300. What's that? In the 2-day. He says that resistance around 160. My break even is closer to 165. It's a small credit somewhere in here. Markets are okay, not great. I'm buying no tail risk to the upside kind of thing. No risk to the downside. 2-day play. Hit a home run. If you want to spend it, go ahead. What'd you do?
I'm going to make it a little bit wider and do it for a small debit. 155, 162 and a half, 177 and a half. So you're 7.5 by 15.
Okay.
It's still the same.
It's the same spread. You got a little bit more room to the upside, no room to the downside, but 55 cents is your risk. It probably trades for a dime if it go lower.
Yeah.
You probably got 30, 40, 50 cents worth.
I wanted the added upside buffer.
Room to the upside.
Yeah, right.
But you increased your risk by about $200.
Yes, but I have a wider spread. I have a wider range.
But I thought you said I was all right, Spider.
Oh, I liked yours.
No, I know. Good job. We came up with the same scenario, which was what counts here.
Yeah.
Next one, please.
K-Web.
K-Web.
I think I just some naked long shares. We did a cover call maybe like 2 weeks ago. And then I bought back the 30 strike call at like 50 cents. My basis on this is like 30. I'm out like $2.
Stock trading 28, right?
Back near support. Covered call is in play. Sean in Hong Kong. I have this. Do I add to this?
Well, you just have long stock, right?
Yeah.
Yeah, you go out to...
This is the old school dollar cost averaging. Which is not something you want to be doing. It's usually not, it doesn't feel good in the moment.
Yeah. I probably abstain since you already have a bullish position in here and they're bullish. You're more bullish than them with just naked long stock.
Yeah. I'm just long the stock here. The options are just, there's no juice there. I'd rather have something happen here and you get bailed out on a $1 or $2 up move here and be done with it. So I'm going to pass on this one, Sean, but thank you.
All right. Next one, please. Bonds in the 112 handle. My peeps just told me, and they are correct. 112.30.
Doesn't seem to matter for markets.
Nothing seems to matter.
Nothing
for
seems
right
to matter.
now. RTX. Not one of my favorite stocks to trade. June markets are about 30 to 50 cents wide.
Bullish in June.
Okay, stock's down 77 cents. I don't consider that much of a down move, but it has fallen over the last 2 weeks. Unlike the market, which is rallying, this has gone from 200 and change down to about 170. Its market correlation is typically a lot higher, 0.94. This is a stock that had been moving with the market, not helping the market. Now, Scott may have found something in Pittsburgh here, or at least for. I wish the markets were a little bit better, but what do you do?
Yeah,
do you want to do something?
I'm going to try and get in a diagonal spread here, June, May.
June, May. May only with 16 days and very little one vol differential.
I just figured August is just so far out.
No, you can't do August if you're going to do some
have
sort
the
of
July
diagonal.
options.
No, I agree with you there.
So I was looking at, their play was in June. So ideally, I would look at like a July, June diagonal spread to go into June. But the July expiration will open up once May rolls off the table. This is not the most liquid of products here. You'll see some ETFs and stocks will have July options already. This is not one of the more liquid ones, so it doesn't. And so going out to August, I'll be stuck with that for quite some time.
Yeah.
Here, maybe we get a short-term bounce, and I'm out of the trade for $50 or $100, and you add it to the list for next time.
I was actually going to look for something in here because I think it came up with a good stock here to trade. It has a high correlation to the market. It's got a good IV rank after earnings. It's on its butt. Market's higher. I like to buy things that are a little bit depressed, especially in this market. Think it's going to lift all ships. I tried to go into June with even going into an at the money Jade Lizard here. I can't even collect the $10 of the call spread because the spread here, the 175, 180, trading around $3.80 is around 1/3 the width of the strikes. You go to the puts, markets are wide there. You can't trade this stock.
Yeah.
In my opinion, on the option.
And the buying power too. Like, I don't want to tie up a couple grand in.
I understand.
In buying power to sell the puts. I'm trying to roll my BE position. I have no idea where I'm going to get filled here.
BE markets are
and I have
wide.
deep
Stocks
in the
up
money.
20 some odd percent, up $50.
Unbelievable. All right. I rolled out to June and
you poor bastard.
I am in a world of pain here. So I'm selling an extra unit on the downside here. I'm short 2 of the 200 strike puts, which are, look at the skew here.
I don't want to.
The 200 strike.
I don't want to be lured into this. The markets are just not good.
They don't even have in June. So just to give you the idea of the skew, the highest strike is 360 in June in BE. 360 is we'll just call it 100 points out of the money. The 200 is 70 points out of the money. The 200 is a 16 delta option, 70 points out of the money. The 360 is a 30 delta option, 100 points out of the money, which means that the skew on this, if there were strikes, probably puts your one standard deviation on the upside at 500. Is about a double to the upside or 20% to the downside. That's the skew here.
Yeah. I'm not even going to talk about it because the market's stinking there. I'm not going to let you do that to me. Light up $55.
Yeah, look at SanDisk, dude. We're at 1,100.
Yeah, unbelievable.
Touch today. Yeah,
unbelievable.
1103. I mean, Western Digital's was the bigger mover of the group. It was up like 50 at one point. It's unbelievable, some of these moves. All right, we're in RTX. Scott, we're with you.
All right. Next one, Microsoft for earnings, June, May diagonal, 440, 450. Go. What do you think?
I am right
with you.
I'm already in diagonal spreads. I like this if you don't have a position on. This is probably trades at what? $6, $7? Let's see what it is. So June, if you did the 440, just to put this out there, I think this is an interesting way to trade this because front volatility is just so high here in Microsoft. You got an IV rank of 106. That does not come around all that often with a Mag 7 stock.
No.
So, yeah, this diagonal trades at $8. I love this if you don't have it. If I didn't already have it on and you want to be bullish, I think this sort of setup or even wider, like if you don't mind using a little bit extra capital, you could sell the 475s. You do this 440, 475 or 450, 475. You could do this at like $1,000, $1,300. Pretty interesting way to get some long delta here. Get you 25 long deltas with a wide diagonal.
Pretty interesting way, agreed. Agreed.
I have this with my shorts right at the money here into earnings. So I'm playing the upside, but the best case for my position currently is to be like slightly up because I have a lot of short premium that expires at the end of the week here. So I'm with you. I think Microsoft is interesting to the upside. If I didn't already have it, I would be doing this. I have a lot of it. And I have that leap call spread. Remember when we did the leaps in Meta and Microsoft?
Yes.
So,
you got your
we're still here a
your
year
home
from
run
now.
setup.
Yeah, it's January of next year. So. But yes, I'm with you, Jared. I already have it on though.
Next one, please. Last one. Netflix bullish. Everybody's bullish.
What do you do here? So I have some diagonal spreads here. They're cheapies. What am I up on those? Or a little down. I'm down like 90 cents on them. Do you add more?
I don't know. What's your directional opinion on Netflix? I guess is the last question.
Oh, there's SPX.
Oh, look at you.
GFY to whoever your Taiwanese source was.
Take that, Taiwanese source.
$80.
Take that.
Boom.
Like it was nothing.
Boom, roasted.
Actually was really nothing. I mean, you put it on, let's see, we put it on at 8:39. It's 9:04. So less than half an hour. Good job out of you.
I added some diagonal spreads in Netflix. At the money, more like poor man's cover calls.
Okay. All right. Beautiful.
Small.
Yeah. $4 for a 90.95 May, June.
Yeah.
Okay.
Playing for a bounce. You got to think, tide lifts all.
Gotta think.
Boats tomorrow, right? If you have the face ripper to the upside, don't they buy everything? It's one of those, or
yes, that was my thinking in RTX, but markets just don't support that. All right, let's see how you did here. As the even the S&Ps are down 11, Nasdaq's up 28. Yeah, pretty good.
I
mean,
yeah.
Your peoples would say, meh.
Yeah, it was a meh. Meh.
Okay.
It's okay though.
Okay, yeah. Better than prior administrations. Even the S&Ps down 10, NASDAQ up 33. This is the way it's been for most of the morning. Russell down 10 and the Dow down 180. Volatility unchanged. Big movers around the market here. Carr down 16. Lilly for earnings down, coming out with earnings soon, 11. Coin down 15. Hood down 10 for earnings. A lot of the earnings plays. Palantir down 5. Boeing down 5. Carvana has earnings after close down 4. OKLO down around $4. Tesla down around $3 and change. And on the upside, SanDisk up 88. Light for up 60 and change. BE up 51.
Unreal.
MU up 16. Starbucks up $6 now. It opened, I think, close to up 3. Qualcomm up 4 and change. Spot up 4. Intel, we didn't talk about that, up another $4. Go America. We're going to take a quick thing.
Intel's up $4. What's it at? 190?
88 and change.
Unbelievable.
Hasn't been any higher.
Yeah, that's the next position that I have to start addressing too. That one has grown some teeth.
And you played it to the long side too.
Yeah, not long enough.
Well, we're going to take a quick 90-second break and come back. We got more Tasty Live after this. Do you know what comes up next?
We have TP in the
We sure do.
favorite.
We sure do, Mr. TP, fan favorite in the house. We'll be back in 90 seconds. Tasty Live.
Cool.
This is Jimmy. He's 55 years old, married with 3 kids and 3 grandkids, and he's been investing ever since he graduated from Central Michigan University, Fire Up Chips, over 30 years ago. And given how strong the market has been these past 3 decades, he's done really well for himself. In fact, his retirement portfolio just crossed over the $1 million mark. But he's stuck, earning the same old 7 to 10% annual gains from the market each year, and he's at the mercy of market volatility. With hopefully only 5 more years to work before he retires, Jimmy wants more control. He wants to take hold of his future and his returns. Well, my name is Jim Schultz. I'm a finance PhD, and I've devoted my entire professional career to understanding the markets, starting as a professor in academia, where I taught undergraduate and MBA classes, and also did my academic research solely focused on the markets. I've since been a practitioner in the markets, actively trading since 2007. For the purposes of this video, I'm going to be Jimmy. So I've had a great run in the market over these few decades, but now I want to really unlock the full potential of my portfolio. While the 10% average annual return that the market has given me has been great, I'm intrigued at the prospect of producing portfolio returns that are even higher than that. I've heard with enough skill and ability, it might be doable. And maybe even more importantly than boosting my returns, I'm very interested in reducing my overall portfolio risk. Being that I'm closer to the end of my career than the beginning, I want to be better prepared to handle extremely volatile conditions or big market meltdowns, like we had during the internet bubble in 2002, the financial crisis in 2008, the COVID crash in 2020, or even the trade wars and tariffs that we're experiencing right now in 2025. Well, whatever the reason might be for you or Jimmy, if anything about his story resonates with you, then you are in the right place. I'm going to show you how to begin to make the transition from a purely passive approach with your portfolio to a much more active approach that steps into the world of derivatives. And we're going to break it down into 5 simple steps as I take Jimmy through a first-hand example. And we start with step 1. Taking inventory of where you're at. I've taken the passive approach and it's worked out great, but it's important to remember that those 10% average annual returns are exactly that, an average. While the market does go up most of the time, it can also go down and sometimes seemingly out of nowhere, just like we've seen to start 2025. Well, that is what I'm trying to avoid. Until now, I have been simply buying and holding, absorbing whatever blows might come my way. But I am tired of this lack of control. I want to be more involved. I don't want to be so reliant on market direction for not only generating returns, but mitigating risk. Now, you may be just like Jimmy. You don't want to stand passively by, needing the market to move higher to hit your return projections. All the while, the performance of your nest egg seems to be directly tied to the next Trump tweet. You want to take control and add a brand new strategic component to your portfolio. Well, once you fully immerse yourself into the world of derivatives, all those things can happen. But before we dig into the real details, we have to progress to the next step in the journey, where we are now going to tap into all the tools that were available to you as a passive investor who was reliant on the market moving higher. Specifically, let's talk about the power of dividends and dollar cost averaging. Step 2, the tools you need. Now I'm ready for action. I'm going to ditch the purely passive approach, but to be fair, I have done really well as a passive investor over the last 30 years using the 3 Ds, direction, dividends, and dollar cost averaging. So naturally, there is still a part of me that really likes all these strategies. The thought of abandoning those long bias strategies completely has me feeling a little bit uneasy. Well, here's the great news. Continuing to collect your dividend payments or improve your basis through dollar cost averaging are both still very much in play. You're going to see that there will still be a home for you to carry some share positions in your favorite stocks. And even in the options portion of your portfolio where you might not own any direct shares, any dividends that the company might pay automatically get factored into the option pricing. For example, if instead of buying stock in Apple, you decide to use a short put position, which is a classic option strategy, you are still going to collect any upcoming dividends that Apple might pay with that short put strategy. This happens because you're able to sell the put for a higher price based on the simple fact that the extrinsic value moves higher due to the dividend itself. But all of that is way beyond where we want to go here today. Not to mention, we've already done a video that covers all of that in depth, and you can watch it right here. But what about dollar cost averaging? Well, I learned early on that it was a great long-term strategy to add to my investments in individual stocks or broad-based indexes when the price of those stocks or indexes was falling. If the company was solid or the overall economy would be strong again, then I knew there was a really high probability that the stock prices would recover. Well, with derivatives, high probability trades are at the core of what we do, and here is the best part. It happens right at trade entry. You don't need to wait for the stock to drop or things to go south. You start improving your basis right from the very start. Now, I'm very happy to hear that both the returns from dividends and the spirit of dollar cost averaging can be alive and well with the option strategies inside my portfolio. But now, I'm even more intrigued to hear about how I can actually make money without needing the market to go higher and without being so reliant on market direction. That sounds crazy to me. Well, both you and Jimmy are in luck because that is exactly where we're headed next. Step 3, trading time and volatility. Now, I have to be honest, this completely blows my mind. I was under the impression that to make money investing in the stock market, you buy stocks and you need a move higher in the stock to make money. Well, it turns out that's not necessarily true. It's important to understand that in the world of options, any position you might have can and will make money from 3 different parts: direction, time, and volatility. So let's start with direction. Now, working through all the inner workings of calls and puts and option pricing is way beyond our focus here, and we can't get into it in this very video. So I would encourage you to watch this video right here. For the sake of Jimmy's goal, we want a broad overview, and it works like this. There are option strategies where if I'm bullish, I benefit from the stock price going up, and I'm hurt by the stock price going down. So very similar to being long stock. There are also option strategies where if I'm bearish, I benefit from the stock price going down and I'm hurt by the stock price going up. So very similar to being short stock. But here is where things get interesting. With options, if I'm bullish, I can set up a strategy that benefits from the stock going up, but can also make money if the stock goes nowhere, and even possibly make money if the stock goes down a little. And similarly, if I'm bearish, I can set up a strategy that benefits from the stock going down, but can also make money if the stock goes nowhere, and even possibly make money even if the stock goes up a little. And the reason we can do that is because with options, we're not only trading direction, we're also trading time and volatility. You see, with options, there are various components to an option's price. The underlying stock price of the stock the option is on is a component. The risk-free interest rate in the economy is a component. Even the dividend that the company might pay is a component, just like we saw in the last section. But one of the largest components to an option's price is the time that is left on the option contract. Every option contract expires on a specific date. So some contracts might expire in 7 days, some might expire in 45 days, and some might expire in 360 days. Simply put, the more time the option contract has, the higher its price. As time passes, the number of days left in the contract decreases, and so that time value follows suit and also decreases. Here's the best part. You can play any directional bias you want, but you can also play time along with that same strategy. More specifically, you can benefit from the simple passage of time. As the days go by and the time value dissipates from that option's price, it helps the P&L on your position. Now, for our strategy examples coming up, we're going to focus exclusively on time, but it's important that you're made aware that you can also trade another non-directional metric, volatility. Now, volatility does share a reliable relationship with direction, but we'll leave that discussion for a future time. For us, we want to understand that much like time value is added to an option's price, a volatility premium is also added to an option's price. And also very similar to time, more volatility means higher option prices, and lower volatility means lower option prices. This will come as no surprise, but this video right here explains volatility in great depth. But for our purposes, here is what we need. Market volatility moves up, it moves down, it moves all over, just like everything else in the market. But generally speaking, on average, volatility is in a state of contraction, so it's moving lower. And just like we did with time, we can set up option strategies to take advantage of that natural volatility contraction. But now, you've got to be wondering, all right, I see how time can help me, but I still can't for the life of me understand how I can make money without being directionally right or even being directionally wrong. Well, that's where we're going next. Step 4, strategic breakdown. So let's unpack 3 different strategies starting with a covered call. I'm used to owning stock, and one of my favorites over the years has certainly been Apple. Well, the beautiful thing about a covered call is that it starts the same way that all of my positions have started, with long stock. The difference is, on top of that stock, we're going to add an option component, specifically a short call. This is what is called a covered call strategy. Let's suppose I own some Apple that I bought earlier this year for $180 per share. Today is April 9th, and right now in the option market, I can sell the 200 strike call in the May cycle that is 37 days away for $2.50, which is $2.50 per share, or $250 for the whole contract, because option contracts are always in 100 share allotments. Now, a key part to understanding how a covered call works, or really any short premium strategy, is this. If the stock price is above the strike price on a call, the call is in the money, meaning it has value. But if it's below the strike price on a call, the call is out of the money, meaning it is worthless. If the stock price is below the strike price on a put, the put is in the money, meaning it has value. But if it's above the strike price on a put, the put is out of the money, meaning it's worthless. And when you sell options, you always want the options to be out of the money. That is because that allows you to keep what you sold it for. So back to my covered call. Let's explore 4 simple scenarios by May expiration. Apple goes to 160, Apple goes to 200, Apple goes to 220, and Apple stays right at 180. If Apple falls to 160, then I'll lose $20 per share on my stock, but my short call will expire out of the money, so it will be worthless, which means I'll get to keep the $2.50 I sold it for. So my net P&L is improved to only losing $17.50, which is good. If Apple rises to 200, then I make $20 per share on my stock, and my short call expires exactly at the money, which is the same as out of the money at expiration, which also makes it worthless. Again, this means I'll get to keep the $2.50 that I sold it for, so my net P&L is improved again up to $22.50. Also good. If Apple rises all the way to 220, I make $40 per share on my stock, but now my short call slows me down because it is in the money. I do get to keep the $2.50 I sold it for, but now the short call loses the difference between the 200 strike price and the 220 stock price. So again, my net P&L is plus $22.50, which is good, but not as good as it would have been if I just held the long stock only. But lastly, what happens if Apple stays at 180? It moves around, up and down, sideways, whatever, but at May expiration, it's right back to 180. Well, I don't make or lose anything on the stock, but again, my short call expires worthless, so I get to keep the $2.50 per share. So in other words, I generated a positive P&L on my position without needing the stock to go anywhere. And that, my friends, is the power of options. Not to mention, I also improved my net P&L in 2 of the 3 other scenarios too. Okay, so next up, the vertical spread. And specifically here, we're going to talk about a short vertical spread using put options. So this would be a short put spread. Let's use Tesla as our example. Here, I won't have the familiarity of long stock to lean on, as my position will be solely options. But I'm bullish on Tesla, so I want to set up a short put strategy in the May cycle with 37 days to expiration. To do that with Tesla at $250 per share, let's say I set up a 220 short put spread that I'm able to sell for $2 in the May cycle. Now, an important aspect of short vertical spreads like the one I have here is that my maximum gain is always whatever I sold the vertical for, so $2, and my maximum loss is always the difference between the width of the vertical and what I sold it for. So $5 width minus $2 credit, or a $3 max loss. So let's work through 4 different stock price scenarios. Tesla rises to 300, Tesla stays at 250, Tesla goes down to 230, and Tesla goes down to 200. First, Tesla rises to 300. In this scenario, this short put spread expires out of the money, so it's worthless, which means I keep what I sold it for, and my P&L is plus $2. Next, Tesla stays at 250. In this scenario, again, the short put spread expires out of the money, so it's worthless again. I keep the premium, and my P&L is plus $2. Next, Tesla falls to 230, so it went down when I wanted it to go up. But here's the crazy thing. Again, the short put spread is still out of the money, so it's worthless. I keep the premium and my P&L is plus $2, even though I was wrong about the direction of the stock. And lastly, Tesla falls to 200. In this scenario, the short put spread is fully in the money. So this trade would be a loser where I would lose the most I can possibly lose for a P&L of minus $3. Now, as you can see, I'm not hitting home runs when the stock moves in my favor in this Tesla example. Not at all. But it's pretty crazy that I'm able to make money when I'm wrong on the stock price direction completely. Well, that is exactly what we meant earlier when we said you're able to benefit from the passage of time. When you sell out of the money options, if they stay out of the money, then you are able to allow that time value to drive your ultimate P&L. So now, the third and final strategy, the short strangle. Here, let's say I want to do an option strategy in Starbucks. And for this one, I don't think Starbucks is going to move much between now and May expiration in 37 days. So I want to set up a strategy that is a pure time play. It could be a volatility play too, as we alluded to earlier. But for these examples, again, we're just focused on time. So with Starbucks at $95 per share, let's say I sell an 80-110 strangle. So an 80 put and a 110 call in the May cycle with 37 days to go for a $4 credit. As long as Starbucks stays between 80 and 100 at May expiration, both options will expire worthless, and I'll keep my $4. So that means it could go up to 105, it could go down to 82, and it could do everything in between. It won't matter to me, and it won't matter to the position. As the time value comes out of the option by expiration, I will make the $4 profit from time alone. But here's the catch. Anything above 110 or anything below 80, that's where my risk is. And even more specifically, I have an unlimited amount of risk on both sides. Now that right there, you might be thinking, man, I am out. I am not interested. No thanks. Well, that makes sense, because you're just getting started. I just wanted to take the opportunity right here, right now, to introduce you to the short strangle, because it continues to be one of the most popular and effective strategies that experienced traders use every single day. And you yourself are probably striving to become an experienced trader one day. For now, though, there's no rush. This is not a competition. Start with covered calls and then move into vertical spreads. There will be plenty of time for other strategies like short strangles sometime down the road. I promise you, covered calls and vertical spreads alone are going to keep you plenty busy. All right, so next up is the final step of this whole crash course, where we are going to work out some different ways that you can break down your total portfolio and show both you and Jimmy how you can split up your assets between a passive approach and an active approach. Step 5, portfolio allocation. So now I'm beginning to equip myself with more skills to attack the market from a variety of angles. I can trade time, and I can trade volatility in addition to direction. But to do that, we have to figure out how are we going to split up our assets. More specifically, what chunk, what percentage of our assets are we going to keep doing what we've always done, and what percentage of our assets are we going to devote to this brand new derivative strategy? This is a really important question to answer, and here's the most important thing to keep in mind. You don't have to go all in with 100% of your assets into an active approach in the derivatives market. Definitely not when you're just getting started. It's understandable that shifting away from a passive, long only bias in the market that has done you so well for so many years is going to take some time. But practically speaking, what might some asset breakdowns look like? Well, if you remember, my retirement portfolio just crossed the $1 million mark. And in addition to that, I also have a $100,000 brokerage account that I might use to play a hunch from time to time. So in my situation, the starting point here is easy. While I'm certainly intrigued at the prospect of not having to be passively long all the time, I'm still confident that the upward trajectory of the market will continue to some degree or another. So I'm going to start with my $1 million retirement portfolio, still doing what I've always been doing, long some market indexes and some of my favorite stocks, but I'm now going to devote my $100,000 brokerage account to a more actively managed approach that focuses on derivatives, just as we've been talking about today. So that means that $100,000 of the $1.1 million total, or about 9% of my assets, will be actively traded, and 91% of my assets will continue to be passively invested. This is a great start. And over time, as I gain more experience and my skills improve, I suspect that that ratio is going to shift in favor of more assets being actively traded. But maybe you have a $500,000 retirement portfolio and a $200,000 brokerage account, and you want to devote more assets to the active approach now. Again, I think splitting up the approach to whatever is in your retirement accounts to passive and whatever is in your brokerage accounts to active makes a lot of sense. So here you would be about 29% active and 71% passive, so still the bulk of your assets passively invested, but a much bigger chunk devoted to the active approach. Or maybe you have a $200,000 retirement portfolio and a $40,000 brokerage account. Again, with the natural split of retirement assets into passive investments and brokerage accounts into active trading, you're looking at about 17% active and 83% passive. Of course, you don't have to do it this way. You don't have to use your retirement accounts for passive funds and your brokerage accounts for active funds. You can certainly do it a different way. You could even mix it up if you want to. But when you start to learn about things that we were not able to cover in this course, with buying powers and margins and things of that nature, it does make sense to begin with passive funds in the retirement accounts and active funds in the brokerage accounts. There are many, many, many ways to split this up. But whatever you decide, here are some important things to remember. First, by keeping some amount of your assets in passively invested positions, you'll maintain the familiarity of what you've been doing your entire investing career. So playing the natural market drift higher, collecting dividends, dollar cost averaging, all that stuff. Second, remember the strategy I suggest you start with for even your active stuff is the covered call, which we introduced just a little bit ago in this very crash course. So even within the active portion of your portfolio, you'll have that same familiarity of long stock. From there, you can grow into vertical spreads, possibly even short strangles down the road, and many, many other strategies. But lastly, again, do not forget, this is not a race. This is not a competition. The market will always be here. So don't go fast just for the sake of going fast. And don't dive into the deep end before you've even dipped a toe into the water. You're going to mess up and you're going to make mistakes. So ease into the active approach little by little and only do it as you are ready. And I'm here to help you as much as I possibly can. So please, you can always email me. I'm jschultz@tastylive.com, or we can connect on X at jschultzf3. But now, where do you go from here? Well, given the nature of this crash course, there were so many things that we were not able to unpack, that we were not able to dive deeper into. And so, if you want to use this crash course as a catalyst to improve your skills and improve your abilities, then I would strongly encourage you now to dig into the live show on the Tasty Live Network, dig into the archives, and maybe possibly even check out some of the other crash courses that are already available on the network and on the YouTube channel, such as the one that dives deeper into what it means to begin to trade options, and it happens to be starting right now.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in-the-money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you. That was
This was not
awesome.
a paid, you're not getting paid
Right.
for this advertisement.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Hey, well, the big day is here. We have got the Fed, and I was just listening to him. I don't know if he's finished up. I never get to see the end of the press conference because my show always overlaps it. But maybe he's done, maybe he's not. And then, of course, we've got the earnings tidal wave after the close today. I always talk about context and relativity, and the same goes for the Fed, because I've done this show a long time, like a dozen years, maybe more. I've lost track. And I used to sort of berate the Fed and castigate the Fed and roll my eyes at them. Things have changed. And so as far as DC as a whole goes, they're actually kind of my favorite part now, because I pay attention to them, I listen to them and so forth. And, this is a body of reasoned, intelligent, discerning individuals that I think are trying to do their best at their job. And so that's why I'm not belly aching about the Fed so much, because they're kind of the apex right now. Crazy as that sounds for me to say. But as always, Powell did an admirable job at the press conference, and his speech was a little longer than normal because, this is his swan song. He probably had, he wanted to make some things clear about why he was going to stay on as a governor for a while, and his feelings about the Fed and the values that it should retain. So it was eloquent and it was intelligent. He's clearly a very bright man, to say the least. And there were plenty of questions from the press which were answered thoughtfully. And when he couldn't or didn't want to answer them, he did so politely. So it's like the before time, kind of nice to watch. As far as the earnings go, this is the big one. After today, things get kind of dull. Apple is a reliably boring stock that's coming out tomorrow, so it's almost a non-event to me. I mean, you're not going to see any shocker, I don't think. But today, with Meta, Microsoft, Google, and Amazon, I think I got all four right. It's going to be maybe some fireworks here and there. And like I said yesterday, they're priced for perfection. And if you get for perfection, maybe things will just keep rallying, because this very week we had lifetime highs in the S&P, lifetime highs in the NASDAQ, lifetime highs in semiconductors. And I'm having none of it. I'm completely short. I'm shorter than ever. Got 40 different short positions. Can you believe that? 40. And most of them are doing just fine. And like I said, my kind of North Star, I keep calling it Bitcoin, is doing perfectly well. It tries to scare me every night. Every night they give a little rally. I don't know if Michael Saylor comes out there and gobbles up billions more Bitcoin and makes it rally, but day to day, it's definitely behaving itself. So let's jump into the charts as we await, just in an hour from now, the cavalcade of earnings. Here's the diamonds, and they are down some, not quite 1%. It's the same story. They did not achieve lifetime highs. They have fallen short of doing so, and they are respecting that broken trend line. The Dow 30, as I keep saying, just like Q1 2000, topped out a while ago and is letting tech just run with the zaniness. And so it has, over the course of the past about 7 trading days, pretty much been falling. Pretty much lower lows and lower highs on a day-to-day basis. And a couple of thousand points below lifetime highs. The small caps, IWM, they had their lifetime high, I think, last week. Today, just about a perfect gap seal. Let's watch that. Can we crack it tomorrow? As it has been now, we had our peak here last week, and yesterday and today some weakness, and at today's weakest point, just sealed that gap up nice and neat. So we'll see if that holds or not. Kind of interesting to observe. But as I said, semiconductors, which are the 7 cylinders of this 8-cylinder engine driving the market, those maintaining their strength, had just a touch of weakness yesterday. That's been dispatched. We're up 1.66% right now, in the vicinity of lifetime highs. The actual intraday peak was on Monday, and the lifetime close high was on Friday, and we're still in that vicinity now. It's a real mixed bag. It's incredible. Actually, I haven't even looked at NVIDIA today. I've been very distracted by other things, but I've not looked at NVIDIA. I have no idea what they're doing. Let's just take a peek. I'm cheating here a little bit. I'm going to look. I'm curious. It doesn't agree with the symbol on your screen. Okay, it's back within that. Shame on me for not including that. It's kind of important, but it has slipped back into its pattern. So sorry if I messed up the symbols on your screen, but we're back to the regularly scheduled program now. Crude oil is really strong, and it's like people have stopped caring about it. It's very odd, very, very odd that it would be this strong. Let me try to put it this way. Let's say in February, let's say we took a time machine back to February before all this had happened. And we gathered up a bunch of economists and market analysts and so forth and said, just for the sake of argument, what if oil prices doubled in a couple of months? And after they stopped laughing at the preposterous hypothesis we're putting forward, they'd probably say, well, my God, it would wreck this, it would wreck that, the Dow would be down 10,000 points, etc. It's come about in such a way that people have kind of gotten used to it. We have not just triple-digit oil, but Brent crude's like 119, 120 a barrel, and it's kind of a version of the frog in the pot, where the water comes up slowly. This one's been a little bit different. It's like the frog was in the pot and they cranked it to boiling and they simmered it down again, and now it's slowly going back to boiling, and the frog is just kind of used to it. It's like, well, water's super hot. That's just how things are. So, because oil was a 50-ish a barrel creature early in February, and now it's triple digits and has no signs of slowing down, it seems, because it's not like, oh yeah, did you hear about the nuclear war in the Mideast? Things are actually relatively quiet over there. There's proposals going back and forth that are not being accepted, but it's not like there's a hot war all of a sudden. So just saying, people just don't seem to care that much, because the equity markets are at lifetime highs now, and pretty much. And the NQ up triple digits today. Oil doesn't seem to matter. Strange, isn't it? Okay, let's look at some earnings from yesterday. I made mention of being short Robinhood, HOOD, and that worked out. We're plunging on that one like 15% or so, having a nice tumble on Robinhood. Nice rounded top on that one, so worked out. A couple of earnings that were explosive yesterday, and I think led credibility to the zany tech valuations we've got. One was the earnings, one was a sympathy play. The earnings was STX, Seagate, and Seagate exploded higher. But let's zoom in. Look at this. They opened quite strong, and they peaked way up here, just about at 700. This was a 500s yesterday, and was at almost 700 today. But look what it's doing. That big red bar. And just as a reminder, it's a candlestick. The red bar only means that the present price is lower than the open price. We're trading at the lows of the day right now. I shorted STX and WDC earlier today based upon the old selling into strength maxim. And so I've got a profitable short on STX in spite of it being up about 10% because it's a new trade. And then WDC, which reports, I think, tonight, they blasted higher in sympathy as well. That's one of those funny trading words, sympathy. It always sounds sad, but it doesn't necessarily mean it's a bad thing. It just means kind of contango, it's going along with it. So it's a sort of joyous sympathy higher. So WDC blasted higher, but same deal. It was much, much higher earlier today. It's trading at the day's lows. So I'm short STX as of earlier today. I'm also short WDC as of earlier today, even though they're announcing earnings tonight. One of the most common questions I get is, do you hold on to positions through earnings? Yeah, I don't care. I mean, I kind of pay a little bit of extra attention, but good heavens, it's just like, oh wait, there's earnings tonight, I better close everything. What? No, it's a chart. I mean, the chart should have the whatever information is embedded into the fact earnings are coming already. So yeah, the answer is no. I don't. It's like, oh, there's earnings, I better get out, I might lose money. No, that's the answer. SNDK, by the way, has been continuing to blast to lifetime highs regularly. This is very much related to SDX and WDC. These are all storage companies. SanDisk being a much younger public entity, but has done sensationally well, up 900% since it went public, something like that. So that's just, I'm not short that because I'm just not. Okay, I'm gonna beat myself up more about my closed gold position. Won't that be fun? My miners, more specifically, gold continues to fall, just like I said it would, and I stupidly covered my gold miner short for no good reason. So shame on me. And I say this every day, but it just keeps falling. And I'll say what I did. I'll say what I said yesterday and the day before. It's probably just going to keep falling. I could easily see this going to 4,000. So yeah, shame on me. GDX, which was what I closed or covered, I shorted it here, covered it here, I think, and then of course it continues on. And I suspect miners will just keep going lower, just like silver, just like platinum, just like palladium, just like silver miners, you name it. So, blah. Okay, now as I mentioned, I do have a whole heap, 40. Is it? Actually, it's 43. That's how busy I've been. I've lost track of my position. I've got 43 short positions. That's bonkers, isn't it? Here's a few of them. Here's one I mentioned a lot. AST Space Mobile, ASTS, down about 3%. It's been a pretty steady performer to the downside. The thrills of flying cars and rockets has died down recently. Palantir, PLTR, shorted this one yesterday, and this is down today about 2.25%. None of these are very dramatic, but they're going the right direction, particularly since another triple-digit gain on the NQ. Here's one I don't know if we've talked about or not. I might have, because it's a really nice pattern. ADMA. This is Adma Biologics. You can see plain as day a beautiful head and shoulders top on that one. I've been tracking this for a while, and there's a couple of reasons I sort of held off on shorting it. One was I didn't know how much closer it would get to that neckline, because there's a lot of sunshine between the rectangle and where it peaked a couple of days ago. So I didn't know if it would just keep on shooting higher. The other reason is that it's not particularly heavily traded. It's kind of a middling volume, but it's such a big, beautiful pattern. I decided to give it a shot. And so it's worked out so far. And obviously my stop is just above this bar right here. So that's ADMA. Then there's DoorDash, whose symbol is dash, DASH. This one is down, although, kind of a scary looking little hammer there that might do a little counter turn rally, but I don't set stops that tightly. So that'll probably we'll stick with that. Then there's GE Aerospace. We've talked about this a lot. Symbol GE. This is down about 2.2%. And it's working on kind of a messy reversal top right there. It's got some more work to do. It's going to have to cut below the lows of last week in order to complete that. But, it's moving in the right direction. And then there's HIMS. A lot of repetition here because they're working day to day. This, I think I mentioned yesterday as well, off about 5% on HIMS and HERS, HIMS. There's the rather crude reversal top on that one. And then with crypto still pretty weak, strategy continues to work out. I'm short Michael Saylor's strategy, MSTR, off about 4.5%. And there's a nice big top on that one. Again, not particularly well formed. Then here's one I don't think we've mentioned before, Pony, Pony. This is pony.ai. And this is off almost 6%. Pretty decent top on that one. And this is one of these, never seen a profit in their life kind of companies. And it's doing good things. I look at a lot of charts to try to beat these out of the bushes. That's why you've probably never heard of a lot of these. And then one last one here, Rigetti, RGTI, down over 3%. So on the whole, just a really good day. As usual, as I glance over at my quotes, there are some greens here and there, but on the whole, they're new positions. So they were entered earlier today at better prices. And so it's a pretty solid day. I feel especially good about that because the market's barely down at all. When the Fed did their announcement, it tumbled down. The ES was down like 28 or something. At the moment, it's down like 6. It could well be green by the time the day is over. It's really all about earnings tonight. That's going to have an outsized effect. Speaking of, these are the 4 big boys, and I've put them kind of in increasingly interesting order. The most dull one to me is Alphabet, Google. It had a nice little top there, and this did what the market in general did in a big way. Fell, retraced, and then rolled its eyes and just kept blasting higher. So it's at lifetime highs now, and no position. I guess it'll just keep on keeping on. I mean, it's a very powerful stock, and it's definitely acting very bullish. Microsoft MSFT has been exceptionally weak stock relative to everything else. You can see it had just a terrible run here. And this is in the context of a staggering bull market. Just fell and fell and fell. It finally bottomed and has rallied to some degree. But I do think it's going to have to best last week's high to sort of prove itself. Then we have Amazon, AMZN, which is, I guess, lifetime highs as well. Very messy. It has cut below and above this trend line. I got no read on that. The only one I have a position in at all is Meta. I have put options on this that expire in September. If this goes blasting into the stratosphere, I guess I'll just throw my hands up and get out and be done with it. But among all these, that's my only position. So as far as the incur in general goes, this has been pretty much green for the day. We're still well above this rectangle that we've been within. And this will definitely have some movement tomorrow because almost all the trillions and trillions of dollars of market cap are at stake with respect to these earnings announcements. And I'll just say in closing, tip of the hat to Bitcoin, which again keeps trying to scare me night after night. But this is the fifth red bar in a row. I'm getting used to the spookiness in the middle of the night when it's lurching higher. You can see it from those long shadows being thrown. But on the whole, this is Old Faithful. It's doing just fine. Okay, well, good luck. Big night tonight, so I'll see you tomorrow afterwards. Bye-bye.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nikki Batt, University of Kansas. Number 20, because that's how many underlines are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23, because I'm trained 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1 over 365, because that's the square root of time for one day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for one day.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding future.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Hello, everybody, and welcome to the Blazer Twin episode of the Liz and Jenny Show. Jenny still got her professional blazer on. I went a little bit more cash for our last call.
I said to Liz, never did I think we'd be the blazer people, but we have to wear jackets on the trading floor, and we've elevated from trader jacket to actual blazer.
The actual blazer. These are fun facts. Okay, now this is last call. Thank you for joining us. Let's jump in the platform because we've got about 27 minutes to look at all of the earnings that are on deck, Jenny.
And Fed's done over pretty much. I mean, I was listening to Powell, and it's a non-event across the board.
And that was what was expected. That was priced into the market. The non-event was, I mean, the market is smarter than we are. We kind of said that today. The market is smarter than we typically are, and a non-event was priced in. So it was what we expected.
But I said earlier, if you're putting on earnings trades, I would definitely, if it's a Fed day, I'm 100% waiting till after, just in case. You never know. I mean, we have had Fed days where what's expected to happen happens, but then when the chair is speaking, he could say something that would make the market move one way or the other.
No, for sure. So, we've got a lot of earnings on deck. So I'm going to go directly to our earnings thing. It's not coming up again. See? I wanted to show this.
There it is.
We were on deck yesterday to ring the bell, and so.
It's funny.
Okay, now I'm going to go straight to the earnings because we tweeted them. Okay, tonight after the close, Alphabet, Microsoft, Amazon, Meta, Qualcomm, Chipotle, and Ford. And then what's before the bell?
And before the bell, Bristol Myers, Caterpillar, Lilly, MasterCard, Merck, and Royal Caribbean. So right now I have on Microsoft, Amazon, Meta, and Ford. I have 4. That's it. I don't know.
I actually only have 3. I didn't do anything in Google, but we're gonna take a look at Google too. So let's go down the list. We have our Microsoft trade, so let's just review the tape real quick to make sure that we're comfortable with it, which I am. But Microsoft, it's down $3 total. We did it a day in advance because it was our YouTube trade of the day. We have the 455, 425. Diagonal.
30 diagonal. And these earnings diagonals, we like them because you could usually pay a third of the width. So we have a $30 wide spread where we paid $1,000 for it. So that's expensive. That's expensive. Diagonals right now in some of these products, Meta, Microsoft, like they're pretty expensive. But
well, we have to use our words. This was less expensive because when we use expensive, it's a lot of capital outlay, but it was way less than 50% the width of the strikes.
Right. Yeah, a third of the we pay a third of the width. So we have a $30 wide. We paid $1,000 for. But when I say expensive, it's $1,000 on an earnings trade for this account. For this account, I don't even know how much money we have in this account, $30,000 or something like that. That's an expensive earning trade for a $30,000 account.
It is, because if it goes awry, it can go awry. We can defend that. But so that's what we've got on Microsoft. So then let's kind of go back and forth. So we've got Microsoft. Let's take a look at Google. I don't have anything in there and you don't have anything in there, but it's on the top of the list. Google with an L. Here we go.
I know. I didn't do Google. I did it because of a couple of reasons. So I looked at the chart. I mean, there are plenty of Google with the L. I looked at the chart. This is kind of how I assess my earnings trades. Look at the chart, top of its range. I also looked at the market cap and what is it, like 4 trillion or something like that? If you go to overview. Overview. At 4 trillion, it was like, I think the biggest market cap out of everyone with earnings today. So, and so I just thought, I'll pass. I don't want to put on a long diagonal in Google. I'll pass.
So, I mean, that's just assessing just the diagonal. I mean, there's plenty of things you can trade. You got a 58 rank here, but neither one of us have Google in. So I'm not going to trade it either. I don't, and full disclosure, I don't look at market cap. I don't look at anything. I just know that I have 3 in, and I usually don't, I don't typically trade Google.
What's Microsoft market cap? I don't even know. 4 trillion for Google and Microsoft 3 trillion. Yeah. And
Microsoft is the bottom of its range. If it gets up here, it's probably 4 trillion.
I know. So just a little more reason to, hey, I'll throw in this bullish diagonal and take my chances. I feel like
we've been bullish Microsoft for a very long time too. So it's helpful. You don't mind it through earnings if you're bullish. So they put Alphabet in here twice, which was nice. No, Jenny and I also took a shot on Meta. This diagonal is expensive.
It was $1,600-$1,700. If we want to do something in Meta, maybe we do something else.
We're not going to push these through, but I think it's fair to say what you and I both have on. So we took a look at this, and the reason, the rationale behind it, and so we kind of talked a little bit about this, is that I was like, we can sell baby put spreads in all of them, but one baby put spread can wipe out, one losing baby put spread, even narrower, can wipe out all of our wins. If you win $100, $100 in 3 of them and one goes down. And then
one is full loss. And today we saw so many earnings go outside their expected move. We thought, well, that I don't want to do that. We'd have to win, 3 to make up for 1 loss. So I didn't think it made sense today.
And things have been going well outside their expected move. So what Jenny and I did in Meta, and kind of taking a look, going through that whole process, here's the chart. Not that it matters. I actually don't really care for it.
It doesn't matter. It was really Google. It was Google that was like, okay, this is a, $4 trillion company at the top of its range. I just didn't feel like putting on a bullish trade in Google.
Only because you got me curious. Meta's only a $1.7 trillion.
No, I always look. I always like to see what the market cap is.
This one still really kills me because I got long at 36 and unloaded at 40.
It's not dropping the first handle. It's literally 36.
30. I'm not dropping any handles. 36, and it's split and doubled since then. But nonetheless, that's the mind eraser shot that I will be taking later. We're gonna go, which actually sounds delicious. For those of you who watched their show today, the mind eraser drink might be my new drink of choice.
You know what? I'm going out to dinner tonight for someone's 50th birthday, and when the server comes after dinner, I think I'm gonna order a mind eraser. I'll see if they know how to make it.
Oh, you totally should.
Yeah, I'll get a picture.
Okay, so taking this in here, we're gonna go. If you're gonna put on a bullish diagonal, if we think Meta has some room to run, and that's not what I'm saying. What we're trying to do with these diagonals is say, if you're risking a third, let's set them up, and then we'll kind of talk through it. So I'm selling one just at the expected move in the 2-day for the 722.50 strike for $8, which is decent. And then I'm gonna go the 5-day to make it cheap, and I'm gonna buy the 675 to make it cheaper.
Yeah,
$17.50. Make sure.
So it's like $47.50 wide, $47.50 wide, and you're paying $1,800 for it. I mean, our thoughts with these diagonals is, if one or two lose, all you need is one to hit to. You need one win to make up for a couple losses, whereas those put spreads, you need many wins to make up for one full loss.
Yes.
So, but I don't. Adding these all up, if they all lose, it's gonna be a hit. It's gonna.
And so we talked about this a little bit on Tuesday's show. The earnings are wrapped around 50-50, but that's the huge sampling. So right now we're gonna have a couple trades in, and right now we've got Microsoft in, but I'm not gonna press the button on Meta. I don't mind fighting a bullish Microsoft for a while. Meta's a little bit pricier for me. It's $675. Microsoft isn't as much.
Yeah, I mean, you did this diagonal, I did this diagonal, but for the show account, I feel like $1,800 is a little much. The Amazon diagonal is not bad. I mean, if we wanted to be in the meta game, we could just go. We could do one put spread where we've just got one short put spread, or if we wanted something bullish, we could sell put spread and sell $5 wide put spread and buy a $2 wide call spread.
So you can actually.
So yeah, this is really no debit. You're buying a $250 wide call spread and using a $5 wide put spread to pay for it.
If Meta goes down and goes outside its expected move, you lose $500. So but
that diagonal is if Meta went down that much, that diagonal would lose $1,700.
It would lose $1,700. But I think the hard part about this, and I know that Jenny and I are a little bit more advanced traders. So the hard part about this is your risk reward scenario isn't there. You're going to lose 500 and only make 250 if it goes up, because in this area it'd have to go up, because in this area you just make nothing. So you just put a trade on where you're hoping not to lose anything, which isn't a bad way to trade. But I want to be on offense instead of defense.
But if we're in the meta game, I'd rather have $500 at risk in this account than the $1,800.
Oh, I don't think we're going to put anything in this game, in this account, because we didn't.
It's tough. $670 product is tough.
Yeah. Yes. But to your point, Amazon was a little bit more.
Yeah, we could do a diagonal on Amazon for only about $700. Okay, and here's where people have to be careful. In some stocks, like Amazon, we have.
I'll go back to Meta first, so you can talk about what you're looking at. Here's Meta. The earnings are in the 2-day. That's the cycle we're selling. And then when you go to Amazon,
some stocks that are very active have Wednesday expiration. So that 0 day is today, a Wednesday expiration. That's not what you're trading for earnings. That's not what people are trading for earnings. That's going to be gone today. So if you're placing an earnings trade, it's got to be 2-day or further. Ignore that 0 day. SPOOs are only down 10. Rally. Just get your rally cap.
I know, it's crazy. So what we did in this as well is, if you take a look at Amazon, kind of going through the exact same principles that we're doing. We don't know which direction things are going, so we picked the same direction for everything, thinking that hopefully we can land on a couple of them. You open up the 2-day, you go to the expected move for the cycle, right at this 280. Maybe I can move it out. Now to make it cheaper, you can go to I'm just going to go to the 5-day, and I'll go to 260. So we've got a $20 wide, which is easy, for 782.
Now, if you highlight that 260, actually, you can go to the 262 and even make it a little cheaper. Then it's only 650. If you highlight that and go out expiration, you can see how it changes. So 650.
So keep an eye on that.
680.
It's not bad.
710. Like, it doesn't change too much as you move that further out in time, because you're buying then the lower vol as you go further out in time.
And keep in mind, you're not popping it out that far. You're getting 2 days. That's why it's not changing it too much. Each one's going. This one finally changed it a little bit, but you're getting 2 days.
No, here's 16 days. That's a 16
No, no,
day.
no, no, no. Watch when I go down. 16 day, 14 day, 13 day. It's the 16 days. That's why when it's only going up incrementally until you get to 16, then when you hit the time, it goes to the 23.
No, but that first one for 650 was only 5 days, I think. It was very short.
Very short, very short. But the reason that it's so much cheaper is because you're not going up by that many days. Here's your 5 day for 672. Now look, you're getting 2 days for 30 cents. 2 days for 30 cents.
Yeah.
So that's why it's cheap, that it's cheaply to go up because it's only 2 days.
So you have to be careful. If we typically put on a diagonal for earnings, it's this week's, next week's. So this week's, next week's, like that 5 day is going to be Monday. 5 days is going to be Monday, and the Monday that's gone.
Oh, I think this is fine. I just don't want to jump from the 16 to the 23 day.
Yeah.
So 718 makes sense. We're going to do the 280, 262 and a half diagonal. Selling the 2 day 280, buying the 9 day 262 and a half for $7.23.
That's fair. Then we've got Amazon and Microsoft. I mean, Amazon. I don't mind if I buy everything for the rest of my life from Amazon. It just gets delivered to my house.
God knows Amazon's at my doorstep right now. They're at my doorstep every single day, and we're filled in it.
I want 5 packages today when I got home outside my door.
I want a word of warning because hold on, this is a day when this matters. So you will notice that when we rang the bell yesterday, it was 3:15. It wasn't 3 o'clock. It was 3:15 because these things will trade until 3:15. These things meaning these indexes, triple Qs, SPY, all those trade till 3:15. What ends at 3 o'clock is 0 DTE SPX. They're done, and they end at 3. Everything else is 3:15 of those indexes.
Yes. So I know you said earlier you might have do something in triple Qs, so you have something.
That's why take a look at this. So they're going to keep their value. And I want to look, we're going to go back into triple Qs. I'm keeping an eye on the time. I'm going to go back into triple Qs at 259 because I want to show you that it's going to still keep some value.
So this is what I was talking about the other day if you have an option, let's say you bought that 660 call. Let's just say you did. So you bought that 660 call and let's say Meta, Amazon, Google, they're all up and Qs is up and Qs is trading like 668 in the after hours. Well, if you have this call,
it's got to be in the money. It's got to be in the money. If it's trading 668, that makes sense. When we were talking about it before, you can exercise it up until 3:15, right? But
if it's out of the money, you would have to if it's out of the money at 3 o'clock, but it's in the money at 3:15, you'd have to call to exercise it.
I don't know about the 3 to 3:15. I know our example we were looking before, you were all out of the money.
So if it's out of the money at 3 when the bell rings. If it's out of the money at 3 when the bell rings.
That bell is for all the other stocks. It's not for this. This ends at 3:15. So if it's in the money at 3:15, your exercise are assigned.
You think, okay. I wasn't sure. I wasn't sure if you had to call to do it.
So you were exercised. You can trade it up until then. You can literally trade it. Yeah.
That's true.
So
can you trade the 0 day up until 3:15?
That I'm not sure about.
I don't know.
Maybe you have to buy this one.
No, I mean,
because SPX 0 day, so SPX trades until 3:15. The 0 day ends at 3.
The 0 day ends at 3. I'm just not 100% sure on if you have an out of the money call on Qs and then at 3 by earnings start coming out and it ends up in the money. I'm not sure if you could automatically, if it's out of the money at 3 but then after hours, I don't really know if you automatically assign then.
Well, you can't say after hours because it trades until 3:15. So if it's not after hours until it closes, but we don't know if the 0 day closes at 3 or 3:15. That's where our question is.
I just don't know if the 0 day, I'm not quite sure. These are questions for your brokerage firm.
So then keep it at the 1 day because that does trade till 3:15, right?
But there's a lot of premium in the 1 day.
Yeah, for sure.
If you look at that, the 0 day versus the 1 day, it's like $2.
So let's look at the 660. It's 252 versus $5, and you should see that.
That's just a day.
Yeah, that's just a day, but it gives you the option to trade it. I don't know. Like I said, we'll look into that and get back to you. So we've got Amazon in, we've got Microsoft in. Let's go back to our list. Amazon, Microsoft.
Ford. I have Ford in too.
Is there anything you want to do in Qualcomm or Chipotle?
No.
Do we have anything in Qualcomm or Chipotle?
No.
Because sometimes we have CMG in. We don't. Okay.
I just have short puts in Ford.
So 72 rank. What'd you do, the 12s?
You almost have to go further out in time.
What cycle? Because I don't usually trade for it, and I know you do.
Go to May. Try May.
So you want to make sure you still have an elevated implied volatility if you're waiting for earnings. So May still has a 49, and you can see June has a 39, so it does take it down quite a bit.
Yeah, I sold the 12s for 45 cents.
That's not bad. Ford, so your break even is about right here.
I mean, I traded. I talked about this when I had Dan Pesrelian. We met in the Ford pit. I traded in the Ford pit back long before I traded in the Corning Glass pit. I was in the Ford pit, and so I have a little right above my head. Right above my head, there's a cool Ford picture, and on my wall.
Is it? We can't see what the pictures are.
Like this one. See that picture?
You can't see what it is though.
Maybe I'll bring it on tomorrow.
Yeah.
It's an old Ford picture, and I try to always have a Ford position.
Oh, that's awesome. All right. Well, I don't mind doing that. We're going to sell this. This is for earnings. This is not part of our diagonal series, though. Just a little FYI, it's not part of our diagonal series. So Ford's in there. I wanted to take a look at some of the other ones that were tomorrow morning. BMY, also another one of your pits. Caterpillar, Lilly, MasterCard, Merck, and Royal Caribbean. Now, Scott Somer did a fun trade in Royal Caribbean.
Take a look at it.
We did not push that through, but take a look at Royal Caribbean. This is what kills me. I would like to be bullish in Royal Caribbean.
It's tough. It's tough.
But it's tough. Although... I didn't know it'd come down that much, but it was a $300 stock. That's insane. $360.
I know. Where is it now? $250. What was Scott Summers' trade? Was it?
He did a Bob on Fire.
It was a Bob on Fire, or a ratio Super Bowl.
The Bob on Fire. So you 20. You're gonna go about right here. You're doing. Buy one, sell one. So I've got $18, and then you need $9 twice.
I just can't bring myself to sell those 180 puts in Royal Caribbean.
I can't bring myself to sell those 180 puts in Royal Caribbean, said everyone. Because I agree with you. I agree with you. That seems insane to me. Even though it's not on the chart here, it's right here.
All right, let's do our little I'm just curious. What's the market cap in Royal Caribbean versus Carnival versus 77 billion Royal Caribbean. Carnival?
I think Carnival is less. 40 billion.
40 billion. Norwegian.
CL?
And I think it's NCL, Norwegian Cruise Line, NCL.
L8, there you go.
Yeah.
9. Royal's obviously in the lead.
Yeah. I don't know. I've had a hard time getting long Royal Caribbean.
They are killing it, though. Those boats are packed. People are getting on them.
People are getting on them, but everyone I know is getting on for free.
I've never gotten on for free. I've taken a lot. I usually pay through the nose.
Yeah, you do. But everyone else I know goes on for free because they gamble in the casino.
Yeah, I usually pay a lot for them. And they're very, 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 very crowded. Okay, but we still don't need to do that. I just wanted to take a look at it because Scott Somer did bring it up. Now, the other thing that I want to take a look at real quick is Caterpillar. I usually avoid Lilly because the Lilly is very expensive.
Lilly's $800.
And the drug stocks, right. So Bristol Myers, Lilly, and Merck are all kind of drug stocks. We can take a look at MasterCard or Caterpillar.
Sure. Let's take a look at Caterpillar. I feel like that reminds me of your dad, right?
Oh, good old American company. It totally reminds me of my dad. Look at this.
Hey, did you have any idea that Caterpillar was $800?
I had no idea. And my dad would kill me because he gave me a bunch of Caterpillar and I sold it right when I got my account.
It's tough.
You know what though? My brother still has his because when my dad passed away, we split his brokerage account and there's a bunch of Caterpillar in it. And so let's think that was. I'm just gonna go back because that was 2000. Oh my God, I'm only at 20. Hold on. 16, probably about here. I got tons of stock at about 84.
Well, yeah, and you sold it then. But. I've gotten past the, oh gosh, I sold this stock here and now it's here. Because think of how much money you could make in the churn of just selling puts. Like if you've been selling puts every month in Caterpillar from 2016 to now, it could probably surpass what you would have made if you just had.
I don't know. When you see a chart like this, the stock has risen more than the puts.
You're looking at the course of from 2016 to 2026. You're looking at 20 years.
Yeah, but when you look at something like this, I feel like the puts would win. When you get a little bit of a down move, the puts are your friend.
Yeah.
So I don't know. The Caterpillar's way too expensive for our blood, but congratulations to my brother
for holding on to his 8 times return on his Caterpillar stock.
Yep. But I just want to see. So this has 2 million shares have traded. It's not that liquid, right? So when you take a look at this, look at the volume of the open interest. When you open a stock, typically we're going to see thousands and thousands in the 2-day, and this has hundreds. You're not seeing even a strike with thousands in it.
Yeah.
I know. I just wanted to go to this too because it's most active. I'm going to have it refreshed. I just want to
which of these earnings. I'm curious. Like which of these earning stocks is on the most active? If you go down and look at the equities,
hold on.
Like are all eyes going to be on?
So that's all options. I'm going to go to index. I'm going to go to okay. Here we go. This is what we're talking about. Nvidia, but Nvidia doesn't ever. Oh, Amazon. It's Amazon. There you go. Amazon in
calls, not on the put side. Amazon call 290 calls, 260 calls, 300 calls. All right, go back to Amazon. Let's take a look at 260, 290, 300 calls in Amazon.
What day today's?
Oh, I don't know.
I can slide back and forth. It'll be okay. May 8th and May 1st.
Okay. So May 1st is Friday.
So May 8th and May 1st.
So they're short term.
Oh, yeah. No. We're saying May 1st because, and look at this. That's where you've got to put it because that's where the earnings is.
Well, that's Friday. Yeah, that's Friday.
Yeah, but that's where you've got to put it because that's where the earnings is. Do you see that though, Jenny? So it's this Friday, but that's the earnings cycle, this May 1st.
And then May 8th is next Friday. So this week, next week.
Yeah.
So and the 300 calls, did you see there was a batch of 300 calls?
56,000 of them.
That's kind of nuts.
Well, if that's the case, then our little diagonal...
You better take that 360 call off at the 280 level.
the 280 level. If that's the case, then our diagonal will make full profit.
All right, I'm going back to my Amazon position right now. Yeah, my 282 call, which is $20 higher. Is that what we have, the short call?
We have 280.
The 280 for $3. Amazon.
Yeah. Let's see where Amazon's been.
I mean, Amazon is at 262, top of its range, all-time high. Like, we hit an all-time high today in Amazon.
Yep. Crazy, right?
So whoever's buying those 300 calls, whoa.
Yeah. There's a lot of Amazon call buyers, which is crazy.
I know. Does it make you want to do something else? Does it make you want to change your position?
I just bought some 300 calls while I was talking to you.
Let me see. What am I going to do? Last minute. Sometimes this activity does make us do
crazy things.
It does. You know what I'm going to do? I'm just going to do but I already have my diagonal on.
I already have a diagonal on. I don't need any more than that. You know what? I made my bet on Amazon just because somebody else has 56,300. If it goes to 300 tomorrow. Well, actually, it's funny because let's talk through this. So we don't know. We don't know what's on. We don't know what they had on with it. But let's talk about this. If somebody bought, which I'm assuming they're buying because maybe they sold it.
And how far out in time were the 300 calls?
Well, let's take a look.
Like how much time are they giving themselves with the 300?
May 1st, 300 calls. So May 1st, 300 calls. This is the exact option. So May 1st, 300 calls. But let's hypothetically say Amazon goes up to 280. These will be worth a lot more than 72 cents tomorrow. It doesn't necessarily mean it's not a self-fulfilling prophecy that's going to 300 per se. But if you say it goes up to 85, say it goes up to even 82 and a half or where we're at, these are going to be worth a lot more than 72 cents right now for 2 days.
Yeah.
For 2 full days.
Maybe I take off my, what time is it? 2:58.
Yeah, you don't have time to change it. You're going to take off your diagonal?
And change it to just a long, like a zebra.
But just pull, if you're doing that, just pull your call real quick.
The call's only $3.
Yeah, do you need the
But there's too much give up in the 5-day. You know what I mean?
Yeah.
But I guess it's just as much give up in the 2-day. I guess it doesn't matter.
It doesn't matter. We've made our bed. We've made our bed in Amazon because it is $2.59. Let's go back to, oh my God, hold on. I can't type in a symbol. You know when that happens? It was covered. Okay, let's go back to triple Qs, and we're going to show how these 0Ds, we're about to close right now. Look at this. There's still so much in them. You look at these, the 261s. Spoons are only down 4. Look at the 261s. They're $2. Look at the 262s. They're $2. That's because it's going to maintain value until 3/15.
Yeah.
These are still tradable, which is like we put the warning label on this because these will still maintain value because this will move on the earnings reports, right? So all these things that are earning today are in the NASDAQ. They're actually all in the S&P too, I believe. So Meta will move it. Microsoft will move it. Ding, 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 ding.
So very exciting. Now the boys will have a great show today because they'll be able to watch these stocks as the earnings come out and see how everything's moving. It'll be a lot of fun for them.
Yeah, it will be a lot of fun for them. So stay tuned for them. We do not want to cut into their time. Everybody, good luck with your earnings trades. You too, Jenny. I can't wait to see how they come out. And some of them come out at 3:15. They have sometimes there's a little bit of a time lag.
All right, everyone. Good luck with your earnings trades. Have a great night and stay tuned for overtime.
See you tomorrow.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Okay, cowboy, here's an earnings event. Keep an eye out for them when you open your trade. They're fast, they're loose, and they can take you for a wild ride. But that's no reason to steer clear, because you can be your own personal earnings event if you take the bull by the horns. What makes earnings events so special? Before the event, people will start guessing how the stock will move once the earnings report is released. That, in turn, makes the options IV rank higher. Like way, way higher. The nearer the event, the more the speculation, the higher the IV rank. Then right after the event, IVR goes the way of the buffalo. If you sell high premium options right before the event, when IVR is really high, you can take advantage of inflated prices and lock your profits when volatility disappears. Only if, and this is a big if, the stock doesn't move against you. If it does, well, sometimes you eat the bear and sometimes the bear eats you. Earnings events can hit you hard. They can also pay off big and fast if you play your cards right. Pretty simple.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
I got a good, good feeling. I got a good, good feeling. I got a good, good feeling. I got a good, good feeling.
What a day it is in these markets. I know my neck hurts from all this whiplash. I'm Ilya Spivak. That's Nick Batista, our special guest for this wild afternoon. Maybe we'll see Chris again tomorrow. Who knows? Nick, wow.
You said it right.
I mean, just wow. Just wow. You'd think this would be a day where I would get to climb my macro pedestal and start to pick apart everything the Fed said and how Jay Powell has jokes. all of that. But wait, we have to talk about these earnings first because this is bonkers.
Yeah.
Where do you want to start?
I mean, we could go down the list. Let's start with, you got Amazon up there. We could start there. Basically unchanged. A lot of these, the volatility has just been through the roof on a lot of these earnings. Microsoft, Meta, specifically those two, the highest volatility of the group. But it looks like, and even in the NASDAQ and the E-minis right now, we haven't really moved all that much. It looks like it's kind of just an inside day for all of these. Kind of crazy. Not what I think everybody was expecting, given just the moves that we've had in the last week or so, where it's just been an absolute face ripper. This is a pretty interesting move. Dare I say it's actually somewhat bullish. I was kind of afraid that we would just zoom higher on all these and that would be toppy, but to see them all kind of flat, it's pretty interesting.
It is pretty interesting. So to give us a sense, of course, this has been the huge rally. Just looking at Amazon just as a case in point, right? This looks very much like the NASDAQ or the S&P's, kind of name an index, right? From the lows on March, where you get essentially the beginnings of the ceasefire talk and the war seemingly unclenching, at least for the stock market, because, of course, it hasn't unclenched for anything else. But you can see it's kind of this, right? So this is the end of March, and then the indexes kind of improve from there. And of course, they've all, at this point, taken out their highs before the war, never mind the war itself. The war is somewhere here. So they erase the sell-off, and they keep going. So a lot of these look that way, but to your point, they're not really doing anything particularly convincing after hours. So here's Amazon. It's getting a little bit hairier, I guess, here, but not by much. The results were pretty good. $2.78 on EPS. That's better than the 164 expected. Beat on revenue by 2%. Not the greatest beat in terms of magnitude, I guess. 181.5 billion versus 177 expected. Meta has, again, a big beat on earnings, 53% beat on earnings, $6.82 expected, 10.4 is the number that I'm seeing here. Revenue was expected at 55.5 billion, came in at 56.3. So a very narrow beat on revenue there, 1%. And you can see Meta is getting much more convincing move, if we want to call it that. It's getting shellacked here. Microsoft, very close to on the nose numbers. They beat because apparently that's what we always have to do here. So there's a little bit of a pop, I guess, and we've faded that already. $4.27 on EPS versus 4.06 expected. Revenue 82.9 billion versus 81.4 expected. So 5% beat on EPS, 2% beat on revenue. Again, not the craziest. Probably the biggest beat on EPS, though, is Google. And here is the Google chart. This is the one of the bunch that's actually going the right way. So, right, Meta down, Google up. the other two meandering. $5.1 dollars on EPS for Google versus 2.6 expected. So almost double.
Unbelievable.
And 94% beat. I mean, crazy. And revenue, though, only beat by 3%. 107 billion expected, 109.9, almost 110 billion is what we end up getting. So, and while we're at it, I guess, Qualcomm also came out while we're sort of on the subject here. And Qualcomm, here's that. Not great. Narrow beat on revenue, but my God, by a hair. 10.59 billion expected, 10.599 billion is what they actually come up with. So, I mean, we're talking rounding errors here. Call that in line. EPS $2.65 versus $2.56 expected, so a 4% beat, narrow.
Incredible. I mean,
hodgepodge.
All of these, the volatility was through the roof. And just to go through them, like Qualcomm, your expected move was about $12. It's about $6 right now. Meta, probably the weakest of the group here into this move, had about a $50 expected move. You're right around there, a little bit inside. I mean, Amazon into the 2-day expiration, about a 20-point expected move. It's in by, it's down by $5. Even Google, which is outperforming to the upside here, about a $20 expected move here. It's up 12. That's well inside the expected move. Microsoft, same story. Microsoft had the most vol of the group. It had, a $27 expected move. It's down 15.
Look how it's fading now.
It's still, it seems like a lot of these were priced to perfection, as they would say.
Yeah. I think you're spot on. I think, and this is really where my thinking has been around whether these earnings were going to matter. Is with markets where they are, which part of this is not priced in? Is it the part where the great and glorious data center future is going to get built until the end of time? Probably not that part. That part is probably pretty well there. And so then the question becomes, all right, so which part isn't priced in? The other part. The part where this thing starts to feel like it's getting creaky a little bit. OpenAI missed a bunch of internal metrics. We've got at least 10 states considering bans on or moratoriums on data center construction. We see, even just in AI's move to kill Sora and like the explanation why. Like, we killed this because we need the compute in a different part of the business, which we think makes more money. Like, okay, so you're running out of compute. So we're building all these data centers apparently, but there's not enough. And so you get to a kind of thinking, this was maybe the smartest thing I heard about this whole thing in a long time. It was a great interview with the almighty Paul Tudor Jones. And he said something that in his kind of folksy way is insightful like no other could do it. He said, look, you remember what happened in 2000? All these companies were going to make all this money, and then they all IPO'd at crazy valuations, and then everybody that worked there that had equity said, oh, cool, I'm rich, and sold because they wanted to monetize those gains. What do you think is going to happen now as all of these AI companies go public? Well, a bunch of insiders there that have a bunch of shares and are going to go, hey, I'm rich. And they're going to sell. And there's going to be a lot of stock to sell because of how aggressive this move has been. And with the concentration, what do you think that does? It's like, well, yeah, It's not because anybody's wrong. It's because everybody's right. And everybody wants to get rich.
Yeah, I mean, a lot of these names that were at highs, it felt like, you had a lot baked into these earnings, especially like a Google. Nvidia is kind of in that bucket after the rally here. I think it's interesting to kind of put another spin on it and look at just some of the, you talked about like some of the data center stuff, and Seagate is one that obviously sticks out in everybody's mind right now because it's STX, Micron, Western Digital, all these stocks have been just going bananas to the upside.
Because there's a shocking amount of demand for all this stuff, and they can't keep up. Yeah, I mean the prices for all this stuff are through the roof.
And obviously,
memory, GPUs, CPUs, all of it.
For sure. And it's obviously a little bit of a hindsight look just looking at the moves now in the mega caps. But maybe it's kind of a story of, you know what, the mega caps have got to their spot, and now there's a little bit of a spread out to the rest of kind of the next wave of this move, which has been these chip stocks, your Intels that has gone absolutely bonkers to the upside. Your
people thought Intel was dead.
Yeah.
The government had to buy it.
Your energy stocks, your memory stocks, your chip stocks, like maybe that's where the next, value is coming from, and not your Google. Like Google blowing out numbers. I saw Frankie in the chat posting, Google's got something like 150 billion in cash. That's great, but how much bigger is Google getting compared to when you look at a Intel and you say, okay, well, can Intel be, $500 billion? Probably easier than a double in Google from here, right? Or a Micron.
Probably.
Like, can Micron go to $1 trillion company before Google becomes 10 trillion? Maybe. Does STX go to 250 before, Amazon goes to 6 trillion? Probably. I mean, I think that's kind of what you're looking at here. It feels almost bullish to me that these stocks didn't go anywhere on this move. Because I think everybody was pricing the upside tail, specifically in the mega caps, and that's somewhat bullish. That you get kind of a dull. Nobody wins. The tail, convexity trader and the crash, boomer. Nobody wins on that. And
Nobody wins.
And that's sort of bullish because it consolidates here.
I mean, maybe. I mean, I think there is a good argument to make here to say, look, if you're going to be bullish, what you're going to be bullish about is going to start to evolve in much sort of the terms that you're talking about.
Yep.
It's going to have to start to evolve into not a market necessarily driven by the Mag 7, but a market where the story doesn't change, it evolves. And it moves to different leadership. That essentially we're in a different phase. It's, of course, going to meet with a counter from somebody like me who looks at the macro and goes, well, the biggest problem here is that to affect this transition, you have two big hurdles. And I'm not saying that I'm right. I genuinely have no idea because the market has been able to shrug off a lot here. And to make the point clear, I mean, again, stocks are not just through their wartime sell-off. They're through the sell-off that began when they topped in late October last year, when Powell chastised markets for over-extrapolating rate cuts. That was this back here, this top here. And it held this top going into this year until the war. The war is about here. This is the breakdown. And so you break down the war, you come back from the war. We have now exceeded the Fed doesn't want to cut. We've exceeded the war, but this is by itself. You're not seeing this, for example, in the bonds. You're not seeing it rates
bonds closed at the lows today or near the,
look at this.
You're right there.
This is nuts.
It's unbelievable. I mean, The crazy part is the macro story is playing out exactly what you're saying. You have bonds are getting killed. You have rates going higher. The projection of rate cuts, at least
gone.
for what I'm seeing through the end of the year, is completely gone. You have the move.
Goodbye.
It's done. Yeah.
Zero.
But you have all the dissenters and all the, question of, is this really
gold is down, dollar is up.
Gold down, dollar up. Oil, the move in oil, it seems to doesn't not matter. Does it matter?
And this is the amazing thing. You've hit the nail right on the head. This is the amazing thing, right? When this war trade broke out, everybody looked at oil and said, oh, okay, got it. Inflation expectations. Takes about a month for a big oil move to end up in CPI. Got it. Cool. Understood. CPI goes up. This is inflation expectations. Break-even rates in bond markets, which is their implied inflation expectations, immediately jumped with oil. Okay, cool. What does that mean? That means higher rates. That means a stronger dollar. That means weaker gold. That means weaker stocks. Mm-hmm. All of it happened in perfect sync. But then on the way back, stocks are by themselves and saying this thing is over. And the turn happens really as you start to get into this earnings season. So the question becomes, well, are stocks on an island because everybody is hoping that AI will bail out equities and everything else can go dance its macro tune by itself? In the case of oil isn't just still up since the start of the war. It is the highest it's ever been since the start of the war. We jumped to a higher level now than when the war shock occurred. Mm-hmm. So this isn't getting better, it's getting worse. And so the thing in my mind is, well, which market is wrong? And I think you're absolutely right that it's possible that that the stock market goes, you know what? I don't care. I've got this other thing going on. It's a non-cyclical thing. We're building the AI future. That's not going to stop because the near-term cycle is crazy. And that's a completely valid argument. Whereas I look at this and go, yeah, but the problem with that is the cost of money. And what all of what's happening on the macro side is doing is it's driving up the cost of money. And you need cheaper money for all of this stuff.
I'm a little surprised, volatility, and I would have expected after the Super Bowl that we just had in the last 15 minutes of cash flowing bonanza, you would expect to see some volatility come in. It really hasn't. I think that's another feather you can put in your cap. I'm interested to see tomorrow and into the weekend because, the move in oil is kind of projecting that, hey, things are maybe about to pop off here. You've gotten through the earnings. The reactions are muted, I would call it, or inconclusive from these big names. I think for the most part, everybody was YOLOing upside here, which is a natural, suppressant to price here, especially with tomorrow being expiration. If you're buying, 300 strike calls like Liz and Jenny were looking at, like some huge order, Amazon 300 strike calls. If you bought those calls, they open at 20 cents from $2 and you're trying to get whatever money you can get out of there. You're selling calls. That's a bearish event in from a delta hedging perspective. It'll be interesting tomorrow to see what transpires with oil prices and with these Mag 7 stocks and with the ones that have been flying around. Like maybe there's a little bit of a cooling in the memory names and the semis. It seems like the volatility being bid is telling you, you know what? Maybe we've hit a little spot here.
Yeah. And I mean, we're through really the big names. I mean, Tesla is behind us. I don't think we get another report from NVIDIA until May. So we're looking here, I think, at basically the meat of the kind of the kind of earnings that's an event risk at a macro level, not just the kind of thing that's kind of company specific, but big picture event risk. It's kind of out of this earnings season now. It seems like we don't really have that much left on the board. I mean, Apple, of course, tomorrow. That's the last one. We'll see what that does. Other than that, we're kind of out of $1 trillion market caps.
It's just incredible. The vol crush that's going to occur tomorrow in some of these Mag 7s is going to be one for the books. I mean, Microsoft, I was talking about it today. Ivy rank was over 100, 111% implied volatility going into earnings. Even the 50% volatility that you're seeing in May on a $7 move, they're going to just kill premium tomorrow. And it's the same thing in Amazon. I mean, Amazon was looking the same way. They're going to murder premium tomorrow. It's going to be really interesting to see what happens with a lot of these positions. Just incredible. Who would have thought that? Who had that in the books?
Nobody. Nobody. Chris and I were arguing yesterday. He was arguing the Fed's not going to matter. The earnings will. And I was arguing that they both matter, but not for the substance. They matter for the sentiment. And if the sentiment, and we'll wrap on this, this is sort of where my head goes. If the earnings come back and the markets go, well, what have you done for me lately? Which seems to be kind of what we're looking at. And the Fed goes full hawk to the extent that, they're likely to go full hawk. They're not going to raise rates out of the blue. But rate hike probabilities are now up. It is now likelier that the Fed holds steady or hikes, then cuts through October of next year. So when we're looking at all of this together, that to me says sentiment is going to go, oh man, we're no more certain and there's no cheap money.
For the time being, I think it's an AI story. You can't fight it. I'm interested to see what tomorrow holds. We'll see if oil stays up here overnight. It seems to be telling us that there's more stuff to hit the fan here.
Well, we're going to talk about stuff that hits the fan coming right up here on Macro Money. I've got a whole bucket of stuff to hit the fan as we go through what the Fed just did and what Chair Powell just said in his last press conference as chair. So don't go anywhere. Overtime is out of time. We'll be back tomorrow. But again, stick around. We didn't even get to the Fed, but boy, will I in just a second.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform, so I love that.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Sun is up, it's a perfect day. Hitch a ride on an ocean wave. Take my hand now, show you the way. Woo! Saw you talking to somebody, telling them it'll be okay. Got the sand and we're running away. 'Cause you know we're getting lazy now. We gotta show you how. We'll do it even if it's not allowed. We gotta show you how. Sweet and sour, you pucker up. Give me kisses, wish me good luck. Diving in now, bobbing for fun. Golden hour, hop in the truck. Getting late, yeah, we scramble up. But we never give up. And you know we're getting crazy now. We gotta show you how. We'll do it even if it's not allowed. We gotta show you how. Yeah. Cause you know we're getting lazy now. We gotta show you how. We'll do it even if it's not allowed. We gotta show you how. Cause you know we're getting lazy now. We gotta show you how. We'll do it even if it's not allowed. We gotta show you how. Ooh. Yeah, you know we're getting lazy now. Yeah, you know we're getting lazy now. Yeah, you know we're getting lazy now. Yeah, you know we're getting lazy now.
Yeah, enough fun on the block all day, all night. Isn't there no stress, no fight? Fun on the block all day, all night. We just living it up, yo, that's real life. Wake up, sun grinning through my window. Text my crew like, what's the plan? Let's go. Shirts, wrinkled jokes, twisted, nothing too official. The outside flexing on my bike, out the bell with the whistle. Corner store, pick up chips, 2 shoulders. My board in the slides, trying to dunk on the stroller. Kids running loose, auntie sipping lemonade. Every front porch got a beat, yeah, that it's homemade, no drama. To see waves of laughter. If we got problems, could we solve them after? Grilling on the curb, grill marks on the shirt. Somebody brought the tools, man, let that Luke word. Fun on the block all day, all night. After with my people, yeah, we feeling alright. Fun on the block all day, all night. Good vibes only, yeah, that's real life. Fun on the block all day, all night.
Are you not entertained? That's what we are asking here after what has been a blistering day in the markets. We had the Fed, we had big tech earnings, fireworks all around. Big tech earnings, just to give us a sense here quickly, don't seem to have moved around the markets very much. Google did well, Meta did worse. The other big names seem to have kind of idled at the index level. We haven't really gone very far. But the Fed has made some waves, and we're going to figure out what all of that amounts to here. This is, of course, Macro Money. I'm Ilya Spivak, head of Global Macro here at tastylive. And what we're going to do here, as usual, is we're going to look at the price action. Some of it, of course, is going to precede those tech earnings, but worry not. It is representative of where the markets find themselves all the same. And then take a look at what the Fed has wrought here, because what this looks like is perhaps the kind of stage setting that starts to really matter as we move forward. So let's begin our conversation there. We are going to take a look at how the major assets reacted to that Fed meeting, holding in mind the idea that what the tech earnings did here hasn't really amounted, at least in the after hours for now, to a big move in the benchmark indexes. So where we see things here is just about where they are. Here is the first glance here. S&P 500 starts us off. And what we find here first and foremost is a story of a market that, as we've been looking at it over the past several days, is kind of on an island where we can see from those lows in early April, we get a blistering rally that not only erases the sell-off that started with the outbreak of the U.S.-Iran war, that's about here, but also punches to new highs. And punches to new highs exceeding the levels from late October last year that had been capping this market. And that was, of course, linked to the October 29th FOMC, where what the Fed did was essentially say, we are going to be in a situation here where the moves are going to become less dramatic, and all of you market participants that think that we are going straight to rate cuts and we're on autopilot that way, you all got another thing coming. And so that was a major, major top. And we've not just recovered from the war, we've taken out that top as well. And so what that means, of course, is that the markets have implicitly signaled, we're done with the war, we're done worrying about the Fed, we're just going to keep going. And what's interesting about this is, of course, this clashes, as we'll see momentarily, with what is going on in virtually every other market. It also seems to be occurring with relatively weak underpinnings. And what we've pointed out here is, first, on this RSI indicator, the relative strength index, the oscillator I like because you can basically draw it in with a crayon, and the arithmetic behind it is somewhere around the third grade level. So very, very simple stuff. Just the ratio of the past rolling average of closes higher to closes lower. So what this means is, as prices are saying higher highs, what this inability to keep building parallel in RSI means is that as the price sets higher highs, it is nevertheless losing the capacity, momentum-wise, to close higher relative to lower. And so we're seeing a loss of momentum. And we can just anecdotally see that here on the chart. Because what we immediately then see is a blistering rally and then a kind of meandering thereafter. So we can see that even just over the past several days, the slope of the move has become less aggressive. And maybe the most critical bit of all, we tried to break higher and we appear to have lost that momentum and already failed in the breakout. Now, we're holding these levels, so it's important not to overstate. If we zoom in here, we can see there is still a holding narrowly of former kind of congestion resistance as support. And perhaps that makes sense. We still have Apple reporting tomorrow, so maybe we're not out of the woods on the mega cap tech earnings, and the market is not prepared to make up its mind until then. That's certainly a feasible reading of this. But not only do we have this divergence, as we just discussed, the higher highs in the price are being not so much negated as questioned. It's possible, by the way, that you get these losses of momentum and then the market just drifts sideways and then breaks higher in the direction of the trend. Certainly nothing says that it has to be a reversal, but often enough, the loss of momentum does precede a turn. The other important thing to check the narrative here is the entire way higher here from these bounces, volume has been decreasing, and there's a real cliff edge here at the point where you retrace the break of this range, and this is where you really start to rebuild, erase the war, and go higher. So the market ostensibly looks at these lows and goes, well, if there's a ceasefire, which is what happens right around here, then being down here doesn't make as much sense as it did before there was a ceasefire. And so the market corrects back to retest the underside of the range it broke that was dating back to the tail end of last year. But then once you get the subsequent, okay, let's forget all about what's going on in geopolitics, the volumes drop off considerably and they stay down. Monday was the weakest level for volume, Monday where we had this last meaningful bullish push here. That was the biggest, those were record highs, but the volumes were the lowest since the Easter Monday low, when most global markets except the US were closed. So the conviction behind this move, even just looking at the charts, forget the story, seems to be ebbing. Now, we said stocks were on an island, and boy, are they. Crude oil is now north of the kind of 100, 101 mark for WTI, which is kind of the middle of the wartime range here. We punched through that with a vengeance today. And we're back on approach of $107 a barrel. What is the most interesting about this is it follows news that the United Arab Emirates, UAE, has left the OPEC cartel where it has been for decades. And so, I mean, we're talking 50 years on of OPEC membership. And what we're seeing there is interesting because the reason that the UAE is quitting is because it has felt itself constrained by OPEC output quotas, which are mainly driven by Saudi Arabia, the largest producer. The UAE is not the largest, it's about the third largest, give or take, after Saudi and Iraq. And so what we're looking at then is really something that ought to have driven oil lower on a normal day. A major producer says, I don't want to be constrained by output quotas, I want to produce more. One would think that would put downward pressure on oil. But no. Instead, the market looks at it and goes, the Strait of Hormuz is closed. What does it matter that they want to produce more? In the immediate term, what this means is there are fissures within the Gulf Arab countries' unity, OPEC being a kind of core around which Saudi leadership of the major oil producers in the Gulf on the non-Iran side of the equation, that's really where they coalesce. And we can see that the friction that we've been seeing over recent months between Saudi and UAE has really come to a head here. And while some in the Gulf have taken a more conciliatory and a more neutral approach in the current conflict, the UAE seems to want to more clearly move itself into the camp that's closer aligned with the U.S. and more adversarial, given its posture toward Iran. And of course, Iran is an OPEC country also. And so it seems like the UAE is kind of pointedly marking a break. And what the market seems to be interpreting by rallying up oil in this environment is, yeah, okay, we know they want to pump more, but really what this means is more regional fragmentation, more regional discord, and perhaps the capacity for this war to broaden out to other players that maybe wouldn't necessarily follow Saudi in the lead that they've set, which is to kind of stand aside and try to be as hands-off as possible for now. We see, of course, in the bonds, there has been a drastic move higher in rates. And that is, of course, showing us that not only is the war trade not dead in most of the markets, it's, again, actually moving the other way. Crude oil, we can see here, blistering highs. And not surprisingly, against that backdrop, yields also higher. The Fed, of course, had a lot to do with this, and we'll get to that momentarily. Gold pushing lower, higher yields will do that. It's a non-yielding asset, and we're re-engaging with the war dynamic here as well. The US dollar higher. Again, unlike stocks, it didn't even come close to retracing all of the war move. Higher rates, of course, mean a stronger dollar usually, and it certainly did in this instance. It pulled back only about halfway and is now trying to reassert itself on the upside. Bitcoin held up impressively for now, considering it also doesn't yield anything and is also a kind of anti-dollar type of asset. And it seems to be holding up for now. The breakout higher here that we've been engaged with, that continues. So an interesting situation, to say the least. And what we're looking at then is what really shapes this story going forward. And of course, the big thing from today, besides these tech earnings, of course, which again don't seem to be moving the indexes very significantly for now, is the Fed. Take a look at the policy statement and you don't see a whole lot of change. We see recent indicators suggest that economic activity has been expanding at a solid pace. Job gains have remained low on average. Inflation is elevated, in part reflecting the recent increase in global energy prices. We see a familiar type of aside here. Developments in the Middle East are contributing to a high level of uncertainty. Interestingly, the meat in the statement here seems to occur toward the bottom of the page, where we start to get our dissents. Now, not surprisingly, we get all of these policy makers but one voting for the no change. The dove of doves, Governor Stephen Miran, voted for a cut, so that's one dissent there. And 3 policymakers, for a total of 4 dissents, 3 policymakers agreed to keep rates steady, but wanted the language to be more balanced. They wanted to change the conversation to move away from a dovish bias or an easing bias to something more balanced that opens the door for hikes, or at least opens the door for the possibility of hikes. Speaking at the press conference after the meeting, Fed Chair Powell echoed this, and these are some of his key remarks. Of course, one of the big stories is this was his last press conference as chair. His term ends, but he's opted not to leave the board. He's going to remain as governor. That continues well into 2028. That's when his term for that expires. So he's going to stay on for now. Ostensibly, that means that there's not going to be another vacancy on the board with which to have the administration have the space to nominate somebody else. And what he's been talking about is kind of pushing back on the DOJ investigation. The DOJ has said that the investigation has been tabled but could be reopened. And what Powell is saying is, well, if it could be reopened, then the matter is not resolved. And I said I wouldn't leave until the matter is fully resolved because I'm trying to protect Fed independence. And because these cases are pointed at me, I can be a bulwark there. And so till it's resolved, he's staying. But now that the thing has been tabled, Senator Tom Tillis is going to allow the Kevin Warsh nomination to move forward. That moved out of committee this morning, as a matter of fact. Now Congress is going to vote on it, and it looks like we're going to get a chair Warsh perhaps come June. So that soap opera aside, what did Powell actually say on policy? Well, here's the basic framework. Inflation expectations have risen. Slowing job gains mainly reflect labor force growth. That is to say, there's been a crackdown on immigration, and the baby boomer generation is retiring now in very large numbers, and they are the largest demographic cohort within the labor force, and their labor force participation is now somewhere on the order of 20-ish%, whereas all the other cohorts, labor force participation is somewhere in the 80s and 90s. And so when you take the largest cohort and you say, well, they're mostly not participating in the labor force because they've aged out, you're going to have this kind of weird job market, which is kind of in balance, but not a comfortable balance, as Powell explained, because people aren't really getting fired. People aren't really getting hired because people aren't really getting fired. And people aren't really getting fired is because of this shortage that's been created demographically and this difference in labor force participation. And so you've got this situation now where the job market feels uncomfortable for new entrants because they essentially need for space to be made, and there's not that space. But at the same time, those people that have space in the job market aren't feeling like there is some sort of business cycle pressure on them en masse. Obviously, we're talking in very broad kind of national strokes. Depending on what you look at, it's a different story. But the Fed sets policy in aggregate, and that's sort of what Powell is saying is, look, the job market while it's a little bit soft, it's not soft for reasons that we can really do anything about with rates, because it's not like there's a recession and what that's doing now is creating a need for us to make credit cheaper so that companies can go out and hire. That's not what we're seeing. We're seeing a situation where there are big demographic differences that are occurring. There are big kind of structural shifts that are occurring. There's a big policy shift on immigration, obviously. And so those are not things that you can really move with rates. Meanwhile, consumer spending has been resilient. So the business cycle is still exerting some upward pressure on inflation. And so the sum total is the Fed has to focus there now. He says that, I don't know if the easing bias will be in the statement at the next meeting. It was a much closer call in April than it was in March. There was a vigorous debate about the guidance. Nobody's looking to hike at this point, but people are increasingly being pulled to neutral, and that this reflects markets. If we recall, the Fed called for cuts this year and next, one cut this year, one cut next, and then stasis when they spoke in March. And the idea there was that goods inflation driven up by the tariffs would fade over time, and that the trend in services inflation was on a downward trajectory. Well, we can see in the latest CPI data, the timing isn't working out the way the Fed perhaps envisioned, because we see since the beginning of the year, goods inflation is perking back up. Services inflation has picked up to the highest levels since the middle of last year, which of course is where things peaked after this bout of disinflation that ultimately motivated the Fed to cut rates 3 times in the fourth quarter last year. Even housing inflation has started to creep up. And all of these things are core readings. They exclude energy, they exclude food. So they exclude the current oil shock. What doesn't exclude the current oil shock is headline CPI, where it looks like there's about a month-long lag between what happens in oil markets and what appears in the data. And it looks like here we've only just priced in the January and February blip in oil and not the surge. And Powell said as much. So there's still a whole lot of inflation that's going to appear here starting next month to reflect this surge. And the bond market is reflecting as such. We can see here that in the bond market, the break-even inflation rates, the implied inflation expectations that you get by taking the difference between nominal and real yields, TIPS yields, it's been marching higher. The 10-year, the 5-year, they're up sharply with crude oil prices. And the 10-year is now back to where it was middle of last year. In other words, we can see how the markets are erasing that disinflation story that we just saw in the CPI data. Here. We can see how the markets are tracking it, and we can see how now that's gone. Now, going into this, what we saw is that from the outbreak of the war, we can see here was the pathway 3 months ago, right? So do the math. This is 3 months back. So it is January that we're looking at here. This is before the war. This is 1 month ago. So the war has just broken out and is starting to go on. This is mid to late March. And of course, since then, we've had a ceasefire. We've had all these attempts at putting the brakes on this thing. So we've somewhat come in terms of where things are moving. But somewhat seems to be the key, because overall, we are much more hawkish than we were before the war has started. And after today's explanations from Fed Chair Powell, we can see there has been a meaningful rejiggering of expectation. First of all, the likelihood that rates don't go anywhere this year has increased and is now at 84%. But much more interestingly, the possibility that we go to a hike, which is this red line here, that's jumped to 13.4%, whereas the probability of even one cut is less than 2%, and 2 cuts is just 0. It's not on the menu. If we look out this year and next, we can see stasis basically until October is a given. From October onward until you get basically a year forward, almost, up to September 2027, there is a higher probability that the Fed hikes rates than cuts them. We can see that here. It's very clear. These are big double-digit numbers. These are not. Once you get to September, it becomes about 50-50, but in September, it is still likelier, narrowly, that the Fed hikes versus cuts. So call this 50, call this 20, call this 30. So 50 plus 30, 80, 50 plus 20, 70. So it's close to balance, but likelier that we get hikes than cuts. Come October, the balance shifts, and now we're looking more likely to see cuts than hikes. And it's not just the Fed. It's also other central banks. We can see the Fed is now stuck at standstill for this year, but the hawkish implications for other central banks are only getting more built out. And of course, we're going to get policy announcements from the ECB and the Bank of England later tonight. Here's the Eurozone. We've got a situation here where the hawkish shift has been so acute that we are looking for hikes now, having expected standstill. And we can see in all, the ECB is now on the menu for at least one, likelier 2 hikes for the year. In fact, the pricing is even a little bit north of that. We can see we're just in line here, but if we look at the futures, we've got 70 basis points on the menu for the ECB, 54 basis points for the BOE. And again, there's been a little bit of moderation recently, and we've come down a bit since these ceasefires, but still, here's 50 basis points. We're at about 2 now. That's 1 hike by July, 2 hikes by October. Same thing for the Bank of England. We're at 375 now. We're back to 4 by July. We're to 4.25 by October. And so the sort of hawkish implications here are spreading across markets. And what that seems to be implying is that just as these tech earnings are coming out and telling us, at least so far, not a whole lot that's new, not anything that's terrible necessarily, but not a whole lot that the markets don't already know, while the cheap money spigot is getting choked off in rapid succession. And the question starts to be, well, can the markets hold up without the promise of cheaper money as they juggle all the many risks, geopolitics, private credit, inflation, that they're juggling? At the same time that stocks seem to be at record highs with nevertheless fading underlying conviction, because maybe the data center build out to infinity narrative is still with us. So as far as exposure is concerned, I am still short gold, long the dollar. That's obviously working today. Long Bitcoin, which has held up pretty well so far. Still short risk, expecting all of this to eventually find that stocks are the ones that are offsides here, whereas all the other markets are onto something. So I'm short calls, short a call vertical in IWN, that's the Russell. Long put verticals in the NASDAQ, that's the Qs, and S&P, that's SPY, still own a bunch of puts, put verticals here with plenty of duration at the long end of the curve, expecting the bonds to continue to march higher or yields to continue to march higher, bonds lower, with today's move just the resumption or the most violent part of a resumption of a trend that continues. And that is Macro Money for today. As ever, we are here right after overtime. That's a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm likewise writing for the News and Insights portion of tastylive.com, commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching on YouTube, please like and subscribe. Macro Money returns tomorrow. Happy trading.